news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Everyone sees a house, I see decisions. Why this location? Why this timing? Why this buyer? Some properties make headlines, others quietly change lives forever. I break down every detail, purpose, profitability, potential. I travel where ambition lives, meeting the people who turned a purchase into their great.
You're watching live from the NDTV Profit headquarters in Mumbai. This is India Market Open.
Good morning and welcome to India Market Open with me, Neeraj Shah, and my colleague Alex Matthew. And it is an interesting time simply because, Alex, I would suspect that while the world's eyes are fixed on the Xi-Trump meeting back home, there are a lot of developments. If there was some measures or some appeals to Indians to take steps to try and protect the forex spends. Now the government is taking hard measures as well to do the same.
Yeah.
There is inflation data, a clutch of numbers, and a tailspin which refuses to die down.
Yeah, absolutely. Actually, we were contemplating this. Remember when the Prime Minister made that appeal, the question that we were asking the next day morning was, is this the precursor to measures being taken? Because ultimately a lot of people agreed even on that day that measures were required. And in fact, if anything, I wouldn't be surprised if this is the first of many steps that will likely have to be taken to protect the rupee, because you've seen it slide quite considerably.
Yes, I think that sums it up, frankly. This is the first, and maybe there is more, but in case viewers are wondering what we are referring to, what Alex and me are referring to, effectively, India has hiked the import duties on freedom. I mean, multiple things, but gold, effectively. The darling of everybody's eyes.
Gold and silver.
Yeah, cynosure of everybody's eyes. And that makes your gold purchases and gold imports that much more expensive. But one would reckon that you could have seen it coming.
You could have seen it coming. Let's talk about what happened across the globe, and then we'll dive straight into the perspective for India. The risk-off sentiment pervades. As Brent crude stays elevated, it has in fact climbed even further, and that's because there's no progress on peace talks in West Asia, and that has weighed on sentiment. You have US President Donald Trump that has said that he doesn't need China's help to end the war. There are several statements that he made on that, and he in fact travels to China. You saw, if you were watching the channel, you saw visuals of that. He's heading to China for bilateral talks with Xi Jinping. That takes place at the end of the week, and anything that emerges from that is going to be significant. Of course, the statements that he has made seem to suggest that he's more focused on trade with China than with geopolitics, but the conversation about Iran could well come up. Meanwhile, Iran seems to be firming up its control on the Hormuz Strait, because agency reports have suggested that Iraq and Pakistan have cut deals with Iran to transfer both oil as well as LNG from the Gulf. Both of those nations are highly dependent on that passage, and those deals were limited to the passage of some ships, but it's likely that Iran will continue to do these deals on the side to allow for passage of vessels. So that's something to watch out for. Now, in the US CPI has heated up, and that's a sign of concern, in fact, for that economy. Consumer prices saw their largest annual increase in nearly 3 years, and the headline CPI inflation rose as much as 3.8% in April on a year-on-year basis, and that was higher than anticipated. In fact, the forecast had pegged it at 3.7%, as a result of which you had bond yields that have already climbed in the recent past that climbed a further 3 to 4 basis points, and that is across the curve. Inflation is likely heading towards that 4% mark in the month of May, and in fact, it could put pressure on the Fed to act to cool inflation. The target, of course, of the Fed is 2%. Equities also cooled off, with Wall Street seeing cuts, not across the board, but you saw chip stocks dropping. The Philadelphia Semiconductor Index dropped as much as 6%, but in recent weeks it's up as much as 70%. So it could well be profit taking place in that particular block of stocks. The Dow ended flat with a positive bias. The S&P 500 dropped. Actually, these rates seem to be incorrect. They're actually a drop in the S&P 500 by as much as 0.2% and a drop of 0.7% in the Nasdaq. Pull up Asia as well and see what it's doing. In all probability, you're going to see a risk-off sentiment panning out. Japan rather. Japan is up about 0.1%, but Hang Seng and Shanghai losing ground. Kospi, in all probability, also losing ground. Let's bring in William Lee, Chief Economist and Managing Director at Global Economic Advisors. And William, thanks so much for taking the time. I think a lot of people are focused on the bilateral conversation that is set to occur between Donald Trump and Xi Jinping, not just from the perspective geopolitics, but also from the perspective of trade. Tariffs may be something that we've forgotten about, but that specter still looms. What do you think will emerge from these talks?
President Trump has got some deliverables he has to deliver before the midterm elections, which is to say that he has clear relations with China in a way that can restore where we were under his first administration, the phase one deal. China has got to come through with some big purchases, not only of agricultural produce, but also of Boeing aircraft. I think those are the big packages that he has to ensure he delivers. The other portion of the discussion will be on tech. And I think that's the one that most investors are most interested in. They want to know whether the Jensen Huang strategy of opening up U.S. tech to China will be implemented quickly, or whether it will be done slowly and behind the scenes. And I think that is part of the strategic move on the part of President Trump of not bringing Jensen Huang on this trip. I think that's a signal to say that Jensen Huang and the NVIDIA chips and advanced technology remains our major poker chip that we are not putting on the table yet until we get more of these other side deals done. And as far as the Strait of Hormuz is concerned, I think the discussion there is going to be one where it's a game of chicken. Is China more desperate to open the strait because it's so dependent upon Iranian oil or cheap energy, or is the U.S. going to blink? And I think that's the tension that's in the air right now. And I think that will be something that will be revealed over the course of discussion. If the discussions are going well, we'll see progress on a lot of fronts. If discussions are not going well, especially on these major issues that I just mentioned, the agricultural deals and the Boeing purchases, everything else will go down the toilet, I suspect, and I think the markets will sell off.
Got it. William, does the US CPI number in any fashion impact your beliefs of what the interest rate trajectory in the US will be?
You know, I think people make a big deal of price spikes, and that is very different from what the Federal Reserve views as inflation. Inflation is something where it's embedded into the price process of the United States, and that's generally revealed best in the market pricing of forward expectations, the 5-year forwards, and especially the longer term 5-year forwards. These market expectations seem to be well anchored. They've gone up by maybe 1/4 to 1/2 point and seem to have leveled off. So I think the Federal Reserve can take comfort in knowing that inflation expectations remain well anchored, which is their main objective of not allowing these price spikes to feed into the price process. And I think the jury is still out as to whether or not they need to have any rate increases. I tend to doubt it, because the first lesson you learn in any economics class is do not react to supply shocks, allow them to pass through, only react if you find that they're dislodging expectations. And so far, expectations are firmly anchored.
William, just one question. I mean, what India has done this morning is hiked import duty on precious metals, because India is a heavy gold, silver importer. Is this a line of action that you reckon a few economies might take or have to take, depending on their own individual finances, of course, if the conflict were to drag on?
I think India is doing that because it's trying to restore more confidence in the currency itself and to stabilize the exchange rate. The more import of gold there is, the more than usual import of gold there is a sign to the central bank that there's a lack of confidence in the future of monetary policy, the future of the exchange rate. And I think that's what the central bank is trying to stave off.
Got it. All right. William, on that note, thanks so much for taking the time. Pleasure speaking with you.
Thanks for having me.
Okay, you're seeing significant updates at the bottom of the screen with regard to the duties on gold and silver, and we'll bring you Shrimi, who has broken that story with government sources, to tell you what that is about. In fact, we'll get her in just a bit. In the meanwhile, let me tell you what occurred in trade yesterday. And you had a sharp slide on the last street, and that pushed the Nifty 50 below the 23,400 mark. Foreign institutions selling to the extent of 1,959 crore rupees. Domestic institutions net buying equity worth 7,990 crore rupees. Remember, yesterday was the weekly expiry of of derivative contracts as well. And there has been too much of a change in the FII positioning with regard to those derivative contracts. The Nifty 50 dropping as much as 1.8% as selling intensified through the day. You had the VIX that climbed about 3% or little over 3%, and as a result of which it has climbed now above 19. Broader markets have capitulated and dropped more than the benchmark. The benchmark Nifty mid-cap index dropping as much as 2.5%, 3% fall for the small cap index, and the market breadth was adverse. All sectors ending in the red. The Nifty Realty Defense saw cuts of over 4%, and the IT index falling as much as 3.7%. The one pocket of strength, of course, was the upstream companies, which were gainers on account of the reduction in royalty. We've got Shrimi Chaudhary joining us on the phone line now. She's Delhi Bureau Chief, and she's picked up exclusive information, source-based information on the move to increase the customs duty. Shrimi, morning. What are you picking up?
Morning, Alex. So the government has increased import duty on all the precious metals, primarily to protect India's external sector at a time of rising and prolonged geopolitical uncertainty, which is linked to West Asia. And officials at this time are worried that higher crude oil prices and disruption in global shipping routes could sharply increase India import bill and widen the current account deficit and put pressure eventually on inflation and foreign exchange reserves. Sources indicating that India import large quantities of precious metal and they believe that higher duties can help moderate non-essential imports and reduce foreign exchange outflows. In fact, sources indicating that the whole rationale behind increasing the duty is that forex resources should instead be prioritized for essential imports such as crude oil, fertilizer, defense equipment, industrial raw materials, and critical technologies. And in fact, this entire move of increasing the duty, as described from the top government sources, as a preventive and calibrated step, aiming at conserving forex reserves, managing external vulnerabilities, and strengthening macroeconomic stability before the pressure intensifies further. And we've been reporting that the entire rationale of PM appeal as well, how to reduce the consumption, and the major issue for the government at this point of time is current account deficit.
Got it. Okay. Yep, Shrimi, thanks for that. You can argue that almost all measures are aimed towards restoring, as William Lee said, semblance of sanity in the currency, the CAD, and all of that is interlinked. So, that seems to be the order of the day. And frankly, the trade setup is no different from what it has been for the last 2-3 days, which is that any strong buy call, no matter what the confidence might be, it fades away until crude cools off, and crude is anything but cooling off. Sure, you may have metals doing well, so Hindustan Copper, etc. might do well because copper prices have done very well and hit all-time highs. But by and large, as a market-wide buy call, has faded away until crude cools off. The issue is you don't quite see fear on the street as yet. From April 1st till now, the markets and the broader end of the spectrum has behaved as if crude was not at 105. And the macro concerns don't exist. You see the bump up in a lot of stocks, maybe with reason, maybe without reason, but there has been a bump up there on the back of strong inflows into the mid space, and you don't quite see the fear as yet. Could that be the market's undoing? Remains to be seen. Hopefully the conflict cools off and we don't have to see that, those pressure points again. Copper near all-time highs shows strength in selective metals, and you might see that cohort of stock looked strong. Hindustan Copper for sure, maybe some of the others as well. And you're seeing some very strong performance, very rich performance in the quarter from CDMO names, and therefore those stocks may gain further. I mean, look at the kind of performance, and we'll talk about Newland in detail today, but Newland, Laurus, some of the others have delivered in quarter 4, and a commentary that they're giving for FY27 as well. Remember, the weak rupee helps the case for the CDMO exporters, CDMO companies and the exporters in a big way. And these stocks are kind of standing out. Newland is at 17,000. It was 11,000 or thereabouts about a couple of quarters ago. And today, after the blockbuster performance that it has shown, I think you will see that. Look at that rise that has happened in Newland Labs from April on to May. Just a meteoric uptick that we've seen in that. And now that the numbers have delivered, I doubt it'll not be a buy the rumor, sell the news. You would suspect that there'll be more gains here. So that cohort of stocks, Alex, does well. Yes, all buy calls fade, but selectively a lot of individual companies will do really well.
Yeah, that's true. In fact, it might have slipped a little bit under the radar with all of the news flow, but then CPI data for India did come through yesterday. Of course, it is benign. It continues to be that way because remember, you've not seen an increase at the pump for petrol and diesel. The government has absorbed it so far, and so as a result of which in the month of April you had CPI that came in at 3.48%. The food inflation has also been relatively benign. It's crept up just a bit, but it's still at 4.2% versus 3.87% in March. The urban inflation at 3.16% versus 3.11%, and the rural inflation coming in at 3.74% versus 3.63%. BOFA has weighed in on the CPI. It says that there is no pressure that is visible yet. The food prices are higher, services prices are contained, and the pass-through of elevated prices was visible in the March WPI, which is the wholesale price index. The RBI April MPM minutes, or the monetary policy minutes, echoed the cautious tone and continue to expect a cumulative 50 basis point hike starting December. I was actually speaking to Tim Moore of Goldman Sachs, and they too believe that there's going to be a 50 basis point hike. There's no possibility of a further easing, not just in India, but by the way, traders are completely pricing in a price or rate increase in the US as well. No possibility largely of a rate cut by the Fed. Let's talk about individual stocks, and there are so many to talk about, but Neeraj and I will have three each. On my list, I've got Dr. Reddy's Laboratories, and this is going to be a bit of an accident in all probability. Remember, the stock has underperformed in the recent past, but there's more reason for it to take a bit of a battering today. Why? Because the Q4 numbers were weak on account of several reasons, on account of sharp fall in US business and multiple one-offs. You had the margins that saw a big hit. They fell over 16 percentage points. Remember that, percentage points. That's over 1,600 basis points. The sharp fall in margin was on account of the product's mix change, as well as pricing pressure and one-offs. India and emerging markets, and this is a little bit of a silver lining, as well as Europe continues to grow strongly. The pain really is on account of the US business. So revenue is declined as much as 11.5%. The EBITDA is down as much as 60%. I told you about the margin. The PAT number is down as much as 86%, coming at 221 crore rupees compared with 1,600 odd crore rupees. We'll get you what the brokerages are saying also. The generics revenue has fallen as much as 13% to about 6,600 crore rupees, with North America sales plummeting as much as 51%. So it's a significant downtick that you could expect for Dr. Reddy's Laboratories based on the numbers. Jewelry companies, this is a little bit of an obvious one. It is a thumbs down. Remember, however, that earlier in the week they did take a little bit of a battering on account of the PM's appeal itself. So you saw Titan fall quite dramatically on Monday. I believe it fell as much as 6%. And now you have basic customs duty on gold and silver imports that have increased to 10% from 5%. That's a doubling. But you also have the agriculture, infrastructure and development cess on gold and silver that's been raised to 5% from 1%. And that revised duty structure comes into effect from today itself. That duty increase, of course, follows Prime Minister Modi's appeal over the weekend and, in fact, day before yesterday to pause gold purchases for a year. The duty increase is likely to cause a rise in domestic gold and silver prices, and that is aimed at dissuading consumption. Finally, Stuffcraft, and this is another stock that has benefited in a sense, or a company that has benefited from the West Asia crisis, because the worries about the supply of cooking gas has led to a lot of people heading out and buying induction stovetops. Stuffcraft's revenue has actually increased, led by the sale of induction cooktops. So the cooktop sales volumes have risen by as much as 67% in the quarter of ending March, and in value terms it's risen as much as 89%. that cooktop volume growth was, the gas cooktop volume growth was muted at 3.6%, and the induction cooktop accounted for now 22% of revenue in Q4 compared with 12% in Q3. And that has had a bearing on revenue growth, which is up as much as 32%. You've had an improvement in the EBITDA, 34%, and the margins have also seen a bit of an uptick, as much as 10 basis points, and the PAT number is 335% higher. The thing about it, Neeraj, is that this is reflective of what took place in March, remember. So therefore, if that same trend accelerated in the first quarter rather, you will have a situation where the revenue uptick sustains in the first quarter for Stovecraft as well.
Yeah, and that's what you want. I mean, you want companies where there is not just the inventory gain, but some visibility about the next couple of quarters.
It's not a flash in the pan.
Yeah, so interesting. I wonder, Alex, if Newland Labs is more than a flash in the pan, simply because if you had to frankly pick up one stock which is going to be the star performer of trade today, I would suspect it is Newland Labs. With due respect to everything that you've picked up, it's just that I was able to spot what Newland has done, and quite something really. Revenues up 134% at 788 crores versus 335 crores. Remember, by the way, viewers, the previous 12 months or previous 18 months have been a washout for Newland in some sense. So the base is low, but still, this performance. Operating profit margin up 2,310 basis points. Yes, you heard me right. Look at those numbers. The operating profit margin is at 40.5% versus 17.4%. I don't remember the last time I saw a beat of this nature, or a number or a performance of this magnitude in terms of operating profit margin uptick in any company in a long time, really. And profit after tax as a result of which 212 crores versus 27.8 crores. We'll talk about this in greater detail with Vishal Manchanda, who will be joining us in just moments from now. So I won't take too much time here, but keep in mind, Newland Labs will react positively. Cohance will not. Unfortunately, it's a big miss for Cohance Life. Revenue is down 26.3% at 619 versus 840 crores. EBITDA margins down 1140 basis points at 15.9 versus 27.3. And profit after tax down 83% at 19.6 crores versus 120 crores. So in pharma, you have the entire spectrum. Newland, fantastic numbers. Reddy's, bad numbers, but after adjustments, maybe not so bad. I don't know if Alex concurs there. And then Cohance Life, a very big miss and a lot of downgrades. So I think we'll do the whole spectrum with Vishal in just moments from now. And amongst order wins, I know GRSE is a big one because they've said that they will bag a 33,000 crore order sometime this quarter, but Texmaco has bagged it. So I think that's the news, that Texmaco Rail has gotten a 4,045 crore order from Seco Africa Logistics. It's for rolling stock freight wagons. This is truly the India export opportunity coming up alive for a mid-sized company getting a 4,000 crore order. It's a big one and may mean that the stock reacts. So watch out for this one. Okay, now before we get in, and there are a lot of other names, by the way, Gopal Snacks, fabulous numbers, a clutch of others which are in news, but Dixon is the big one as well. So before we get in the pharma conversation, let's get in Puneet to talk about Dixon Tech, because the company reported a mixed quarter, if you will. Uncertainty over the Vivo deal weighs, even though the management has said that they're very close to it. But in the con call, they have said a number of things as well. And Puneet tracks it very closely. He joins in right now to speak about it. Puneet.
Well, thank you for that. Definitely, as you mentioned, the numbers not too great. Just 2% growth in revenues. EBITDA was down 8%, and profit subsequently is down by 36%. But in the base year, you had that fair value gain from the Aditya Infusion stake as well. So, barring that, it was numbers largely expected with the estimate that we provided yesterday in the show as well. But as you rightly said, there are two key aspects to watch. One is on the volume guidance. The company has guided in FY26, they did roughly around 32 million smartphones. They're guiding for a flat volume growth in FY27, and this is barring the Vivo transaction. So if Vivo doesn't happen and we've already lost 2 months, 3 months of that, you could see just flat volume growth for the first time in the last 5 years that the company will report flat volumes. Now that there's a decent base as well, but they've mentioned that they are expecting a 12 to 15% value growth because of the high memory chip prices. You will see that translation to revenue, but volumes will be flat if Vivo approval doesn't come for this year as well. The other aspect, and this is seldom that we get the managements of the size of Dixon to admit publicly on conference calls that they've missed the bus on industrial EMS space. Now this includes the likes of defense, aerospace, where companies like Sirma, Amber, amongst others, have already forayed into in a meaningful way. And Dixon had, missed the bus, essentially, is what they said on con call. They should have done that 2 years ago, is what the management had said, and we'll play the bite in just a bit. IT hardware, amongst other segments, did well. They've also adding capacity meaningfully in the display modules as well as the camera module space. But largely, there is a disconnect essentially with the smartphone volume growth, and hence Jefferies have actually gone ahead and cut target price yet again. They're maintaining a hold now with 10,280 as the target price, and say that barring Vivo, the volume guidance remains weak, and they've tweaked their EPS CAGR. CLS is the other one which has meaningfully cut the target price from about 12,000 to 10,400 now as well. But let's quickly listen into what we were talking about on the industrial EMS space, as well as what the management, Atul Lal, said on the Vivo joint venture as well. Listen in.
As far as Vivo is concerned, we are deeply engaged with the government. We feel that we are very close to it.
Okay.
And that's where the status is. I reiterate that we feel that we are very, very close to it. It depends on the timelines. On an annualized basis, 67% of what Vivo sells, and last year Vivo sold almost 35 million units. Another 22 million units can be added. Now, I humbly admit where possibly we have missed out is on the high margin category of industrial EMS.
Correct.
So, yeah, that I accept. So, yes, possibly I should have tried it 2 years back.
Okay, all right. A big statement coming in from the management of Dixon Tech. Maybe I should have tried it 2 years back. But in the pharmaceutical space, there's so much to talk about. We talked about Dr. Reddy's Laboratories. There's, of course, Cohance to talk about. But let me start with that. And joining us, in fact, on the phone line is Vishal Manchanda. And he, of course, very well placed to tell us about how he looks at these numbers. Senior Vice President in International Research at Systematics Group. Vishal, thanks as always for taking the time. A quick view on Dr. Reddy's Laboratories. It was expected to be a little weak on account of the US issue that they have, but there were several one-offs. Do you look through that, or do you take that into account?
Yeah, hi. So the numbers actually were below expectations, even if we kind of adjust for the one-offs. The US base, actually, if we adjust for the Revlimid, so this quarter we didn't have any of Revlimid, which we kind of had in the last few years. So this was the first quarter without Revlimid, and we got to know the US base, which stands around $240 to $250 million. So essentially this indicates we have not seen any growth in the numbers over the last 2-3 years in the base portfolio. But having said that, I think this quarter was probably a bottom quarter, and we'll see things only getting better from here. So they have generic semaglutide launch coming up in Canada, and potentially other markets can also open up, and that can add to the earnings traction. So we'll see earnings getting stronger from here every quarter, and they have also some large opportunities that they can monetize beyond semaglutide, and may kind of surprise on the upside in terms of the earnings growth, FY26 to 28.
Very interesting. So Vishal, what you're saying essentially is that this may be a bottom on the margins. I'm just wondering, I believe the management is guided to heading towards that 25% mark. Do you think that that's possible in the second quarter itself? And so therefore, the follow-up to that, if there is a pressure on the downside today, and if the stock opens gap down, should investors look at it as an opportunity?
Yeah, I think if it corrects meaningfully below the current price, around say 8-10%, this should be an opportunity to look at the stock, because they have large meaningful assets that they can monetize across markets.
And the rebound in earnings you expect as soon as Q2, or do you think it will take a little longer?
I think we'll see a gradual improvement in earnings, and probably, so it all depends. I think whether it can be sharp or not depends on how semaglutide ramps up in Canada. So it's not very clear. You can't really see how semaglutide would ramp up in Canada because of the competitive dynamics. We'll have to understand how competition kind of behaves here. So that's a variable, but for sure we'll see an improvement every quarter from here.
Okay. So the Revlimid opportunity not quite there, doesn't quite bother you too much about Reddy's, I believe, Vishal. Okay, good to know. There are two other numbers, and therefore I'm just moving tracks. Vishal, good morning, Neeraj here. But what Newland Labs has pulled out of the hat, I don't know if you track it closely, but if you do, some stunning numbers, great operating profit margin expansion. Any thoughts here?
Yeah, so I don't cover Newland, so would not like to comment there. But obviously the numbers surprised positively.
Okay, by any chance, any coverage on Cohance Life? Because that's the third one that came out with numbers, and it was a big miss.
Sorry, I don't have
no
coverage
problem.
on Cohance.
Can I ask you just to follow up on what you think about the CDMO numbers thus far? Because I think the rupee depreciation anyways aids those exports, and even Laurus, Newland, some of the others that have come out have all delivered fairly decent numbers. Is that a space that could continue to look strong?
So I think on CDMO, we just have to be cautious. The quarters are not always the same. You tend to get some lumpy quarters, and we need to be sure whether this quarter is a structural quarter or there's a lumpy element here. Just that, I think, if we get that right, probably we'll also will not get stuck in the wrong opportunities.
Got it. Okay. Vishal, pecking order. So you are saying Reddy's you are comfortable buying if there is a dip today, 4-5%, right?
Yes.
Perfect.
Right.
Anything else in the top pecking order for you?
So like in the large names, we like Sun, Reddy's and Cipla. So these would be our preferred names on the large cap side.
Small cap side, sorry.
Small cap, we have Jubilant Pharmova is one of the preferred names, Orchid Pharma, Shelly Engineering and Plastics, so
yeah,
and Ajanta Pharma also.
Interesting. Vishal, just one last point, and since we have you, Cipla expected today, what is your read on it and what are the key aspects that you're paying attention to?
I think potentially we will see some disappointment here because again it's a bad quarter for most generic companies. The generic Revlimid opportunity will completely vanish. On top of that, Cipla has additional problems that they are facing. Another large product is seeing supply issues because of a warning letter at one of their partner facilities. An import alert at one of their partner facilities. So that's an additional problem they are in, while the approvals that they are expecting in the US, the large approvals they are expecting, they are not coming through as we would have wanted them. So there's a delay there. So, but I think there is light at the end of the tunnel, and we'll see those approvals coming through, earnings bouncing back.
Okay, Vishal, leave it at that. Thanks much for taking the time out and being with us. Really appreciate your time. So that's, of course, Vishal Manchanda on Reddy's predominantly. Like we said, Newland could be the big one, and we'll get in Varsha a bit later on to talk about that. But Cohance Life is the third one that is important. And what's happened is that the numbers were a big miss. And from amongst brokerages who tracked this one, Jefferies has come out with a downgrade. They have downgraded the stock to an underperform. They've cut the target price to 300. The current price is 484. They say the near-term outlook remains challenging. Q4 numbers were significantly below estimates. All business divisions continue to decline, and the sharpest decline in spec chem business for the company. The management churn is high. Umang Vohra, third company head in 12 months, and FY27 outlook tough, with growth recovering only from H2 FY27 despite the FY26 soft pace. They have cut the FY27-28 EPS estimates by 14 to 17% on near-term challenges. Just one last piece before we take a break. Bring up the Cohance Life 1 month or 3 month stock price chart, and you will see a big bump up that happened in that when Umang Vohra's name got associated with it, right? And now that the results have come out and the outlook for FY27 may not necessarily look very strong, I think there could be a bit of a corrective move. But remember, that factor of Umang Vohra stays for Cohance. So keep that in mind if you're trying to trade this one. Time for a short break. On the other side, we get you the top trading strategies for today and a fundamental voice. Nirav Asher joins in.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business.
Hi, I'm Neeraj Shah. Watch me on
Welcome back. You're watching India Market Open. It promises to be an interesting day of trade, particularly because of what you saw at the start of the week. Of course, the indicative opening is pointing to a smidge of green. The question is, does that get sold into? Because we've moved from a buy on dip market to a sell on rise market, and we will get Kush Bohra's view on the technical levels in just a very short while. Before we do, we're also joined by Nirav Ashar, Head of Equity Research at Latin Manharlal Securities. Nirav, great to be talking to you after a while, and welcome to the show. Good morning. What do you make of the results that have come through overnight? One, two, actually, before I ask you about the results, let me ask you about the gold and silver customs duty hike, because there's clearly going to be an impact across the board in the jewelry stocks. So what do you make of that? And will these be a buying opportunity if you have a far enough time horizon? Talk about 3 years, 5 years, because ultimately you expect that this will settle down.
Good morning and thank you for the invite. Coming to the hike on the customs duty, basically on gold as well as silver, I think there was a case which was building up for this, because as far as India's import basket is concerned, we have crude oil, we have gold and silver, consumer electronics, which form a major part or chunk of our imports. It is estimated that India imports around 700 to 800 tons of gold per annum, and there is a case which has been building up for the gold monetization scheme also. That is also in the works at this point of time. Now, considering the fact that we had the PM statement to defer the purchases of gold for about a year, I think this was on expected lines to discourage the demand for gold or the consumption of gold at this point of time. But there could be certain other repercussions of this also. There could be something. There are certain theories that could encourage the smuggling of gold, etc. Could also start. So I think, in a way, it is going to discourage the demand or the consumption for gold in the near term, at least.
Okay, but the second part, which is, would you say, and this is a quick follow-up, are these opportunities to buy? And if so, where? Where do you see the opportunities?
Been certain news articles which have been floating around that certain central banks have been booking profit as far as gold is concerned. So there is certain apprehension that the prices have run up quite a bit. So caution is definitely warranted. And I think this may be a kind of a veiled warning from the Prime Minister that it's better to defer purchases at least for the next 1 year. So there could be a lot of hidden agendas behind this warning.
Okay, so it's an avoid is what I'm getting from you, Nirav. Kush, good morning, first of all, and always a pleasure, of course, speaking to you in the morning. We've seen a significant slide in the first half of the week, right, or the first 2 trading days of the week. Do you see a pause? Do you see some pockets where short covering is possible because of the velocity of that slide, or do you think that you should brace for impact at this stage?
Yeah, so first up, a very good morning, guys. And yeah, I like that idea. I like that thought. Technically also, there are signs that there could be a pause, a mild recovery. But Alex, I'm afraid the structure's actually gotten a little worse. Technically, if you see, we've had 4 sessions of negative closing, the worst of which came in the last, which is yesterday, right? So I think there is brace for impact kind of a situation. Yesterday we spoke of how 23,700, that's the line in sand. If that is broken, the gap area of 23,200 to 23,500, that could come about, to be failed and be tested. Very nearly we got there. I mean, itni bhi kya jaldi. But if you see, there was very heavy call writing. and hence the PCR has now shifted to 0.69. If you ask me, that is perhaps the slimmest of the technical silver linings, right, where you could see a rebound from these oversold territories. But even if that happens, I don't think it's going to be a more meaningful, sustainable uptrend from here on. You'll have to wait for some key levels to be taken out before you can call this a reversal. Now, the bigger issue in my mind right now with the markets is leadership, right? Bank Nifty is at near the 4-week, 5-week lows. IT index is at 3-year lows, and Reliance is also on a slippery slope. So where does the leadership really come from? That's the bigger concern, and hence you avoid indices and focus on stocks.
Okay, and so therefore, obviously, the follow-up is which stocks are those?
Yeah, and there are still some pockets which are finding interest. Pharma is one of them. I think there's been an extensive discussion today on pharma. Auto ancillaries, despite everything that's happening, still stand out. And of course, you need to have a short call. So going with a mix of long and short. Ajanta Pharma, Gabriel India, these are the long calls. And on the short side, you've got Patanjali. So Ajanta Pharma, I think the guest just prior also mentioned this as one of their picks. So maybe a confirmation from a fundamental side as well. 3180, 3270, these are your targets. 3000 is where you keep that stop loss. Gabriel India has been our call last week, did well, now consolidating, volumes very thin on the downside, that's a positive. So 1130, 1160, these are your targets. 1070 is where you keep that stop loss. Patanjali, FMCG pack, weak-ish. This is the weakest amongst the link. So sell Patanjali, May futures downside targets 437, 431, stop loss at 449.
Okay, some names to watch out for, and like we said, that we'll do an extensive discussion on pharma with Varsha, our analyst, a bit later on as well, because that's one big thing. The other really big thing, in fact, arguably the biggest story of the day, is the import duty on gold, silver and platinum, which has been doubled to 10%, a move set to make precious metals sharply costlier. The decision comes just days after the PM has urged citizens to defer gold purchases to protect foreign exchange reserves. Mahima has some details of what the impact could likely be. Mahima.
Right, so just to give viewers a brief perspective of what's happened exactly in terms of how duty rates have changed when it comes to custom duty. So basic custom duty, which was earlier at 5%, has gone up to 10%, and the cess on this, which was at 1% earlier, has gone to 5%. So the effective import tax has gone from 6% to almost 15%, and this is with effective from 13th of May, that is today. Plus, platinum findings will also attract around 5.4% of tax, and custom duty on jewelry findings will also attract a 5% custom duty. On top of that, concession duty provisions for import of catalysts or ash which contain precious metals will also attract a custom duty of around 4.4%. Why this is important? Because if we take a look at the gold import data that India has done in the past so many years, just in FY 25-26, we've seen an increase of 24% when it comes to gold being imported to India, and India is one of the largest consumers of gold imports, and this 24% increase in terms of value because of the increase in gold price, but volume has slightly gone down by around 4%. Now, what this means for jewelry companies, because this is yet another negative news coming in for them, higher gold prices and silver prices will lead to higher working capital for them, plus demand for them might go down because customers might defer their purchases of gold and silver, and companies may not pass on the entire price hike, and this might impact their margins as well going forward. Now, in terms of where stocks are concerned, of course, all your jewelry names will be in focus: Titan, Kalyan, Senco, Thangamayil, PC Jewellers, etc. On the back of that, this could see a negative sentiment in trade today. So this is the overall view of what this news flow means for a lot of these jewelry names.
Got it. All right. Thanks so much, Mahima, for that. Now, we've already asked Nirav what he thinks about the jewelry companies, and his call on the fundamentals is an avoid because he anticipates that there could be pressure on the underlying commodity, which is gold. And look, that actually makes sense if in the US you have an increase in inflation and the possibility of higher interest rates, yields could go higher, and that is usually not a good sign for gold prices. They could take a pause, particularly because of the run they've had over the last 2 years. But let me go across to Kush Bora to find out whether there's an opportunity on the technicals of the jewelry stocks, because let's face it, the entire basket has gotten sold into very aggressively over the course of Monday and yesterday.
Very true. Most of these names don't really stand out. Only two of them do. I'm pretty sure you can guess by now.
Titan.
Which one. Yeah, that's the first one, and want to take a hazard a guess at the second one as well?
Tangamail.
Absolutely. Spot on. I'm sure even viewers are now getting used to this, right? So Titan and Tangamail, these are the only two that stand out for me from a technical standpoint. But let me also put it out. You don't have to buy right now. You don't have to catch the falling knife. You can wait for the dust to settle, because Titan, has a tendency of, giving these big moves, consolidating for a while and then bumping up. Even now, if you see, Titan actually has a rising trendline support near the 3800, 3850 mark. Tangamail, very similar structure. I've spoken about this multiple times on the channel, where it gives you a big run, goes in for a longest consolidation phase for about 3 to 4 months, even 5 months, and then gives you another breakout. So this consolidation phase is where you want to buy. I would suggest that keep these two on your radar. Today might not be the day to buy, because if there is a further downslide in the coming days, on some of these names, you might get at attractive prices. But definitely these two to be kept on the radar.
Okay. Well, so much more to talk about, and we'll do that. But first, let me get in my colleague Somit Sarkar, who joins in with all the chatter from the dealing rooms. And Somit, the sentiment clearly isn't the best, but I was just thinking about it, Somit, that the broader market behavior has pretty much been as if crude was never at 105, because the mid caps and small caps have done very well. So are dealing rooms still abuzz with ideas, or is the mood a bit somber?
Actually, the mood is not that great, even in the dealing rooms. Yes, mid-cap and small caps have been doing well, but it's only few stock-specific action that we have seen, even in small and mid-cap names. It's not that people are going all in and buying. Traders are continue to keep their positions light, and even yesterday, if you see the volumes that were largely flat to in fact lower compared to what we had seen the previous day. Few stock-specific action still what dealers have highlighted is firstly Biocon. That stock was up in trade yesterday. Now dealers were indicating that a large prominent HNI was accumulating shares in trade yesterday, and that was the reason why the stock was buzzing. For Amber and Godfrey Phillip, there were buy flows on the PMS desk ahead of the Q4 numbers. They're expecting Q4 numbers to be better compared to street estimates. And lastly, when it comes to Chem India projects, the buzz on the street is that there could be multiple order win announcements that could come in for this counter in the near future. So keep an eye out for Chem India projects as well.
Okay, so several stocks there. Somit, thanks so much for that. And let me ask about the last one. In fact, it stands out, Chem India. Pull the chart up, and we'll get Kush to see whether there's a prospect on the charts as well, to see whether it's going to go up from this point. It's up as much as 41% over the course of the last 1 month, but the overarching structure for the market has turned a little negative. And so the question is, do you take money off the table here?
So, one, I've not tracked this stock very closely. Two, by the looks of it, good moves. Even now, the accumulation is fairly healthy. It's taken out the resistance levels of 850 with ease, with a very brisk kind of a move. So I would suggest that if you do want to consider, don't buy at these levels. If it does come down to those 850 levels again, which will start acting as support, is perhaps you can still consider, this stock. 850, that's the level to watch for.
Got it. On the telecom space, we've got an update on Vodafone Idea. The board will meet later this week on the 16th of May to consider the fourth quarter results and also mull a fundraising proposal. There's also an update that took place earlier in the week with regard to Vodafone PLC. Somit joining in to tell you about the context and what to expect. Somit, the stock has been active in the recent past because of the expectations possibly on the fundraise. What are you picking up?
Well, this is the third attempt that the company is doing on when it comes to fundraise. In 2019, they had done their first attempt for a fundraise of around 25,000 crore rupees via rights issue. The price was around 12.5 that time. Current market price is 11.9. In 2024, the company did the second fundraise via FPO of around 18,000 crore rupees. The price back then was set at around 11 rupees. Right now, the market price is around 11.9. So what are the possibilities that might happen this time when the company is looking for a fundraise? Maybe it could just be an enabling resolution, because even last year company did consider fundraise with its Q4 results. That was on May 30th. And given the fact that 1 year is getting completed, they might just enable a resolution for a potential fundraise going forward. The second possible announcement that could come in is that they might have found a strategic investor in Vodafone Idea, given the fact that now the Ager issue is done with. Or the third possibility here is that the news that had come in a few days back, where Vodafone PLC was looking to transfer its stake in the company to Vodafone Idea. So that announcement is also a possibility that could come in on May 16th. But why should one be cautious still when it comes to Vodafone Idea? Because despite 2 fundraisers in past, 2 debt conversions and 3 tariff hike, Vodafone Idea has continued to struggle in the telecom industry, and that had nothing to do with its debt. It was just operational performance that was not improving for Vodafone Idea. Now, going forward, Vodafone Idea would need internal accruals of nearly 59,000 crore rupees, which seems to be quite a tall task, given the fact that in FY26, the free cash flow that the company will generate is just 9,000 crore. They have spectrum repayment of around 46,000 crore rupees over FY27 to FY29, and we are yet to see any meaningful customer addition when it comes to Vodafone Idea. In fact, since merger, they have lost close to 24 crore subscribers, and they have also clearly mentioned that they will not take the first move when it comes to tariff hike. And do remember that without tariff hike, improving financials would be quite difficult for Vodafone Idea at this point of time. Now, they are expecting their revenue to grow at a CAGR of around 17.5% over FY26 to FY29. That is nearly 1.5 times of the industry growth. Again, this is a very tall task without a tariff hike, is what analysts believe, and hence one should be still cautious when it comes to Vodafone Idea.
It's a very good point. Thanks so much, Somit, for that. Nirav, so therefore the question for you is, do you buy the possibility of a 1.5 times growth for Vodafone Idea? What needs to happen for that to take place? Ultimately, you're going to have Bharti Airtel or Jio bite the bullet and raise tariffs. The question is that likely? Because ultimately, Bharti Airtel also has to push its ARPU up. The goal, of course, was that 300 number, which it hasn't hit yet.
Well, I think telecom companies continue to struggle at this point of time. We've seen Bharti Airtel how the stock price has been consistently under pressure, despite the fact that the ARPU stands at 259 rupees. Bharti Airtel has made it very clear that they would be comfortable with an ARPU of 350 rupees. That is what they deserve at this point of time. This is taking into account the requirements of CAPEX going forward for funding the expansion plans. Even Jio Platforms has been at 214, the ARPU has been at 214. And considering the kind of competitive intensity, I think Vodafone is going to struggle definitely. And there are very strong chances that it will continue to remain a momentum stock. So I don't see any major, any drastic improvements as far as the operating metrics are concerned.
Okay. Well, Vodafone Idea too, after having a stellar run, has seen a bit of a downtick this morning. The other one, Nirav Asher, is GRSE or Garden Reach Shipbuilders, which has said that it is now very likely to win a fairly large order, 33,000 odd crores in the current quarter itself. Now, we know that in that space, maybe there is a HAL which has done really well. Some of the others haven't quite, but it is a large order win, you reckon, and the management saying that they are on track to win it. You reckon it could spur some excitement? Are you liking this space?
Well, in this particular space, we like Garden Reach Shipbuilders because it's been fairly better in terms of operational performance. The margins have been relatively better, and there's definitely an element of predictability. The order wins have also been quite impressive as compared to, of course, the other players like Mazgaon Docks and Cochin Shipyard. So I think, yes, definitely we would go in for a Garden Reach Shipbuilders.
Okay, on to some more news and updates and, in fact, results that have made it to our radar. Sharad Johnson with a list of stocks beyond the ones that we've already spoken about. Sharad, a lot of very interesting numbers today to analyze.
Well, exactly. You're right, Neeraj. First of all, Berger Paints, the Q4 numbers were very strong, and the outlook also seems kind of very bullish, especially on the top line front. MTAR Tech, a very strong execution, and maybe it's actually justifying the high valuations which is there across the board. There's a significant up move in this. Neeraj, you mentioned Gopal Snacks, a very strong turnaround quarter, a lot of operational efficiency at play, and that's why the margins has gone up. And of course, Street is quite bullish on their expansion in the Eastern India as well. Kalpataru, strong turnaround quarter, while for Max Financial, on the other hand, there was a sequential margin improvement coming in because of the improvement in the efficiencies. And lastly, in the mid-cap space, we have Ratnavir Precision, where a strong Q4 was there, aided by the domestic business as well. And buzz in the street is that there might be a fundraise in soon.
Okay, so there's quite a bit. Sharad, thanks so much for lining that up
Alex,
for us.
Think of these numbers. Sorry to cut, but I'm just saying, just think of some of these numbers. So we spoke about the 3 or 6 that we really liked, right? But Gopal Snacks,
MTAR Tech,
and MTAR Tech. Gopal Snacks revenues up 29%. EBITDA at 31 crores versus 2.1 crores. EBITDA margin up 700 basis points. Again, a base which is very low, much like Newland. The base was washed out and therefore such a big uptick. But a net profit of 30 crores versus a loss of 40 crores. It's something that the street usually should like. The caveat out here is that the stock has seen a bit of a run up, maybe in anticipation of these numbers, because if you look at Gopal Snacks over the last 1 month, there has already been a bit of a run up. So I wonder, Nirav Asher, if you like Gopal Snacks fundamentally, and is there merit in buying this, or would you want to bet on some other names?
Well, the loss which you are talking about may have been on account of certain several one-off.
Nirav, there is a profit. The loss was the previous time.
There's a profit this time, but when we are comparing it with the loss which was there in the previous year, that could be on account of certain one-off related expenses.
No, Nirav, even there, Nirav, but the point being, EBITDA too. The EBITDA was 2.1 crores last time. So there were no one-offs in the EBITDA, right? And the EBITDA also margin has improved quite significantly. So there has been a fundamental shift that they've shown this quarter.
Yeah, so I think it's quite possible that operating leverage would have played out at this point of time, and that could have really boosted the margins, and certain unwarranted expenses or etc. could have been cut off, and that has led to a more stabilized kind of a picture as far as the EBITDA margin is concerned, and that's getting reflected in the bottom line.
Got it. Nirav, on the point of MTAR Tech, and it's fair to say that certain companies in this space have lumpy quarters, right? Where they have outstanding business in one quarter and then you have to deal with a bit of a lull. But this quarter has been fantastic if you look at it, right? 67% revenue uptick, EBITDA uptick of as much as 80+%, margin improvement as a result of which the PAT number has come in multiples higher, 44 crore versus 13.7 crore. The stock has gone up very substantially though. That is a question. How do you look at this quarter's numbers? Does it pose or provide a ramp for FY27 climbing onto a new trajectory, or is it too early to call?
Well, there have been a lot of companies which were hitherto catering to the forging segment, etc., and they were catering largely to auto ancillary space, where they were doing margins of around 14 to 15%, where the net profit margins were in the range of 5 to 6%. Now, most of these companies have graduated slowly from being forging manufacturers to moving up the value chain and catering to segments like aerospace, defense, renewable energy, etc. And there, as you rightly pointed out, there is an element of lumpiness because the orders tend to get deferred. Sometimes the government specifications or the approvals are not forthcoming so easily. So there you could see a kind of an inconsistency as far as numbers are concerned from quarter to quarter. But I think the right approach over the year would be to have a look at the annual picture. And I think MTAR has reported very strong set of numbers because of their exposure to these segments, to these lucrative segments like the aerospace or defense, where the EBITDA margins tend to be in the range of 22 to 24%. Where the EBITDA margins are in the range of 22 to 24%, typically the net profit margins tend to jump, and they tend to be in the range of 14 to 15%, which gives a tremendous boost to the bottom line.
But Nirav, okay, so all of those points are excellent and well made. The only quick question I have for you, the stock is up 140% approximately over the last 6 months. Is it still a buy, or has the bus already left and reached another destination?
Well, it would be better to wait for the stock to consolidate, correct a bit, and then only take an entry.
What is the possibility of the stock consolidating at this price? That is a question to you, Kush.
It is, as we speak, consolidating.
Yes, there you go.
6,700, 6,800 for the last 6 weeks. That's all it's been doing. But of course, after that huge sprint, a 5-10 minute breather is, absolutely, par for the course. I think some downside towards 6,100 levels, could be tested. But the broad structure remains positive. You want to buy a stock when it's in that consolidation phase. So not a bad idea. Like I said, 6,100, that zone. You have to keep in mind, keep a stop loss around the 50 mark for a positional buy.
No point talking about multiples on this one, Neeraj.
Well, I think of it this way. Motilal Oswal thought of it fundamentally as a ripe stock to cover at $4,700 with a target of 6,000. So in some sense, people are willing to assign some premium multiples to MTAR.
And people thought they were crazy at the time, no?
Well, the stock made the money. Let's see what it does. But yeah, 6248. Alex is right. No point. In some sense, no point talking about multiples. But are multiples worth talking about for companies which are bouncing back? And I think Newland Labs fits that bill perfectly. Growth supported by multiple reasons. Varsha is here with more. Now, Varsha, take your time, but please do mention, please do tell us, was there a base that was very low, which also has resulted in this looking so robust, Newland Labs, that is?
The main reason why we are seeing such a sharp improvement in numbers is CMS. Pura story wahin pe hai. So the CMS is nothing but custom synthesis. It's a CDMO which you do exclusively for your clients and has a high margin. Now, the base effect that you were talking about, the CMS contribution earlier, last year was just 40%, which has increased to almost 60%. So 60% of your business coming from a very high margin segment, and hence you're seeing that sharp margin uptick. Now, the higher CMS mix boosted overall margins. Commercial and near commercial molecules led to strong operating leverage, and the sharp improvement in mix led to EBITDA margin of almost 41%, and also PAT was supported by both growth and margin expansion. Now, I was talking about the segmental contribution. Let's pull up that chart as well. The CMS contribution sharply increased to 61% in this quarter versus 40% in last year. Prime segment, which is the generic drug substance, I would say, the contribution declined to 22% versus 32%, and the specialty contribution declined to 11% versus 19%. So overall, your high margin products increased, and hence you are seeing a sharp improvement in financials. Now, what this also, even the brokerages are very bullish when it comes to Newland Labs, because GS has maintained buy. They've hiked their target price. What they're saying is that Q4 was above estimates. GDS was in line as CDMO driver was the main driver. EBITDA margin came in 40% on the back of a better product mix. They are expecting top line growth to remain robust at 20% CAGR over FY26 to 28, and they've also hiked their EPS estimates. So overall, it's just the change in mix which has led to the stellar numbers.
For now, 16%. Let's see if it's 5, 15, 16, 20. We'll get to know in a bit. But what a move. And for somebody who kept the faith in Newland when the stock was at 11,000, richly rewarded by the money nearly doubling. Kush Bora, we know the markets are open, but since you're on the topic of Newland, just wondering what do the charts show? If it starts off 4-5% higher.
A multi-year cup and handle formation breakout, when a stock gives you that kind of a move, you obviously hold, especially if you had it from lower levels. If you get these 10-15% kind of an openings, then it's no point buying right now. But if you have it from lower levels, definitely hold 18,200. That's the long-term resistance. So anyway, opening and sustaining above that will put the stock in a different trajectory. So for now, it's definitely a hold. Maybe partial booking profit, but I would suggest a hold.
Okay, I'm going to focus on just the first ticks coming through. 902 at this juncture, and you're seeing cuts of about 1%. By the way, rupee opening slightly positive. We'll come to that in just a bit. But 0.8% lower for the benchmark Nifty 50. And you're seeing a few stocks under pressure. And of course, these will settle. But take a look at Dr. Reddy's Laboratories reacting to numbers and seeing a tumble at the start. It may not be a 10% downtick, who knows? But it could well be a significant gap down. Eternal under pressure, down 4% in the pre-open session. HDFC Bank also losing about 2.7% or thereabouts. And you have Titan understandably under pressure today as well. Pull that up. It's down about 1.3%. I wonder where it will settle. You know, the other thing is that Reliance Industries has been under a tad bit of pressure in the recent past. That continues to be the case, and that's proving to be a weight on the benchmark as well in the recent past. Also, pull up the private sector banks, HDFC, ICICI Bank, because they've been under a tad bit of pressure this week as well. HDFC Bank down 1.3%, ICICI Bank another 0.6% lower. So, Neeraj, I wonder if you're spotting anything from the broader markets.
Well, I'm spotting Newland. I'm spotting Cohan's Life. I reckon Cohan's Life could be facing a bit of a stick this morning, 7.5% lower. GRSC and Texmaco could be a big winner today. I haven't looked at the charts. I haven't looked at the numbers, the opening thus far. 13%, no surprise there, simply because they've gotten a very large order win. 4,000 crores. Export order is a big one for Texmaco. Well, I tell you, West Bengal companies are getting some good news flow in the last few days. But, you know, this railway companies, the wagon manufacturers, Nirav Asher, kind of written down after having a really good run 2023 and 2024. The last 12-18 months have been a bit sluggish. This is a large order win. Does it put Texmaco in a good space, because it's also an export win?
Well, yes, definitely. As far as railways are concerned, yesterday we did see some positive news coming in from Afcons, and today, of course, this Texmaco order. And an export order definitely means much more, because there is a possibility of better quality margins. Because
Nirav, I'm really sorry. I'll just have to cut you in there, and we'll let you finish this thought in a bit. But we've got a very important voice, and that is Nirmal Jain of IIFL Finance. Because what has happened, viewers, I'll just lay it out for you before we get in, Mr. Jain. The IT department has sent a tax demand of 476 crore odd, which I presume IIFL Finance will contest, and will ask Mr. Jain about the same. But the point being, it is about 1 quarter's profit, if you will. But a lot of people believe that this disclosure by the IT department now removes the overhang, as the worst case impact on IIFL Finance is now known. And this is the worst case impact I'm talking about. Nirmal Jain is with us, first and exclusive on NDTV Profit. Mr. Jain, thank you so much for taking the time out. And I'd love to know what you think about this, because you've been you've been seeking a resolution to this for some time. Is this the first step of the resolution?
Yeah, so the assessment has been concluded, and obviously we have enough factual and legal ground to contest it. So we'll go in appeal against it. Because over the years, the assessment is for a block period of 6 years. And we always paid our taxes absolutely in full compliance with law, and, with absolutely full amount always. So this assessment order has come, and as you know that we have right to contest it, and we'll go in appeal for this.
Okay. What are the timelines to that, Mr. Jain? I mean, do you get into an appeal ASAP? And pending that, is there any restriction on the ability of IIFL Finance to do business under various segments?
No, absolutely no restriction. The tax litigation is, even without this search, there have been many tax demands which are under litigation, which are under a dispute with the department. So obviously there is no impact on the business as such, and never ever was there any impact because of the IT search or IT assessment or IT special audit. But once the assessment is concluded, then the next step is ASAP will go in appeal against it, and we'll put our case forth, where, we have paid all the taxes, so the entire demand has to be contested fully.
Just to be absolutely clear, Mr. Jain, what you're saying is that in this 6-year block, which has been assessed, you do not believe, based on the study that you yourself or your team has done, that there is any tax outgo that was pending and that should be considered, right?
Absolutely.
Okay. Okay. All right, Mr. Jain, thank you so much.
No.
Okay.
Wait a minute. I have a couple of questions. No, Mr. Jain. Hello? Are you there?
My apologies, Neeraj.
Yeah. Well, maybe we can just
call him back.
We can call him back, but while we wait for that to happen, Kush Bora on the charts, because it's looking like starting off well. Is there a trade here if it starts off 4-5% higher?
Not really. Been consolidating for a while. Before that, the bias was majorly negative. So I would wait up a little bit on this. Anyway, the resistance on the upside immediately at about 475, 480 zone. So maybe if it takes out those levels, you consider them. For now, I would just wait and watch on IIFL Finance.
Okay, Nirav Asher, any thoughts here? Nirav Asher? Okay. I think we will just lost that line with Nirav Asher as well, interestingly. But Mayuresh Joshi is with us. Mayuresh, good morning. I don't know if you got a chance to hear Nirmal Jain talk about this thing, but they've got this final tax assessment. In some sense, some people are saying this is the end of the uncertainty that may have existed. The worst case demand is known. It is about 1/4 of profits, etc. How do you view this development?
Morning, Neeraj. No, so I think the worst is probably now getting penciled in with this assessment order probably coming through. And obviously, I think I was hearing Nirmal Bhai. I think they are probably going to contest that as well. And therefore, to a large extent, the regulatory woes with this assessment order largely should leave the demons behind them. However, I think what happens with the core business and other elements is a different aspect altogether. But yeah, you will see a sentimental positive impact onto the stock.
Yep, 6% higher. Now remember, viewers, for companies like IIFL Finance and some others, gold loan is a big part of their portfolio, right? And if indeed there are developments happening around gold buying, etc., it might have a bit of an impact. But today, I think IIFL Finance story is purely about this tax demand getting quashed getting a demand, not quashed, sorry, getting a demand. And the worst case scenario for IIFL Finance now known. It can only get better from here if it does. It can't get worse than this. This is about 1/4 of profit, which is why I think there is a bit of a thumbs up that has been given to this stock at the end of 8 minutes. What else has a thumbs up? Maybe Newland has a bit of a thumbs up.
Berger is doing well.
Berger is doing well. What might not be doing well is Cohance, is Dr. Reddy's, and some of the others. Pull up Cohance, pull up Dr. Reddy's. 7.5% down for Cohance. Dr. Reddy's, just a couple of percentage points. Actually, it's not that bad a reaction to Dr. Reddy's numbers with adjustments, etc. Might be okay. Okay, we'll watch out for that too. Sharad is here with the big brokerage call for the day. Sharad, what are you picked up today?
Neeraj, KI Industries, the stock I've picked up. UBS has downgraded the stock to neutral earlier. It was a buy rating, and the target price, however, there's a minor hike coming in from 5,300 to 5,600 rupees per share. They've stated that the company is well positioned, but the near-term upside is not there. It's quite limited. The company is a beneficiary of the electrification trend. Of course, this is a long-term trend we are talking about, but near-term upside is there in the valuations, and that is where this downgrade is coming in. There's a steady channel-led ramp-up is happening, but the rising competition is happening, especially in the housing wire segment. That's where a concern is coming in. But of course, limited capacity is there when it comes of the structural expansion, and this could actually limit the immediate gains. So it looks like a tactical report rather than a strategic report coming in from UBS on KI Industries.
Thanks. Cables and wires looking okay. Let's wait and watch what happens. The rupee, I think we missed the marking of the currency, but just pull up the rupee and see what that is doing in the morning as well. 95.53. Okay, well, respite. We don't have to look at new lows every single day. Mayuresh Joshi, Dr. Reddy's, just a couple of percentage points after the numbers that have come out. Would you wait for the stock to dip a bit if you wanted to buy at all? Or would you believe that instead of Reddy's, there are other opportunities to buy because some of the CDMO companies, for example, are throwing up some great numbers?
No, I think the reaction is probably muted, Neeraj. Honestly, I think looking at numbers, I thought that it might be a deep reaction on Dr. Reddy's. However, I think from the space itself, our own sense is that CDMO, CRM, and CSM as business verticals for pharma units probably should stand out over the next few quarters. And therefore, you've seen a kind of a reasonable move in stocks like a Laurus Lab, as an example, with a clear disclaimer that we are biased and continue holding stocks in our local and global portfolios. There is a smaller mid-cap company by the name of Sai Life Sciences. They're doing some fabulous work as it comes to CDMO, or CRM, and CSM as a space. Extremely strong margins, very good management, and the expectation in terms of business growth expected to continue on a very, very strong footing continues. You were just mentioning Newland Labs. I think fabulous set of numbers when it comes to the CSM and the specialty part of the business. The only flaw I can draw from Newland's number is that the top 5 customers in the CSM segment probably contribute 94%, which means client concentration relatively higher in one of their biggest businesses.
Okay. Well, Alex, only 7%. I would have thought of much more, but it's only 7%, but no harm. Actually, that brings me to that question, Kush. I know I asked this too about you earlier. Maybe I'm stuck up on Newland, but just because it's given such a blowout set of numbers, between Newland and Cohance, is there an opportunity to buy or sell? Because Cohance too has that factor of Umang Vora, which led the stock higher. Is this dip a chance to buy as per the charts?
On a light note, I have a feeling that yours and Mayuresh's view on Dr. Reddy's and Newlands will perhaps be granted. Thoda ruk jao, 950, 960 tak. No, okay, not wish.
Let's help the viewers.
Not wish, but the view perhaps, will be, will just materialize because
no, you said view, thankfully. Yes.
Okay, glad. I was thinking wish, but yeah. No, Dr. Reddy's has already seen some, downside in the last couple of weeks, so that could perhaps be one of the reasons of the soft opening, but could, deepen. Cohance, good structure. The near-term structure is very positive. This dip I will take as an opportunity to buy. Volume accumulation very healthy because Newland's already been, doing its thing, moving higher. 18,200 resistance, being taken out, but could actually move significantly higher at open. I would actually focus on Cohance because the risk-reward ratio here is fabulously attractive. So about 425-ish is where you keep your stop losses for much higher targets of about 485, 520 plus.
Okay, just about 20 seconds left. Kush, any individual stocks that you're looking at post-market pre-open?
Yeah, so the theme for the day seems to be pharma, and I'll stick to that. Ajanta Pharma is a stock that we gave out as a pick, so let's go with that. 3180, 3270 to reiterate the targets, and 3000 is where you keep that stop loss.
Well, we're not surprised it's a pharma name. We'll ask Mayuresh Joshi to immediately post-market open about something that he likes to. But since it's just about 15 seconds left, let's kind of stick to that. Let the music start. Hopefully, the market has some music to it as well, because it looked like it'll start off marginally, flattish to marginally higher. But maybe things may change in the first 5 minutes of trade. But here's how we're starting off. Flat, okay, marginally higher, yes. I'm happy this turned out to be true. About 0.5% actually now for the index, very interesting. Market breadth is even Stevens, which is not too bad, but the Nifty mid-cap index is up about 0.6%. The small cap index should come up on your screen next, and that too could be doing well. About 0.5%, not bad really. Actually, a really good start relative to what some of the Asian markets were doing as well. Let's get the heat map up on the screen, see what is moving and what's not. Remember, crude prices are actually inched higher, but we have a fair degree of green, very little red. Dr. Reddy's is starting only 2.5% lower. Surprise, surprise, Asian Paints is up 3.5% higher. I wonder if I've missed some news there. Crude is high, so bear that in mind. There's not a crude reason for Asian to move this way. Has to be something else. Adani Ports, 1.4%. Hindalco and Tata Steel doing okay. Remember, we spoke about metals looking okay. Copper and some of the base metals have moved higher, so that's to be noticed. Adani Enterprises higher, L&T higher, HDFC Life higher. I'm really amazed with the quantum of green on the screen this morning. By the way, Dr. Reddy's, and just bring that stock up before I get to Alex, because I don't see in the list of the top 10 losers. Can we just get Dr. Reddy's individually on the screen? Because it's bounced back, I think. 0.87% higher. A really good reaction, a surprise positive reaction to Dr. Reddy's this morning. I don't think there were too many shorts in the system which are covering for covering as well. So it's a very interesting one. We'll ask Kush Bora about this, but Alex, good good start, even if it's just 0.25% higher.
Neeraj, absolutely. And to the point on why we're seeing an uptick, could it be that over the last 4 sessions you've seen an erasing of 950 points on the benchmark Nifty 50
you're the Nifty itself.
for the benchmark, right? And so even the broader market's losing quite a bit of ground, and maybe some semblance of buying could come through on account of that. So maybe it's that. The question is, do we hold on to that, or do we once again see selling that emerges through the trading day? Pull up the sectoral heat map just to drive home that point and see whether that green on the screen is evident. It is, in fact, mostly a green screen. Metal is up about 1.5%, 1.3%. Defense is bouncing back from the correction that it saw yesterday. Remember, it was one of the worst performers sectorally, up as much as 0.7%. Pharma is doing okay, 0.7%, and we'll have to drill down into some of those internals to see how individual stocks have reacted. We'll get to that in just a bit. Media down. IT down, just about flat though, with a negative bias. Not too much in the way of big cuts, even for the PSU banking index. So you'll take this actually. It may not be tremendous gains, but at least you're not seeing cuts at this point. Let's talk about earnings, because there are quite a few stocks that should be reacting, and among them, Berger Paints. It posted a pretty decent set of numbers, and you saw Asian Paints up. I wonder if it's in consonance with this 8% move. It well could be. About 8% up for Berger Paints. Newland Labs is having a decent start, but not maybe the start that we would have anticipated. 2.7% higher at this juncture. MTAR Tech, a strong execution seen during the quarter, but lo and behold, it's down about 3%. So not necessarily any of the reaction that we were anticipating. Dixon Tech as well, a weak quarter, but the stock is up about 3% or thereabouts on the earnings. Let's see how that pans out. Gopal Snacks, highest ever quarterly revenue is recorded. The stock is up about 2.7%. Stovecraft, it's riding on the higher demand for induction cooktops, is done pretty well. Kalpataru, a strong turnaround quarter as well, doing okay, should be up about 4.7, 4.8%. Maxfin and Ratnavir also in focus on account of earnings. Bad earnings or relatively impacted earnings. You have Tata Power, which is seeing a cut of about 4.4%. Cohance was expected to see a negative reaction on the back of those earnings, 5.6%. A lot of brokerage downgrades also coming through for this particular counter. And now, beyond earnings, there are a few more developments. And Texmaco we spoke about on account of that big order win, a significant one actually at that, 4,000 plus crore, and it's up about 11%. IIFL Finance, that clarity that has emerged on the tax demand and the fact that it's going to be contested, up about 4% in trade. RVNL is up about 2% on account of an order win. And finally, I would like to pull up the jewelry companies just to see how they're reacting. Titan is not doing too much, but Kalyan, Senco and a few other names in the jewelry pack should be under a tad bit of pressure. I wonder if there's anything else from the broader markets, Neeraj.
I mean, yeah, there could be multiple other things as well. Alex, you are right. A lot of stock could be moving around. But I want to quickly get the opening opinion from both our guests, because Ajay Srivastava should be also joining in a moment. Kush Bora, to you first. And a word on Reddy's, of course, the way it has done. And any opening thoughts on the market or anything else that you spotted?
Yeah, see, Reddy's already in the first 5 minutes a volatile move where from green, red to green and then back in red now. I think the fact that it's already seen some sell-off in the last 2 weeks is perhaps giving it that cushion. Again, structure not very positive, so I wouldn't really venture a trade into it. Definitely not on the long side. As far as markets go, the opening's fairly in line with what GIFT Nifty was suggesting. Mild rebound after this massive sell-off of 4 days. Nothing to write home about. Right now, I would avoid indices, focus on stocks. Like we said, Ajanta Pharma, Gabriel India, just to name a couple of them.
Okay. Mayuresh, what has stood out for you in the last few days, weeks, earnings, non-earnings, etc.? Where is it that you find favor? What stocks are you recommending, if you will?
So, Neeraj, again, I think pharma has been a standalone winner in terms of earnings delivery. And again, I think the expectation largely in terms of earnings stability expected to continue with a lot of key product launches expected to happen. A large part of that tariff imposition does not hit the industry hard as well. And therefore, I think pharma is one sector which has performed really well in this earnings season. As I said, and I mentioned before as well, Sai Life Sciences on declines is something that we continue holding. It looks like a good quality mid-cap play within the pharma universe. Specialty chemicals, a few stocks out of that actually stood out. And the expectations, as we are hearing the managements out, make us believe that niche chemicals will continue doing well. The expectations in terms of supply chain issues obviously will hit a few companies within the sector itself. But Navin Fluorine, SRF, I think outstanding set of numbers. Continue holding these stocks with a bias in our local and global portfolios as well. Navin is expanding capacities, the expectations in terms of margins holding up, diversified supply chains, and end user applications, specifically the capex that they're probably doing, both in terms of their core segment, the multipurpose plant, and the specialty segment as well. And the expected fixed asset turnover thereof should bode well for specialty chemical and a few players thereof as well. Metals and mining, Neeraj, surprisingly, I think the relative strength of this sector has held up, and the expectations of domestic capex expected to continue will probably keep a lot of these domestic mining stocks in focus. A large part of the move with good numbers have already happened for a lot of players within the space. Where you're talking about Calent Dispatch, Sham Metallics, Godavari Power as an example. But as the dynamics turn and change, both in the local and the global context over a periodicity of time on the global front specifically, I think the numbers with expanded capacities and backward integration operations should hold up really well for these players as well. So I think more domestically driven at this point of time, shying away a tad bit in terms of consumer discretionary durables, both in terms of expectations of input cost hitting their margins hard in Q1 of the next financial year. And if monsoons probably are not as per expectations as one believes, the demand factor can also start coming up. So a little bit underweight in terms of consumer discretionary durables.
Got it. Okay. On that note, gentlemen, thanks so much for taking the time. By the way, you have an impact on gold ETFs that is visible. Pull up, for example, the Tata Gold ETF. It's showing an uptick of about 4.7% or thereabouts, and that reflects the increase in the duties that has been announced that comes into play today as well. Nippon as well. And these will broadly track that 4 to 5% increase on account of the customs duty hike and the other duty hike. Now, let's stick to earnings, or rather, let's stick to a conversation on markets. And we've got joining with us Ajay Srivastav, in fact. And Ajay, thanks so much as always for taking the time. Very good morning to you.
You sound to be nervous today. No, okay?
Me? I'm perfectly fine. I'm perfectly fine.
So you're not the investor in the market, I can see that.
No, I'm perfectly fine. So you don't seem to be nervous at all. So let me start with that. The question to you, you're looking at the screen as a pop of green. We've seen cuts for 4 days in a row, and the broader markets have come off quite substantially. There are worries about the fundamentals and about the macro because of the announcements that have come through from the administration, the customs duty hike in gold. Are you worried at all?
No, good morning. First of all, you have to follow your model. And I think we have shared a number of times on our channel as well. The moment we switch to the model of 1/3, 1/3, 1/3, which is 1/3 global, 1/3 India, 1/3 precious metals and other metals, I think the life has been good and stable. And even today is proven to be good because at the end of the day, if your 33% of portfolio is in India, and that also in reasonably good stocks which are monopoly, I think you don't need to worry too much about the rest of the economy at the end of the day. Problem is where people are concentrated and leveraged on Indian economy. I think that's where the problem is coming. And I think it's simplification to say that problem is because of the Gulf War. We had a problem before the war started, and that got exacerbated by now. So I think the key is allocation of your portfolio. I think that's where the magic and the mystery and the pain is. If you're all in India and leverage on board, I think you got pain on your hand. If you spread your money out, and I think you are doing fine because both other segments of the market, the global as well as precious metal, have done well. Indian monopoly stocks, if you look at stock exchanges, for instance, have done reasonably well without any problems at all. So I think it's a great market to be pick and choose, spread yourself, and enjoy the ride because you need to be part of the world. If you're part of the world, I think you're good.
Okay. Ajay, good morning.
Good morning.
And I wonder if that template continues despite the valuation upticks that we've seen in the semiconductor space. I mean, look at DRAM in the US, look at TSMC, SK Hynix, etc., Samsung in Korea, and those things are really zooming up. Does that continue to attract global capital at the cost of markets like India?
There's too much focus on the semiconductor, quite obviously, because they have gone up the most. But there are a whole host of stocks that you got there which do reasonably well. And let's say the largest retail chain, Walmart, that's done really well in terms of performance and continues to be low. Oil companies, metal companies have done phenomenal well in terms of dividends, in terms of the returns on the asset. So yes, a large pool of capital gets allocated towards technology stocks, including things like quantum computing, which are the new age stocks, and privately placed money with things like Perplexity, etc. So I think the theme continues, but the thing is that you can broad-based. You got Korea on one side, you got Japan on the other side, you got Taiwan on the third side, you got US, which is really doing extremely well at this point of time, and not necessarily just the semiconductor stocks, including the banking stocks of US you saw really flew at the end of the day. So I think, all in all, the end of the day, each economy responds differently to what's happening in the Gulf War or even before the Gulf War. The US, Korea, Taiwan, outperformance was before the Gulf War, not only after it. And the key, and rupee had to go down, so you get the natural uplift of that. So I think it's just not about valuation at this stage. There is enough firepower in those economies to look at different segments, including defense, for instance, metal, for instance, at that point of time, then just say ki only there's a one pony horse called the AI-driven chip stock. They're good, we hold them, but it's not necessarily that this whole market is just that and nothing else.
Okay. Ajay, in which case, the follow-up that I have is, the metal producers in India or the metal companies in India would also benefit with the base metal prices going up selectively, right? I mean, copper prices going up should benefit Hindustan Copper or vice versa, some of the others. Are the valuations prohibitive in the Indian metal space, or do you find favor here?
See, we are continue to hold non-ferrous. So, we are biased because we've been holding it for years. So we are biased to that. But because, not only the fact that, valuation wise, because rupee is falling and these products get indexed with what's the global prices. So they get a natural uplift on price. The key is they are monopolies. You can't create a zinc mine overnight. You just cannot do it. You can't create an alumina mine. It takes you 10, 20 years to do it. So, there are only 2-3 companies in India. That's the best part for investors. There are only 1 or 2 companies which are in the non-ferrous mining segment in this country, okay? And therefore, you can't go wrong in them. Yeah, you need to be patient with them. And you've seen in this year, for instance, which is we're looking at last 12 months, the mining company has been one of the best performers in the market at the end of the day. So I think you can't go away from the fact that monopoly mining companies in India will make tons and tons of cash. And as time goes by, government gets more desperate, new materials start to come in, silver prices, see what's happening. We are not naturally a copper producer at the end of the day. So we are very small in copper at the end of the day. But for other minerals, I think non-ferrous, we are pretty good, and it's a good place to be for years. Do not look at it for months, because you'll get fantastic dividends at the end of the day. Look at 5 years for the largest Indian mining company. He's paid off for 10 times of the share as dividend alone.
Interesting. So I've heard it said, Ajay, that anything that comes out of the earth is something that you should look at. And your point on mining, therefore, is well taken. The other question that I have is on coal, though, because from India's perspective, there's one thing that has emerged from this supply chain issue, particularly on energy, is the need to have alternatives. And if coal gasification, etc., has to come through, is there an opportunity to play that in India?
You touched a raw nerve. You're at a raw nerve. We knew about coal gasification 5 to 10 years back. Oh, look at where India is, look at where China is. And there is no choice but to do coal gasification. We should value coal because that's our lifeline. Problem is not the coal. Problem is there's only PSU company which does coal. And if you ever travel to the coal mine, which I did long back, you see the amount of wastefulness and the bureaucracy and the lethargy in their system. You go to their office, you will feel miserable to just enter the office only. Forget even going to the mines and the conditions. Problem with coal in India is that it's a great place to be, except it's a PSU entity, unfortunately, and which has not been the most efficient entity for decades at this point in time. Wastefulness, theft, labor problems, cost escalation, you name the malady, it hits there. So it's a great place, but how do you invest in a PSU, which is absolutely inefficient company?
So if you're not playing coal directly, is there an alternative or somewhere along that supply chain possible to play in that energy transition? And I know that this is a theme, Ajay, that everybody's spoken about, but are there still opportunities that you see?
You know, if you were coming into the earnings cycle today, you have no chance but to look, you can't look back and say, listen, I've lost all opportunity. There will be always opportunities. Power sector, I still believe it. We are invested heavily. It represents the greatest opportunity in India for the next 10 to 20 years. And for the simple reason, whatever we do, AI, no matter who uses it or does not use it, or even your laptops, the power consumption is going to go up dramatically. You can't set up power plants, overnight. We've done good job with renewables. We've done good job with thermal. And therefore, at the end, and there are only 4 or 5 companies at the end of the day, so it's not such a 20 companies competing like cement. So you got to be patient. That's the whole game, is about being patient with power industry. In 3 years' time, you'll get a very healthy return. And the good part, let me tell you the good part. There are enough ETFs available for power sector to invest in. So you don't have to take company risk at this point of time. You can take just a sector risk, go for the ETF and invest there and hold there and be there. In domestic economy, I think power represents the one place after stock exchanges which kind of give you the perfect place to be there and run with the economy. Good or bad can happen in the Gulf, or at the end of the day, oil prices go up. You need more of thermal power generation in this country. So I think it's a good place, safe place. Diversify your risk. Don't be company specific. Go to the ETF, buy it, and go to sleep.
Okay. Interesting thoughts there. Ajay, the other piece is what's happening to pharma and chemicals. Selectively, some people believe that selectively, some of the chemical names might be turning after 4 or 5 years of a hiatus. And we've seen some blockbuster numbers by CDMO companies. Newland today, Laurus the other day, I think Piramal, if I'm not wrong, also delivered, or maybe they're yet to, but I think the last quarter was decent. What's happening in this cohort of stocks? Do you think they are worth researching and investing at all?
Well, I own them, so I'm biased. Okay. Yeah, the answer is yes for the 2 reasons. I think one reason, the answer is simple, is rupee dollar. All these CDMO companies, and I'm excluding pure chemical companies. I'm talking of really the contract development and manufacturing on the pharma side. Not even the agrochem too much, because agrochem has its own set of issues, so let's leave it aside. Just focus on the pharma. I think it's a great place because, one, the rupee is giving you the benefit straight away. A 2-year forward cover today is over 100 rupees a dollar. So, you don't do anything at the end of the day. You got a 6% upside sitting right there in just the exchange rate. The second part is that these are, you shouldn't get carried away by buying these companies at this point of valuation, because these have got the thing called lumping. Okay. You see Laurus, you see anybody, you saw 2 bad years of performance. When the capacity gets built up, it takes 3 years for product validation, and then you see the uplift. So these are not like a generic consumer company where you'll see natural quarter by quarter movement and all. So good industry. India is very strong in CDMO. Science is good. Our exports are very good, let me tell you. Our plants are A quality. You got to be there, but you got to be, again, patient with these and if you want to invest 100 in CDMO, only start with 20. You will get bad quarters and chances to buy these shares. If you look at Newland, you just mentioned, it had a disastrous last few quarters and you saw the share price. You will always get opportunity to buy these companies in a bad quarter, and they will have a bad quarter. Let me tell you, not because they do badly, but once a product goes for approval, then it takes 3 years for the next big order to come with the same product. So your factory could be even idle for 1.5 years. So it's not the company is bad, it's the nature of the beast of the business. But you got to be patient, steadily keep buying 2, 3, 4 companies and build a portfolio in CDMO. If you represent in India, apart from auto, CDMO represents the biggest opportunity India has in the global markets for export. And I think government will do or should do much more than that. So you got to be there, my friend. It's the best place India has. If India has a chance to do anything great in the world, it's a CDMO.
All right, on that very optimistic note, Ajay, thanks so much for taking the time. Always
You're
a
welcome.
pleasure.
Have a good day.
Absolutely, I will. Thank you so much. All right, let's talk about the markets. And it seems like it's a little wobbly, and understandably so. We've once again slipped into the red. That initial uptick has been sold into the benchmark, now testing 23,300 on the downside. And the broader markets, let's pull those up. They're looking relatively better. Just about holding out in the green for the mid-cap index. The small-cap index trading with gains of about 0.2% or so. Let's look at the breadth, because you've got about a half an hour that is spanned out, and let's look at where the breadth is. It's closed just a tad, but the advances and the declines now narrowing the gap between them. And, you know, we might as well take a look at the sector picture as well, whether that picture has changed, because there was a fair bit of green on the screen at the start of trade, but then you've seen quite a few stocks and sectors that have now dropped into the red. So, for example, the PSU banking index was just about flat at the start. It's now trading with cuts of about 1%. You have auto that's down about 0.6%. You have the Nifty Bank as well that's losing as much as 0.5% or thereabouts. Metal holding out with gains though. Let's talk about an interesting stock. We've got CMPDIL, which is in focus as a Coal India entity. And the focus is, of course, shifting to its FY27 growth roadmap, which includes the margin recovery plans and the efforts to diversify beyond Coal India. We've got the management joining in to speak about the numbers. Before that, let's go across to Sharad to speak about the context. Sharad?
Well, yes, the company has recently listed, and of course, they're having a high revenue dependency on Coal India. That's roughly almost 67 to 70 odd percent, and they provide support services on the entire spectrum of coal and mineral exploration. Now, of course, they're having a 61% market share also in this mining consultancy, and they are backed by Coal India, and it's a mini Ratna part 1 as well. Apart from that, first 2 weeks ago, the numbers also came, and they were showing a good strength, especially on the top line front. And recently from its IPO numbers also, if you look at, the stock is up 35%, and recently the rally was there for the month. In the last 1 month, the stock is up 18 odd percent.
Mr. Chaudhary Shivraj Singh, who's the Sharad, thank you for that, of course. Mr. Chaudhary Shivraj Singh, who's the CMD of CMPDIL, joins in right now. Sir, thanks so much for taking the time out. And at the outset, I'd just like to maybe ask you about how you see the broader year gone by, because strong growth for sure in FY26. Is that the sign of what could happen in the year to come or the years to come?
So this we have been telling during the roadshows and previous interviews also, that CMPDI has a lot of opportunities ahead upcoming, not only because of the expansion in coal production and exploration services that are required, but also beyond coal and beyond mining. So all those opportunities that are upcoming before us provide a strong momentum for our growth. And whatever growth we achieved last year, we are very confident to better it. So this year we will be able to achieve what we have been promising in previous interviews.
Sir, sorry, so just trying to get that straight. I mean, your exit run rate is an 87 or a significantly high revenue growth bump up. You are saying what you did in FY26 over FY25 in percentage terms, you'll do better than that in percentage terms in FY27 or FY26?
Yes, so the overall year growth in revenue was a little over 10%, and this year we are very much confident of making it 15%. So that kind of revenue growth we will be able to see.
And okay, and what is the flow through to the bottom line as well?
So bottom line, as we have been telling, that it will be similar to what we have been achieving in past 3 years. So bottom line will also be growing. In fact, our bottom line grows better than our revenue. Exception was the Q4 of the last year because of increase in expenses that came for one time in Q4 for employee benefits.
Sir, the dependency on Coal India, understandably, because of the size of the entity and the importance of it, is quite considerable, 67% at this juncture. Is there a plan to reduce that dependency? How will that take place, and what is the trajectory that you anticipate this will follow?
So first of all, we are a subsidiary company of Coal India. So of course, the Coal India job is with us. And coal sector is the largest one among the minerals in India. So that is why the highest work is in coal for CMPDI. But at the same time, as we had promised that we will be diversifying more into other sectors, not only minerals, which includes RE and critical minerals. We are also diversifying into solar and as well as beyond the mining sector and in fact beyond geographies. That was our promise, and we are working diligently to keep that promise.
Sir, maybe we spoke about this briefly, but I would like if you can give us some details, because I think everybody is trying to figure out where is it that each country will get its own ownership of rare earths and other key minerals. Now, you are in the pole position to be able to opine on that. I'd love for you to tell us in detail, sir. One, as a business opportunity for you two, but two, as an opportunity for the nation. Where are we on that path? Because we hear sporadic announcements of some companies, 1 or 2 or 3 companies, are trying to make some forwards on the rare earth piece, but nothing material, if you will, at least in the public eye.
So even if you see the reports from US Geological Department, other countries, India is supposed to have 5th largest rare earth reserves. And rare earth has now been opened, and in fact, this current allocation of rare earth blocks. So there is a lot of opportunity in rare earths for India. Somehow the exploration has got delayed, and now it's coming up as a major activity. So rare earth potential is there, and of course, government has identified institutions for processing technology development also, and CMPDI is partnering with these institutions. So we have a good opportunity in rare earths for CMPDI as well as for the country.
And how large is this relative to what has already happened, sir? I mean, let's say in FY26, if we have taken baby steps, do we materially expand that rare earth mining, identifying mining, exploring opportunity in FY27, or is it still going to be a slow start?
No, this year, in fact, it will be more, and more blocks will be coming up. So we will be taking part in all these auctions also. So this is going to be a good start that we made previous year, and we will build upon that, and it will be a great start again in this year.
Mr. Singh, just a couple of questions to understand this. You mentioned that it's believed that India has the 5th largest store of rare earth. The problem as we understand it is the ability to process it. So you talked about partnering with entities that will process this. Now, expected that you would have to set up capacity for this to take place, right? So what would the timelines be for those capacities to be set up? If you can give us a sense of how quickly this will be ramped up, and what will your revenue sources be from that and the trajectory thereof?
So as far as CMPDI's revenues are concerned, these are coming from the exploration services and the mining technology. As far as processing is concerned, done MOUs with and they have developed centers of excellences in some of the institutions already identified by government for development of processing technology. And we, as the R&D institution of Coal India and Ministry of Coal, we are taking up those projects with these centers. So processing technology development may take some time, but of course we are on the job. The centers are working day-night for the development of this technology.
It would help
by
to...
the time exploration and mining is completed, I think we are confident that some technology development should happen.
Sir, it would just help a little bit if you define, if not exactly, but give us a range of what some time would entail. Are we talking about months, or are we talking about years now? Are we talking about 2 or 3 years? Can it be done before 2030?
So I think that 2030 target will be good because it cannot be done in months. The exploration itself takes more than 2 to 3 years time. So by the time we complete exploration in these blocks and mining is done, it will take about 5 years to mine out these things. By that time, we should develop that processing technology.
Okay. Would you anticipate, sir, one last question from mine at least, would you anticipate that that's the nature of growth for your business over the course of the next few years, if you will, that you grow in 10, 12, 15% kind of a range, that's low, steady, great rate of growth? Or could there be a J curve some point of time?
No, we already promised that we will be growing by 15%, in fact, 15 to 20% in next 5 years. So that is our target, and we are working very diligently to keep that promise.
Are you saying that you have said that you will grow 15 to 20% CAGR, compounded annual growth rate, over the next 5 years?
So CAGR will be 15% if we take from previous year, and there will be, in fact, some moments towards 2030 that we will achieve 20% growth.
All right. Mr. Singh, exciting time, certainly. Thanks so much for taking the time. Pleasure speaking with you, and wish you all the best to achieve those targets.
Thank you very much.
All right, let's turn back to earnings. And Dr. Reddy's Laboratories is seeing a little bit of a volatile day in trade. Contrary to expectations, it has actually opened in the green, and it's more or less holding or treading water at this point. Let's talk about those earnings. Let's head across to Varsha and then bring you a slice of the chat that we had with the management. Varsha?
Well, thank you so much for that. Overall, yes, a weak set of numbers was expected for Dr. Reddy's, and this is because of the Revlimid, the sharp fall in the US business, and of course the multiple one-offs, and margins also saw a big hit. India, emerging markets and Europe continue to grow strongly. Now, the Revlimid price correction plus one-time shelf stock adjustment had a hit of around 453 crore. Even CAR-T and other R&D discontinuation led to impairment charges. New labor code impact and one-offs also impacted margins. The margin impact that you're seeing was due to mixed change, pricing pressure and one-offs. Now, onto the segmental story. Well, global generics was down 13%, North America sales were down 51%, emerging markets was strong, though Europe was also strong, and they're also exiting some R&D programs. The focus has been shifting to complex generics, biosimilars and consumer healthcare, and the strong push is also on the branded business in India and emerging markets. Overall, a weak set of numbers, but again, the company is expecting double-digit growth when it comes to ex-Revlimid revenue, and they are expecting to have that 25% margin back in FY27. And semaglutide and biosimilars are the next leg of growth for the company, and hence maybe the market is pegging on that. But I did speak with MV Ramana, the CEO of Global Generics at Dr. Reddy's, on what were the key drag beyond Revlimid which has caused the revenue decline that we are seeing. Do listen to that chat. There was a revenue decline year on year, and Street was expecting this. But beyond Revlimid, what are the biggest factors behind the weaker than expected top line, if you could help us with?
Yeah, sure. So we had, apart from the lower sales of lenalidomide, we have had a one-time impact of shelf stock adjustment. We've also had an impact in terms of one time on the VAT of one of our markets, and an adjustment for eptilagemod, which did not pass the trial successfully. So these are, let's say, one-time events that have impacted the Q4.
Right, got that point. Also, the US business, has historically been a key growth driver, but pricing pressure and competition are clearly intensifying. Are you now, seeing what I would say the structural revenue pressure in base generics, or are we entering in another tougher pricing cycle when it comes to US generics?
So in terms of the price erosion in the US, it has been constant. But if you do look into the growth that we see in Dr. Reddy's, and even if you look into from a point of Q4, you see that Europe, India, and emerging markets have demonstrated a healthy double-digit growth. And when it comes to the US that you spoke about, we've already started to launch new products in Q4. And at the same time, we have a good number of product launches that we are scheduled to launch this particular year. So aspiration, of course, is to continue to grow the base business double-digit in FY27. While we continue to grow the base business, we are building the capabilities in order to deliver on peptides, in biosimilars, in innovation, as well as consumer health.
Right. And so, there was a pressure in margins as well. Now, while there were one-offs, investor would still worry about the magnitude of decline that, we have seen. How should one look at the underlying, margin trajectory from here, say, maybe FY27 or FY28? How is EBITDA margin looking like?
So if you see the Q4, the shelf stock adjustment did take the margin below, but without that adjustment, we would be at about 48%. But our aspiration would be to be in the place that we were, between 50 to 55%. You would see that the new product launches across all of the markets, the growth of the branded business, both India, emerging markets, and the consumer health, will continue to ensure that we are in that range as far as the margins are concerned.
Right. And sir, if you could also, highlight on the EBITDA margin, if you could, help us with that ballpark range that you're expecting.
And what you would see on the EBITDA margin, that the base business profitability is hovering around 20%. And then when you add products like semaglutide, or when you bring in additional BD opportunities, aspiration is to get to the 25% mark. So we have consciously worked on the base business EBITDA, both through the productivity measures to looking at our costs, but at the same time also growing the base business across multiple markets. And as a consequence to that, the base business profitability is around the ballpark of 20%. And whatever we will do with the special products and BD should help us to do better and to be around the 25% mark.
Got that point. Also, sir, the discontinuation of CAR-T related program, is a significant strategic decision that you have taken. I mean, what change? Was it economics or competition intensity or execution complexity? Because, why I'm asking this is because, investors often value Dr. Reddy's for, balancing generics with innovation bets. Now, after the CAR-T exit, how should one think about the company's innovation roadmap going ahead?
Sure. So innovation is a very key part of the Dr. Reddy's strategy. And today, both in India and emerging markets, we have several products that we've already launched and several that are in the pipeline, either in the form of getting the clinical and the regulatory approval or in the process of getting into the market. So innovation is core. And as we had spoken earlier, in the therapeutic areas, our aspiration is to bring in the future standard of care while we continue to offer the current standard of care. For us, CAR-T was about prioritization of where we spend our R&D, and looking into the timelines, it was more a prioritization call. But in terms of our journey on innovation, this will continue, and we will bring in more new products, not only in FY27, but for the years to come.
Understood. And so, inventory levels and working capital have also increased during the year. Was this driven by supply chain preparedness for upcoming launches, including GLP-1?
Yes. So this was to prepare ourselves for the major launches. We have several launches that we have lined up, both in the US, in Europe, as well as in emerging markets. And we were also kind of preparing ourselves with some of what you see in the Middle East in order to ensure that we provide our products across all our markets. So this is, in that sense, a temporary increase, but otherwise for the rest of the year, we expect this to be well within the control.
Right. And so now, the major erosion is largely behind. Now, what replaces Revlimid or lenalidomide as the next profit engine?
So if you see, there are two ways to look into this. One, of course, is on the new products. There are two kinds of new products. One would be the special products like semaglutide or abatacept, and other is a regular set of new products, and we have quite a good number of launches that are coming up in US, Europe, as well as in emerging market. The second, of course, is the inorganic opportunities that we will seek to bring in more new growth into the organization. So I think it will be a combination of both that would help us to get the new product engine delivered to our top line and bottom line.
Right. Speaking of SEMA and GLP-1 opportunity, how big can this become for your company maybe in the next 2 to 3 years? What is the revenue contribution that you're expecting from GLP-1 products?
So if you take the GLP-1, if you take the SEMA, today we have launched in India. Very soon we would be launching in Canada, and we have filed this product across many markets. And as and when we get the approval, post the patent expiries in those countries, we expect to launch the product. So GLP, if you see, as far as emerging markets are concerned, the three kinds of markets. There are markets in which there has been supplies of the GLP-1. There are markets in which there has been partial supplies, not to the full potential of the country. And there are many countries in which there has been no supplies as far as the GLP-1 is concerned. So we expect to serve all the three markets. And both in 27 and 28, as the markets open up, you would see that the product of Dr. Reddy's would be available in those markets.
Right. And so also, talking about the biosimilars, can this structurally improve margin profile versus the current base business? Why I'm asking this is because a lot of companies are actually entering into biosimilars, and, it is kind of becoming a crowded market as well. Just wanted to understand your outlook when it comes to this segment.
So there are two ways to look at biosimilars. One is the fact that Dr. Reddy's has got the front end and the market access, both in emerging markets, in 45 emerging markets, Europe, as well as in the US. So we become a source or a partner for companies who don't have the front end to partner the product with us. And second is when you look into the portfolio of products, you will have certain products which are really large ones, which many companies would try to get into that segment. But there are also products like abatacept, which is relatively less amount of competition. So it would be about how you develop the portfolio in which you have a certain set of products which are less in terms of competition. Not only you work with your own portfolio, but we work with partner portfolio and leverage the front-end capability that we have across many, many markets.
Right. And so, lastly, now, what is the real growth rate X one-offs that you are building for FY27? I don't want the exact number, of course, but any, ballpark range if you could help us with.
So, aspiration, of course, as I said, in spite of the fact that we would not have the Lina, we would be able to grow the base business in double digits.
Well, that's Dr. Reddy's, arguably one of the stocks of the morning. A bit of a surprise, really, for a lot of people as to how that stock is done, because people anticipated the stock could start about 4 to 5% lower. It hasn't given that opportunity at all. Okay, before we take that break, let's talk about what mutual funds have done in the month of April. It's gone by. We are on 13th of May, but it would help to try and understand what is it that mutual funds did in the month of April from a sectoral perspective, as well as from a perspective of what they did with individual names. So let's get those graphics up on the screen and show you what the template was. So the allocation in capital goods increased the most to about 8.8%. This is the highest in number of months, by the way, that MFs have done. And in terms of the other sectors which have done, wherein there has been a bit of an increase in allocation, capital market companies and NBFCs. There were some numbers here. I think some 33 basis points and 56 basis points. I mean, that's what happened in terms of the uptick in those sectors. Okay, we move to the declines. Let's talk about that. The allocation declined in IT to 8.3%, followed by private banks. But private banks, the allocation may have gone down, but still there was fair degree of capital that flowed into those private banks as well. This is mutual funds as an entire basket, right? Now, what did they do in April in terms of large cap stocks? By value, the top stocks that were bought, ICICI Bank, SBI and Eternal. So that is one set of names. And what is it that saw some exits? Reliance, Wipro, even Bajaj Auto, very interestingly. So you've been wondering why Reliance has been getting hammered. I think one of the reasons is that. On terms of buying the mid-cap space, Poonawalla saw fair degree of buying, United Spirits saw fair degree of buying, and interestingly, ITC Hotels saw fair degree of buying in the month of April in terms of allocation that was allotted. What saw exits? GE Vernova TND, Persistent Systems and M&M Financial. As you can see, both in the large cap and the mid cap space, there is an IT name. What about small caps? The most resilient cohort, if you will. The buys by value were IGL, Delivery and Angel One. No surprise that capital marketplace came into being there, and Angel One especially because it delivered a fairly robust set of numbers. What saw exits is Manappuram Finance, Vardhaman Textiles and JB Chemicals. Now remember viewers, this is the overall buying that mutual funds did. In some of these, if there was selling done by FIs, then the stock may not have rallied. But at least now you know where is it that the domestic institutions have made the most purchases or most sales in the month of April. This data, of course, is courtesy Daulat Capital. They put out a research note and I have borrowed some aspects of that note to give you this perspective.
Very interesting, Neeraj, and some of those names certainly stand out. Of course, at individual mutual fund levels also, there have been some interesting updates. We saw yesterday, of course, when the fact sheet of Parag Parikh FlexiCap Fund came out, that they have deployed incrementally some cash, so they're down to about 15% non-equity. But remember that they have 4% in REITs as well, so it's not all pure equity. It's quite interesting to look at, right? They have increased, for example, in ITC, in Bajaj Holdings, and a couple of IT companies, including Infi and TCS. We have to step into a very quick break. We'll be back on the other side with markets and a lot more. Stay tuned.
केसरिया से मन जोगी
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the story.
All right, welcome back. You're watching India Market Open, and it's been a choppy sort of a day for the equity markets. We're just about hovering around that 23,400 mark, and I wonder whether that changes over the course of the day. For now, though, you have the broader markets that are holding out. In fact, they're at pretty much the high point of the day, if I look at it. No, actually, they've lost a little from the high point of the day, but they've rebounded from the low point, certainly. We got Vikas Prasad, who's a portfolio manager, Asian Equities, M&G Investments, joining us on this leg of the show. Vikas, thanks so much for taking the time. Good morning to you from where we're at. What would you say, and it's been a little while since we spoke to you last, so the question that I have for you is, do you see a situation where fundamentals have shifted and you've had to adjust your expectations for FY27 when you think about corporate earnings? Because other people have adjusted them lower and some are pegging it at the single digit or high single digit growth in FY27.
Hi, good morning. It's good to be back. A lot to talk about. Yes, in the short term, I think we necessarily need to, in aggregate, reduce our earnings expectations. But what has been encouraging is the dispersion that we've seen in the markets, opening up opportunities for stock pickers. But also, we have seen accelerated growth, especially in the small and mid-cap space, among the names that we've been looking at, in some of the defense names, in some of the precision manufacturing companies, in diagnostics and healthcare services, where we are overweight still. But we have seen some causes for optimism in some of the BPOs. Those names have gotten hammered in Q1. IT services and FMCG are a different story. Perhaps we can talk about those later. But it remains a stock picker's market for long-term investors. And that is what is exciting for us about India today.
Okay. So I want to delve a little deeper into a few of these pockets. And Neeraj will come into maybe some more stocks that I might not touch on. But BFSI as a cohort, IT as a cohort, these have seen significant selling pressure, not just because of fundamentals, but also because of the kind of FI ownership and the fact that these are large liquid stocks that have been hammered and sold into because the view on the country as a whole has shifted. Is there an opportunity, or do you think that you would give it a pass for now, wait till things settle at the fundamental level?
Well, to that group, to that pair, I would also add FMCG, large liquid, not as well owned by foreign institutional investors, but also these are not the same companies. They don't have the same growth profiles that they did once upon a time. Now, to return to the banks, we are more lightly positioned in private banks than we have been in over a decade, since 2013, actually. NBFCs we've added over the past few months. And in IT, heading into earnings season, we'd actually reduced our holdings further. We've been underweight for almost 2 years. We were underweight heading into earnings season. I saw no reason during the most recent earnings season to increase our holdings there or to reduce those underweights. And so our positioning there is lighter. As you mentioned, FIIs hold these names. In absolute terms, the growth profiles are different, but also relative. India is a very different market from when the private banks used to be the leaders in the market, and the IT services as well. There's nearly 7,000 listed companies now. We spoke about this earlier, that India might not have the Mag 7, but it has the Mag 7,000. So that's very fertile grounds for long-term active investors, and there are so many choices. It's no accident that from the March lows, we have seen such a strong bounce back in the small and mid-cap space. The pace might not be sustainable, but the direction we feel is.
You're hunting in the broader markets, but I want to ask you specifically about the private banks, because you mentioned that you're at the lightest in quite a while. I'm wondering why that is, because some might argue that if the interest rate cycle has bottomed and there is an expectation and people penciling in the possibility of 2 rate cuts going forward of 50 basis points, then one can argue that the net interest margins might have bottomed out and could head northwards, and the valuations are not challenging.
Valuations are not challenging. They have fallen. Same thing for the IT services sector, but that's a different situation. On the private bank side, well, if we start with financials more broadly, NBFCs, we own more of those now. We have taken some profits there also year to date, but we own more of those now than we have in the past. And if we look beyond the large private banks, we see better alternatives. The public sector banks, also, we have some exposure there. given some of the earnings, we're not surprised by how those names have traded. But on the private sector banks, it's an absolute call. The growth profile has changed. While the credit sector, the system credit is healthy, the names might have bottomed, as you mentioned, but it's also a relative call. We're seeing better opportunities elsewhere, healthcare being one of them. Healthcare broadly defined, domestic pharma, dialysis, hospitals, healthcare services. So that's the exposure that we might have had 3 or 5 years ago in the financial sector has moved to healthcare and precision manufacturing and defense, and then some. And I don't see that changing in the near term.
Vikas, you have a great perspective on this sitting where you are, and that's why I'd love to know. Every update from a large language model company, be it OpenAI 2 days ago, or for that matter, or day before yesterday, or Anthropic as it has done consistently, leads people to believe that there's one more death knell in the IT services space portfolio. Companies that we speak to, IT companies that we speak to, naturally so, but say that an acquisition, a small acquisition here or there, or an announcement doesn't kill the IT services business model, because that will stay. You need IT services to deploy AI across businesses, and banks, healthcare, etc. are not going to go the AI way at the drop of the hat. Is the market too pessimistic on the prospects of IT service companies, or is this a realistic reaction to that cohort?
Well, there's a few things to unpack there. One is, I've been investing in these companies since Y2K. And one thing we should give them credit for is over the past quarter century, they have reinvented themselves again and again. They have come back as the leading companies do. And in this space, they have done the same thing. I do think that the pressures on the businesses now in aggregate, there's some dispersion because there are so many listed companies and they're not a monolith. There are many different kinds of businesses within what we call IT services. There will be some winners that emerge, some companies that do incorporate or adapt to these changes better than others. And it's not that we are zero weight all the names. We do have some exposure. It's the net exposure that I'm referring to where we're underweight. But I think these headwinds are very, very real. I don't think the cost structures also are suited for this new generative AI token agentic world that we are in. And over the next, let's say, 6 to 8 quarters, I think it'll be difficult for these companies to adapt, which is why you see, despite earnings that were slightly in line, slightly better or slightly worse, depending on the company, relative to expectations, you've seen a continued derating because the market is still waiting to see how the sector adapts and which companies adapt better than others. Dividend yields are mid-single digits for some of these companies. We're seeing PE multiples that we haven't seen in over a decade, and they still continue to compress. So again, it's an absolute call. The growth profiles are different for these companies. They will remain different, but also a relative call as well. There's so many options in India now. And amidst the dislocations we've seen post EU-India trade deal, US-India trade deal, the budget, the war in West Asia, we see a lot of opportunities for long-term investors. Also, if you put it into the regional context, year to date, in dollar terms, Korea has outperformed India by 100%. Taiwan has outperformed by 60%. Japan has outperformed by 40%. These moves continue to widen, but they're not sustainable. The drivers that made India the best performing market in the world for a quarter century remain largely intact. We'll get through this, the current stresses on the market, and then India should resume its double-digit earnings CAGR in aggregate. And then you have some sectors that will do better than that, and many companies that will do better than that yet still.
Okay. The other aspect is because that a few people are saying that some of the product companies which are in the right space could actually do well. So healthcare product tech companies, banking product tech companies, and there are multiple examples, smaller ones at that, but they've got a huge or a huge sense of experience into how to deliver these, and they will use AI to their advantage, and there the growth might be strong. Could that happen even if the broader IT space were to kind of meander along?
That's fair, and I'm glad you brought that up again, because I didn't address your earlier point about this explosion of AI usage over the next few years in calling for even more IT services in pockets. But that's still small. If you look at the AI revenue, and each of the companies in India will define it differently. If you look at what they call their AI revenue, it's still small as a percentage. It might be growing rapidly. But again, you have the same problem that in aggregate, the revenue base is challenged, the cost structure is challenging, and so you should see continued pressure on profit growth for the next couple of years, perhaps. And that's what's getting factored into the valuations. Now, company specifics, yes, we are seeing increased AI adoption. It's not broad-based yet, but if you start with what the hyperscalers are doing, and 5 companies in aggregate might spend $1 trillion next year. That number 2 years ago was $250 billion. There will be a payoff on that at some point. There will be winners that emerge. And India is not necessarily going to be a net loser in all this in perpetuity. There will be winners that emerge from India as well, in the software space and in the hardware space.
Interesting. Vikas, if globally the commodity players are going to be watched out for very closely, I'm wondering whether you think the metal pack in India is something to focus in on, because you've seen, for example, for the ferrous players, already price increases that have been taken, and any increases on the raw material side, on the cost side, are being passed on very quickly. Do you see opportunities in the metal pack in India?
We do. We have exposure here. Now, we have high hurdles for sustainability. We pay very close attention to companies' carbon footprints, and as you know, the sector is very carbon intensive. So our universe might be a little bit smaller than that of a domestic investor. But yes, your logic holds. It's sound. Over the past month and a half or so, we have increased our holdings in this space where we can. And given the disruptions that we're seeing, it's plausible that the rallies here continue.
So if you were to splice that further, and I understand the restrictions that you might have based on your models, etc., but would you be more favorable towards growth in ferrous or non-ferrous? And if you delve deeper into non-ferrous as well, what are the factors that you see panning out?
Well, we have exposure to both, and I think the outlook is positive on our time horizon for both, given the disruptions that we're seeing across the region, and the ability. So one of the issues that is important is the ability to pass through costs. And when we look at sectors where we're still seeing that ability, this is one of them, both in the ferrous and non-ferrous. And so for the names on which we can have exposure, we do have exposure, and we have grown that.
Okay, because the other question is, at least my final question to you today, what is it that you will absolutely avoid in the Indian market?
Well, it's hard to say in aggregate. I would say where we started, the large cap FMCG names still struggling, IT services names in aggregate still struggling, and in private banks we're holding fire for the most part. We've not gone very aggressive there. So I think the capital that we would have allocated to those names, we have shifted elsewhere. Healthcare is easier, more opportunities there. Defense, precision manufacturing, auto components, a lot of excitement there. And then, of course, it's very stock specific. If you look over the past month and a half, you would be surprised at some of the names that have rallied. Some of it might have been because they had been so beaten up from the September 2024 levels, and there might be some bouncing back. But so many opportunities in India for an investor with a long-term horizon. I think if you stay away from the largest caps and you do your homework and you you bet right and sit tight and you wait for a few years, the absolute returns from here should be pretty healthy in India.
All right. And I look forward to speaking to you about that, hopefully when that starts playing out, Vikas. Thanks so much for taking the time. Pleasure having you.
Always a pleasure. Thank you.
All right, let's talk about the markets. Seeing gains of about 0.25%, but really the interesting talking points are from the internals of the benchmark, because you see that Asian Paints is trading very close to the high point of the day. Perhaps a tailwind coming through on account of Berger Paints results as well, because that stock is up and about 4.3%, top gain on the Nifty 50. Cipla ahead of numbers is trading with gains of close to 3%. Hindalco from the metal pack is doing well. The pair of Adani companies in the Nifty 50, Adani Ports and Adani Enterprises, both trading with gains of about 2.5%. And lo and behold, Dr. Reddy's Laboratories trading with gains of 2%. It just goes to show that Mr. Market knows best. When you thought that it was a little bit of a weak quarter for Dr. Reddy's Laboratories, the focus more than anything else is going to be on the outlook for FY27, which is looking reasonably good. But let's keep the focus on earnings, and we've got a practically entire research team joining in to tell you about what's lined up ahead. Let's start, in fact, with Somit Sarkar, because Bharti Airtel is something that we're watching out for. Somit?
Well, a muted quarter is what is expected from Bharti Airtel in the fourth quarter. Now, if you look at the revenue, EBITDA and net EBITDA, and they're expected to be up anywhere between 1 to 3 odd %. Margins are expected to come in at close to 58.1%, while the net profit number would be 16% higher on a sequential basis. Now, the key numbers that one should watch out for when Bharti Airtel reports, it's the India mobile business. Their EBITDA and revenue are expected to be up just 1%. Subscriber base is expected to come in at close to 37.2 crore as against 36.9 crore in the previous quarter, while the ARPU, that is expected to be largely flat. Now, ARPU is largely flat on a sequential basis, also because in the fourth quarter we had 2 less number of days as compared to the third quarter, and that's the reason the ARPU number is flat. But overall, it's a subdued quarter for the India mobile business, the enterprise business, and also the DTH business. It's the mobile broadband segment, only home broadband segment, that will see a strong growth on a sequential basis on the back of subscriber addition and ARPU stabilization. Apart from that, Airtel Africa has already reported its numbers, and it was a strong set of numbers, and Bharti Airtel owns close to 62.7% stake in Airtel Africa. So some positive rub-off effect of that could come into the consolidated books. Apart from that, the key things to watch out for from the earnings would be how, or the announcement that will be coming in on how they're looking to reorganize their shareholding in the Africa business. Apart from that, what are their plans for tariff hikes? What is the capital expenditure outlay for FY27? Would be the key things to watch out for from Bharti Airtel numbers.
Okay, and once we're done with all of these earnings previews, we're going to have our researchers tell us who they think is going to be the best performer of the three. Let's go across to Cipla first and talk about what Varsha is looking forward to. Cipla is doing well, Varsha, ahead of the numbers.
Yeah, I think Cipla is exactly behaving like Dr. Reddy's, I would say, because over here, Cipla is expected to give a, weak set of numbers. This is, of course, because of the, no Revlimid sales or sales, and number two, their Lenriotide products, which will have an impact because of the import alert in the partner's facility, which manufactures, Lenriotide for Cipla. Now, onto the numbers, revenue is expected to be flat. EBITDA may fall 28%. EBITDA margin expected at 16.5% versus 23% last year, and net profit is expected to fall 41%. Now, the profit and margins are likely to see a sharp decline. Of course, US business pressure is a key drag despite healthy India growth. The key US products, Revlimid and Lenriotide, will have minimal contribution, and high base in the US last year makes the decline look sharper. Unfavorable product mix, of course, will hurt margins for the company. The US sales is expected to fall at $136 million, which is down 19% sequentially, and high value product absence will hit margins for the company. EBITDA margin expected to fall sharply year on year, and brokerages are expecting margin decline of around 820 basis points. Now, lastly, also on the cost pressures, high marketing spend, then freight cost and rising operating costs will have an impact also. And India business is expected to have a good growth, while domestic business is expected to grow 12% year on year, which will support by your pick, which is again Cipla's product, and India continues to offset the part of US revenues.
So Somit is already bowed out because I don't think that he thinks that Bharti Airtel is going to win from the three. So let's see what you and Puneet have to say. Puneet, Tata Motors CV, a few tailwinds were playing out in Q4. Is it set to reflect in the numbers?
Well, most certainly, I think, I've got the edge here because we've already seen the volume numbers come in for Tata Motors CV. It's a 23% growth that the volumes have grown, and it's expecting to show a high teen revenue growth of almost 24,000 crores expected for this quarter. EBITDA will also rise to 13.5%,
as well, with the net profit expected at 1985 crores. So in terms of the volume picture as well as the four numbers, looks set to have a strong results, Tata Motors CV. Now, what we've seen essentially is that there have been some costs which have been impacting the company. So volumes, as I mentioned, has been the key growth driver. LCV category has grown well post GST rate cut, so there's a benefit there. But Q3 had a 1,500 crore one-time impact because of labor cost, integration of Iveco, which was the $4 billion acquisition. So you could see some cost element, a one-time element, which is very difficult to predict, could come into this quarter, but expecting on the numbers, EBITDA margins will grow. Just watch out for the one-time integration cost of Iveco. That could be just one of the spoil sports, but overall, expecting a strong set of numbers and hence probably the winner amongst the three.
Okay, winner among the three. Varsha, you don't have anything else to say to that, right? No, she's not yet. She's already bowed out. Okay, so Puneet is clearly the winner. All right, thanks so much for that, Puneet. Well, Neeraj, that brings us to the end of India Market Open. It's been interesting. I wonder if we hold through with the gains that we're seeing on the screen.
Yeah, it should be very, very interesting and important days for the world economy and world markets as well, as Trump and Xi Jinping meet up. So I think we'll get you a lot of perspective on that too. For now though, we wrap it up on India Market Open. Stay tuned though. Ask Profit takes forward the action on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight.
Welcome. You're watching NDTV Profit. The stock that we're putting spotlight on the back of earnings is V-Guard. Now, it's been a good quarter for the company. Strong growth in electronics business. There were inventory gains in electricals as well. Largely, the beat was driven by these two segments. Consumer durable, however, was weak on account of weak demand. Now, to understand as to what's shaped up for FY26 and what the outlook looks like for FY27. We are now joined by Mr. Ramchandran, who is the Director and Chief Operating Officer of V-Guard, joining us now. Mr. Ramchandran, thank you so much, first of all, sir, for taking out the time. My first question to you is that this quarter was largely driven by electronics as well as the electrical segment. Just want to get a sense that consumer durable was something that lagged on account of weak demand. According to you, how is FY27 now shaping picking up in terms of segment. How do you expect the shift to be like in terms of the mix?
Good morning. And coming to the specific questions that you've been focusing on, fundamentally, the impact of weak summer has been felt primarily in the electronic segment through the underperformance of stabilizer through last financial year. Although Q4 did show strong recovery. As far as the consumer durable segment is concerned, mainly, we are impacted here in fans and air coolers, right, where there has been a significant drag both for the full year, though some relative recovery has been observed in Q4. So that's primarily impacted us. The consumer durable segment has underperformed relative to the other two segments. Mainly driven by the underperformance in these two categories, even though there is a recovery over the same period last year in Q4. Going forward into next financial year, I think it's fundamentally going to be driven by three factors. I think the summer, and how it shapes up. South has responded well thus far. South is 50% of our, nearly 50% of our revenue. And although there have been intermittent showers and, the onset of summer has been interrupted from time to time. However, at an aggregate level, summer has performed well. When it comes to non-South, I think, March and, even April, summer has been muted, particularly in North and East. And starting May, we are starting to see the signs of the impact of summer and recovery in demand arising out of that. I think at an aggregate level, that being said, given that last year's summer was bad, we should be able to do a decent job as far as the current financial year is concerned, even notwithstanding a strong summer. So that's the background on these categories. I think the impact of that on fan and air cooler will continue to, be challenging, till the recovery is fully observed.
Fair. So then, Mr. Ramchandran, your guidance with regards to a 15% growth in FY27, where around 10 to 12% will come from volume growth, is still sustainable considering that consumer durable margins are still weak. How is the margin guidance that you have internally kind of penciled in for FY27?
So I think the volume growth we are expecting to sustain into next financial year. I think as far as the value growth is concerned, 2/3 of the input cost increase has already been transmitted into market. I think almost 70% transmission has happened by end of April, and the remaining price transmission should happen in the rest of the year. I think the underperformance, in terms of margin, has been more, in respect of EBITDA rather than in respect of gross margin, because gross margins have held out even last year. Because of weak revenues in some of the summer categories, the EBITDA performance has been impacted as there has been a shortfall in throughput.
All right, so that was, of course, the management of V-Guard. Let's try to pull the stock up and see as to what it's doing in trade right now as we speak. There you go, just a 0.4% of an uptick is what we're seeing. But let's start taking your stock-related questions, as this is Ask Profit. And before we start doing that, a quick check on how the markets are panning at the moment. Let's try to pull up the Nifty 50 and see as to where it's trading at right now. The Nifty 50 is up by about 0.4%. Just a range-bound trade is what we are seeing of about 87 odd points. The Bank Nifty also up by about 0.4% in tandem with the Nifty 50 in that 53,700 odd levels. Let's try to pull up the heat map as well of the Nifty 50 and see as to how things are looking like there in terms of where stock specific action goes. You have Asian Paints topping that chart, of course. And this is probably on account of a sentimental move that's coming from Berger Paints, because Berger Paints did post a strong Q4 growth in terms of, and largely led by price hikes, of course. A 4% move on Asian Paints, followed by Hindalco, Tata Steel, as well as BEL. Both Adani Twins also doing fairly well. Adani Ports as well as Adani Enterprises up 2%. JSW Steel, Kotak Mahindra Bank are some of the other top movers. On the flip side, you have Power Grid, which is down 2.4%. NTPC down 1.4%. This is one of the stock where mutual fund also sold a lot in the month of April. Eicher Motors, Bajaj Auto, Titan are some of the names that are also down in trade today. Let's try to pull up the broader end of spectrum, the mid cap 150 and the small cap 250 as well. And see as to what that is indicating in terms of where the broader markets go. The mid cap 150 is up by about 0.8% and the small cap 250 is also up by about 0.8%, slightly doing better than the benchmarks. Quickly, the BSE 500 before we move on to our guests. The BSE 500 largely very stock specific in terms of where either number goes or news flow goes with regards to what the government has said today in terms of duty hike for gold. And on the back of that, we're seeing downtick in counters like Kalyan Jewellers. But on the flip side, you have Embassy Developers up 9.3%, IIFL Finance, of course, on the development of that dispute being settled, up 9% as well. SAIL, Mishra Dhatu, Berger Paints are some of the names that are doing fairly well. So that's with regards to, of course, where the markets go. But let's start taking all your stock-related questions. And on this side of the show, we're joined by Vaishali Parekh, Vice President Technical Research at Prabhudas Lilladher Capital, and Girish Sodani, co-founder at Ensure Capital, joining us now. Welcome to both of you, and a very good morning to the both of you. The first question that we have today is coming in from Charan, who is writing us from Bengaluru, asking about Keynes Tech. Wants to know if it's the perfect time to buy the stock or not. If I'm not wrong, today is the earnings, right? So I know, I mean, every technical trader says that, just taking a position before the corporate action is not a very wise thing to do. So I'll take a fundamental view then from you, Girish. What's the view on Keynes Tech?
So for the longer period of time, yes, Keynes Tech is a strong build-ups company as a manufacturing as well as the electronical designs, and going to be expanded in the next 2 to 3 years down the line. But for the shorter periods, obviously, it's not very much advisable. Looking out for the currently as the numbers are going to be released today. So just looking out for the at least one or 2 quarters numbers, then I think the strength will be more beneficial. Apart from that, it's basically a very low debt company. So obviously, it's a good sign for them. But the high betas as well as the executions are not very much clear out. So I'm not very much favor for the longer period of time as of now.
Got that view, Girish, and welcome to the show. Most certainly that they need 1,700 crores of revenues in the Q4, which will be a lifetime high if they do in one specific quarter to meet their FY26 guidance. So you saw a 6% downtick on the stock yesterday. Continues to be one that we are monitoring very closely today as well. But the next question coming in now, it's on Lumax Industries. Murli from Bangalore. He's bought it at 1,651, another high-flying stock here. And he bought it at such attractive levels. I think he must have bought it at least a couple of years ago. Murli, if you get a chance, do give us a call. We'll love to know what you saw in the counter at that time. And he wants to a 12 to 15 month view. Girish, what would you recommend? Just giving also the buying price at such attractive levels, would you just recommend him to hold on, ride the wave?
I think the client can be hold this particular counter. As the revenue growth, we are just expecting by the some around 20 to 22% CAGR. And the operations margins also going to be leveraged by the 10% upsides. So can hold this particular counter.
Okay, all right. So that's the view coming in on Lumax. The next one that we have is on Trent. Gaurav from Bengaluru says that he wants to know the right entry price for Trent from a short-term technical view. Vaishali, a very good morning to you. Your view on Trent on the charts?
So I would say Trent has corrected, and right now it is on a good support level. But seeing the market conditions, I would say keep a strict stop loss of 3,800, and if market stabilizes for some time, we can see this bounce going towards 4,300 to 4,400.
The next caller now dialing in from Chennai actually, and Kunal has a stock query for us. Kunal, very good morning. Welcome to Ask Profit. What's your query?
Good morning.
So I'd like to know if it's a good time to enter Airtel for a medium to short-term view, given that, we have the results coming up today.
Right.
Thank you.
Got it. Well, Vaishali, again, the key pertinent question always, would you trade a stock on the result day? Firstly, give us your view on that, and as well as a medium-term view, if you can, on Bharti Airtel.
So I would say, first of all, we never play results, but purely on technical terms, Bharti Airtel has a good support band of 1760, 1740. So right now, market is a bit vulnerable. So if you are breaking levels, then this support also can be defied, and we can see this going towards 1650 levels. So long term is advisable to start accumulating between the range that I have mentioned.
Okay, all right, so that's the view coming in on Bharti Airtel. The next one that we have is coming in on Vari Energies. Our viewer wants to know if he or she can go ahead and accumulate this at the current levels. Vaishali, I'll stick with you for this one. Your view on Vari?
So I would say Vari also has done pretty well all these days. And right now we have seen a good retracement, and it's on a cluster of support of 3100. So I would say that if this level breaks, then go towards 2800. So currently we are at make break levels.
Got that view, Vaishali. But the next question coming in from Balwant Modi from Rajkot, and he wants to actually know an entry price of Anantraj for the long term. What would you recommend? Is this a good time to enter, Girish? Girish, am I audible to you?
Yeah.
On Anantraj, do you have a view for the long term?
Yes, for the longer term time, obviously it's a stronger view. The revenue growth, what we are expecting by the 50% plus CAGR, almost the companies into the restructuring of the debt, as well as the profitability numbers also, the margins also, improvisations. So for the longer period, yes, but I don't think so that's the right levels the investor has to be entered. The right level is somewhere around 425 to 450 levels if we get the opportunity to just enter that particularly. But the view is completely based on the 1.5 year or 2 year time.
Okay. All right, okay, so that's the view coming on Anantraj. The next one that we have is on Kalyan Jewellers. Tushar from Jaipur is writing in. He says he's holding 500 shares at the current market price. Wants to know whether he can continue to hold, sell considering the hike in import duties. Okay, Girish, I'll take up your view on this one, on the entire pack in fact, and of course a specific view on Kalyan Jewellers as well. The government today has rolled back the import duty hike. In July 24, they had said that they've reduced the basic custom duty and cess, but now it's increased back to almost 15%, combining both basic custom duty as well as cess. How do you think this will impact jewelry companies in the medium term, and of course your specific view on Kalyan Jewellers?
So for the jewelry segments, obviously it's directly impacted for the medium terms. To the basically the short terms, we are just seeing these type of pressures in the next few sessions itself. Like next 8 to 10 days, maybe there will be the pressure in the jewelry segments itself. But for the longer period, obviously there's a huge demand in the jewelry segments, and we are looking out for the next festival season as well as some wedding seasons also coming soon. So I don't think so that this completely a bad impact in these particular jewelry counters. But if someone wants to enter in this particular counter, in this particular sector itself, has to be go into the very installment basis. Like if we talk about the jewelry segment in the Kalyan Jewellers itself, like take an example for the Kalyan Jewellers first. So the revenues are strongly upsides. So we are looking out for some around 40% annual CAGR. The PAT also improvised by 75 to 80%. Earning EPS also very strong. And the profit margins are improvisations from 2.9 to 3.8%. So overall, the fundamentals looks very strongly. But because of these particular news, the complete jewelry segment has been getting beaten. So if you talk about the Kalyan Jewellers, yes, I'm looking out very prospectivity for the next 2 to 3 years down the lines. But you have to go into the installment basis like a 40-30 type of concepts and enter in the jewelry segment.
Okay, all right. Okay, that's the view coming in on Kalyan Jewellers as well as the impact of this import duty hike. We've got our next caller. I think Murli is calling us from Hyderabad. Murli, a very good morning to you. What's your query about?
Yeah, good morning. This is regarding the Shriji shipping. which I am holding it since the IPO allotment. 58 shares at the rate of 252.
Okay.
So I wanted to know, for a long term, is it good to hold on for another couple of 6 months to 1 year?
Okay, because your outlook is for the next 6 months to 1 year, Murli, I'll try to get Vaishali's view on this one, because it's a fairly small company, right? Around 6,900 crore of market cap. Vaishali, this company is into basically logistics that focuses on, dry bulk cargo. But with regards to where charts go, any view?
Yeah, sure. So actually, overall, shipping stocks have been doing very well. And to talk about Shriji Shipping, I think this is in a very good, strong uptrend. So I would say continue holding with a trailing stop loss of 400 rupees. And I think in all likelihood, this can go towards even 500 plus. So in my opinion, this is a buy and dip. 400 is the support. The view gets a bit corrective if 400 levels break, then it would slip to 370. In spite of that, it would still be a positive. Negative view is only below 370.
Well, it is, let's pull up Sagility actually at this point of time. The company reported a decent set of numbers with the guidance also, and I think that's what's driving the momentum on the stock price today as well. We have Srinivas Matapalli joining in. He is the Group Chief Financial Officer at Sagility. Srinivas, very good morning to you. Thanks so much for joining in. It's Puneet this side. Just to start us off, very quickly on what we've seen, that it's been a very strong year for you overall. You had that big acquisition also that's propelled the growth numbers. But barring that, a 15% constant currency growth for FY26 isn't bad at a time where we've seen the volatility. What gives you the confidence of a low to mid-teen growth guidance that you've given for FY27? Is that some kind of order book number that you can give us that shows you the resilience, at least in this volatile time, to continue that kind of growth?
Thanks. I hope you can hear me clearly.
Yes, most certainly. Please go ahead.
No, we are particularly proud of how we have performed in this year. 15% organic and overall 29% including inorganic, I think was a particularly good year. Our order books continues to be strong. Our underlying, propellers for revenue, I think continues to be strong. We have been given a guidance for low to mid, low mid digits growth for the current, FY27. And as I said, all the growth propellers, whether it's outsourcing demand in the health care industry, the requirement for payer cost optimization, all of that remain intact. And I think delivering to this, given our order book of about 570 million, not order book, sorry, our pipeline of about 570 million, I think gives us confidence to be able to deliver to those numbers.
Also, Srinivas, what we've seen, and since you are such healthcare focused, in the US, what has been the current conversations on the ground? Because we spoke post Q3 as well, and just a certain couple of issues that you had highlighted at that time, you had expected them to get solved by Q4. As of now, do you feel that the buoyancy still continues to be there? And with AI, you mentioned that the impact is about 2%. It's slightly higher than what you'd guided earlier of 1 to 1.5%. So how should we look at the AI aspect for Sagility at this point of time? When you quantify that 2% impact, is it that you have to deliver those AI services now and you're not able to charge the client for those services, given that it's a base need for those clients right now, and maybe it's a big opportunity in the future, but right now you see that impact?
No, I think first of all, I need to say that AI for us continues to be an enabler rather than a threat. So I think embedding AI in our operations, helping us drive more effectiveness or efficiency from a customer perspective, I think continues to be the way we look at it. The 1.5 to 2% is what we potentially feel is an impact on revenues. But as I said again, the overall outsourcing, potential and the requirement for cost optimization for the payers continues to be very strong. And as I said, that 1.5 to 2% is factored in our growth guidance of low mid digits.
Srinivas, because what we've seen this year as a whole, and just taking a step back, is that your clients more than 20 million has increased by from 7 to 9 odd. You've also seen some increase in the 5 to 20 bracket as well. What are those additions largely clients which were in the lower bracket which have now been upgraded and you're more catering to them, or is these new client acquisitions and you expect them to continue in the next year as well?
We continue to focus on adding new clients, especially from the mid-market segment. And I think our acquisition in BroadPath has helped us increase the overall numbers to about 82 now. We serve about 81, 82 clients overall. So these are all new additions. We have added about 17 clients in the current year. The net client growth is about 10. So yes, we do continue to add clients. And, any new client that comes in obviously comes in with a smaller number, and we continue to expose them to our capabilities and grow them over the life cycle. So that's the way we penetrate new clients.
Just one last question, Srinivas, because, of paucity of time, we've seen that, you're generating a lot of cash as well, and that a certain amount has gone into their acquisition, as you spoke about for this year. But for the next year, you've been able to generate that 1,000 crore odd cash in FY25 as well as in FY26. And of course, a lot of it has gone into investments as well. Just some perspective of where do you see this number in FY27? Are you still open to acquisitions? And is this something that you'll continue to do in the near term?
Absolutely. I mean, we continue to look at M&As where it fits in within our own interest, right? Either from a capability addition or new client exposures. All of that will continue to be a key focus area. So selectively, we'll continue to look at M&As and balance it with investments in AI transformation, and at the same time see what we can return to the shareholders. This year we have paid overall 15 paisa, or recommending paying about 15 paisa dividend to the clients, to the customers, and we will continue to look at that policy going forward.
Got it. Well, Srinivas, we'll leave it at that. Thanks so much for joining and giving us time here at NDTV Profit. Of course, a longer chat warranted on Sagility as well as what's the outlook for the next year. But thank you so much for giving us time today.
Thank you for having me on the program. We continue to remain very, very confident in our growth opportunities. Thank you.
Most certainly. Thanks so much for joining in. When that was the management of Sagility, numbers slightly soft, but you can sense with what we are seeing on the stock price today, the growth guidance is something that the street likes. Cash flow generation, of course, continues to be a strong point as well. But let's get back to those stock-related queries as well. And if you haven't already, do start sending in on the numbers that are flashing on the top of the screen. The next one's coming in from Biswajit from Kolkata, and he's holding 750 shares of Ashok Leyland at 83. Now he's doubled his money essentially in this point of time, so he's in gains of almost 53,000 rupees. Asking if he can accumulate some shares now, given there's been a correction from that 200 rupees price point. What would you recommend here, Girish? Is it a good time to add Ashok Leyland now?
Yes, definitely can add at particular level itself. And if we're getting the opportunities for the downside of around 130 or 135, then also a very strong positions for the longer period of time. Obviously, he have as an average price is very low, as the investors are looking out for the longer periods. So I'm looking out for the range of around 225 to 250 for the 1 year time now.
Okay, all right. So that's the view coming in on Ashok Leyland. The next one that we have is coming in from Puneet. Saxena was writing us from Ghaziabad, who's a name doppelganger of you, Puneet, and we always think that whenever you're not there, I think you are doing this. But today, it's proved that it's someone else. It's someone else. But so his question is specifically for you, Vaishali. He wants to know the entry price for something like a Fortis Healthcare for the next 3 odd months. He's at least looking at a 5% appreciation. If not Fortis, then Tata Motors Commercial Vehicle or Bharti Airtel. Any of these where 5% appreciation is possible in the next 3 months on the charts?
So I think Fortis is one of the stocks which we too like, and I think this is a good stock of keeping three months as horizon. I think one should buy now or also at a dip, say 920, 900 level is the support level, because what we are looking at, first trading target resistance comes at around 1000 levels, and if it sustains above that, you can look for a target of 1020, 1030. So that's the way I'm looking at this stock, and the trend is strong in spite of all the choppiness that the market is witnessing right now.
Got it. Well, it's time now for the rapid fire round in this edition of Ask Profit. Girish as well as Vaishali, keep your answers as short as possible so that we can take as many in the next few minutes. The first question is coming from Geena. She wants to know if Infosys is a good buy at the current price. Girish, would you venture in post the correction?
Yes, can invest in for the longer, at least 2 to 3 quarters should be there.
Okay, all right. So that's the view on Infosys. The next one that we have. Sorry, you're saying something, Girish?
No.
Okay, all right. The next one that we have is from Sachin, who's writing us from Uttarakhand. He wants to know about Good Luck India with regards to where charts go. If this is a good buy from a short-term perspective, he says he has around 1 lakh of money to kind of trade with, and he's talking about two counters. In fact, Good Luck India as well as Bharat Rope Wires. Vaishali, any view?
So Good Luck is definitely in a strong trend. I would say keep 1250 as a support level and buy the stock because once this gets into new round of momentum, you can look at it at 1450. And the other one you asked me is?
Bharat Rope Wires. Small company comparatively. If you can try to pull the chart up for Bharat Rope Wires and see as to how it's done in trade. Vaishali, if you're able to locate the chart, any view?
Yeah, sure. So I think this too is in a trend. 220 axis. Oh, Bharat Root. Sorry, I don't have this.
Bharat Wire. That's trading around 234.
So Bharat Wire, I do have it. 220 is the support. Already in a trend. If this support is sustained, then 260, 280 would be the next step.
Okay.
Right. The next question, the rapid fire round now on Sterlite Tech, bought at 194 by Raghuram. He's in great profits. Really, should he continue to hold? Girish, a view on Sterlite Tech, if you can hear me?
Yeah. So, as of now, looking out for the Sterlite, there would be the sum around 435 would be the strong resistance level.
Okay.
And if the particularly levels will be crossed, I am looking out for the sum around 500 to 525 levels.
Got it.
For the fundamental perspectives.
Okay, the next one that we have is on Havells India. Long-term perspective on this one. Our viewer wants to hold it for more than a year. Girish?
So if client is particularly hold for this particular counter, so I'm looking out for perspectivity for the 1.5 year timeline, but the fresh allocations is not advisable.
Okay. Is Kalyan Jewellers a good pick, Girish, for the next 3 years is what Siju is asking?
Yes, it's a good pick.
Okay, KC International bought at the levels of 720, 250 shares is what Kumar is holding from Ahmedabad. Vaishali, on the charts?
Average out.
Is it a good time to average into Wonderla Holidays? Our viewers holding shares at 800. Girish, what's the 1 to 2 year view?
So Wonderla Holidays, I am not looking out because as per the geographical tensions, I am not looking out for the very favorable for the hospitality as well as the tourist sectors.
Got it.
TVS Motors, good time to enter today from a long-term perspective. Earnings are to be announced today, of course, but Girish, your view?
Yes, can enter in this particular counter for the longer period.
Got it. PG Electroplast bought at 551. What's a good? Is it a good time to buy the dip, Vaishali?
PG Electro?
Yes. Stocks trading at just sub 500
okay,
now.
yes. Support stop loss 480. Buy with a stop loss 480.
Okay. The next one is from Adil Singh. He wants to know 2 stocks in the healthcare and the pharma space where you can go ahead and invest from a long-term perspective. Girish, any view?
So for the healthcare sectors, I'm looking out for the Lupin would be there, obviously. Apart from that, Marks and Pharma, there's a 2 stocks what we are looking out for the longer period.
Okay.
Got it. SBI for a short term, would you recommend, Vaishali, if it's a good time to venture into the stock?
No. Avoid for now. Wait for 920.
920. Got it. Well, that's the end of the first round of the rapid fire in this edition of Ask Profit. Viewers, but we'll continue all your stock related queries after this very short break, so do stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India's unshakable news habit. NDTV.com is India's #1 English news website.
I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill.
Welcome back. You're watching Ask Profit here at NDTV Profit. For viewers who are tuning in, we're not getting a lot of callers, so do pick up that phone and call us on the number that's flashing on your screen up there. You can ask your queries live, and of course also WhatsApp us on the number that will be flashing in a bit up there. There you go, that's the number. And that's exactly what Sachin has done from Uttarakhand. In fact, we've taken his question. That's exactly what our viewer Pranav has done. He's asking about Tanla platforms, which he's bought at an average price of 539. He wants to know the target price for this one, whether to hold or sell. The stock is currently down by about 0.15%. Vaishali, on the charts for Tanla platform?
I think it is showing some signs of revival. It's just a regular retracement. 480 should be the support, and if it moves above 580, it's back on track.
All right. Well, the next question coming in now. This one, it's on Havels, and our viewer actually is holding shares at 700 rupees. So he's bought it a very, very long time ago. Now it's trading just a tad below 1200. Now Havels has actually underperformed over the last 5 years. So if you look since 2021, stock's given zero returns for investors. And he wants to know if it's a good time to move to Sirma SGS at this point of time, given the momentum. Girish, would you recommend that at this point of time? Because Sirma has also run up quite a bit. What's your view?
So I don't think so. Sirma is the good bet to just shuffle from the Havels. Obviously, Havels have their pressures. And soon we are looking out for the next 1.5 or 2 quarters. There will be the pressures for the all electronic companies because of the US and Iran issues. So I'm thinking that avoid Havels and just move to any of the pharma company. That would be the better ones and the hedging propositions too.
Okay. All right. The next one that we have is on Swiggy. Our viewer Chetan from Dubai is writing in asking whether he can continue to buy more, sell it. What should be the right thing to do for Swiggy right now? He's holding around 200 shares at the levels of 455 that he'd bought in September 25. Vaishali, your view on the charts for Swiggy, what should he do?
Well, it is in a downward trend. Only thing it is that it's in deep oversold. So continue holding now for the stop loss of 240. But I'm not asking to buy for now.
All right. Well, the next question now coming in. This one is on Indian Bank actually, and wants to know if it's a good buy in the short term. This is Dilip asking this question. Vaishali, would you recommend that?
Not so, because it's in a downward trend.
Okay. Another question now. This one's on recent listings. Central Mine Planning and Design Institute, of course, one of the subsidiaries of Coal India, which got listed. The results were largely decent, and if you didn't, you can catch the management. They were on India Market Open today. VV Chandran is actually holding 80 shares of the company at the IPO price and asking if it's a good time to book profits now, or should he continue to hold? Girish, what would you recommend on this counter?
I think it's a listed company, and just as of now, what I am looking at the financial performance. The performance was decent once the profit of the operations or margins or revenues are going to be good, but the PAT is basically a declining. So as the fundamentals look out, the heavy pressures from the international markets is going on. I don't think so. This is a good bet for the holding perspectives. You can book your profit as of now.
The view coming in on CMPDIL. The next one that we have is coming in, and this is on Sula Vineyards. Our viewer, Dr. LVK Raju from Hyderabad, is asking about this counter from a long-term perspective. He's been holding 500 shares at an average price of 312. Now sitting on a loss of almost 47%, so 73,000, over 73,000 loss is what he's sitting at. Wants to know what he should do. Girish, I think, in the last 1 year, the stock has not done anything fundamentally and rather has gone down. And I'm not sure if, FY27, it is a possibility that it could turn into losses as well. But your view overall on the chart, overall on the stock, as to what should Mr. Raju do? Can he continue to hold, book his losses? What should he do?
If the perspective is not more than 5 years or 7 years down the lines, I think there should be a book losses. The reason behind is a multiple ones. As we talk about the Sula Vineyards, there's a two verticals they are looking out. One is the wine, and apart from that, there's a resorts as well as a hospitality business. Both are not working very strongly. Recently, we saw that the revenues growth are still there, but that is not very much sufficient to just put a stock price would be somewhere around 300 to 350 down there. So if the view is not more than 5 years down, so I think they should be book the losses and shift to the another strong counter.
Pawan from Bangalore is asking us a question on Piramal Pharma now, and he's been trying to get in touch with us. So thanks so much for sending in your query, Pawan. He's holding 100 shares at around 169 and wants to know what the long-term perspectives is for the next 2 to 3 years. Girish, would you recommend him to continue holding this counter for the long term?
Yes, for the pharma, as well as we talk about the Piramal Pharma, the strong builders as well as the profitability numbers are very strong. The quarter four, as well as looking out for the financial year 2027-28, we are looking out somewhere around the growth number would be 18 to 19% revenue CAGRs. And the contacts, what were biotech fundings, high-tech growth propositions, and the drug consolidations are still there. So we are looking out something that would be hold for the at least 2 to 3 years down the line. The perspective is very, very strong.
So that's the view on Piramal Pharma. The next one that we have is on Dr. Lalpath. This is from Ashish, who wants to know the short-term perspective on this one and when should he go ahead and enter. Probably wait for some time, or this is the right time. Vaishali, on the charts?
On the charts, you can enter with 1550 as stop loss and look for a target of 1660.
The next question coming in now, it's on LG Electronics. Bhairav actually has bought into the shares at 1480 and he wants to know a 1 year perspective of LG Electronics. Girish, the summer season was slightly more delayed and you've seen that impact on the AC stocks as well. LG has borne the brunt too. Would you recommend him to continue holding? Is the valuation favorable?
So if we talk about for the shorter period, yes, the valuation is very much comfortable. But when we are talk about for the longer perspective of time, obviously there will be a strong bend would be from the margin funds. As we talk about for the completely based on to the electronically for the multiplications from the Iran and US war should be there. Apart from that, there will the heavy crude costs will be also impacted to all the electronic companies. So not very much favorable for the next 1.5 year or 2 year down the line. Let's see how the margins are going to be realized for the next 2 quarters.
Okay, the next one that is on Akam Drugs. Satyan, by the way, is writing this question. Satyan is asking about 2 stocks, but I'll only take one. Satyan, you know the rule. He's bought Akam Drugs at the levels of 555 and he's bought it seeing the charts. Wants to know whether he can continue to hold this and what should be the target and stop loss for this one. Vaishali, your view on the charts? It's up 2.5%.
Yes, so continue holding, keep today's low as stop loss and look for 570 as target.
The next question is from Rajesh Maheshwari and he's asking on a very interesting pick, Dixon Tech. Now stocks reacting on results. Results weren't the greatest. They've also spoken very heavily and we've discussed in the opening show today about how the company missed out on the industrial EMS part and Atul Lal himself spoke about it and we played out that bite this morning where they could have done that in the last couple of years. But the markets, wants to believe into Dixon's, potential over the next few years to get into it and have the manufacturing expertise. Now he's bought shares at 9550. That's of course the fundamental view. But Vaishali, on the charts, Is this a good entry point now after almost a 45% correction from the highs? We've seen the stock languish at these levels now. Is it a good time to enter?
I would say so. Actually, the stock is showing signs of revival, and 9550 even technically is a good support line. So the stock gets weak only below that. So right now, I think it's the right time to add.
Okay, all right. So that's the view coming in on Dixon. In fact, Mr. LVK Raju was on call with us, but Mr. Raju, I think we've already addressed your query that you did send us on WhatsApp. So I hope you heard that. The next one is on HCL Tech. Harsha from Vijayawada, Andhra Pradesh has bought 60 shares at the levels of 1500 from a short-term perspective. Continue to hold, Vaishali?
I would say avoid IT right now. Exit.
Got it. That's just a straight one-line answer
Exit.
from Vaishali.
IT.
Exit. IT is not something to look at. Got that view, Vaishali.
But you know, that's how it has been like. Even if you take the mutual fund flows in the last month, that is April, the sentiment is not very positive when it comes to IT stocks. In the large cap, mid cap and small cap space, you have counters like Infosys, Wipro, Persistent Systems, which have seen consistent selling. So I think it's the right advice. Probably.
And we've seen all these stocks hit a 52-week low yesterday as well. Infosys, TCS, but very interestingly, we spoke to Sagility today, and since they are only focused on the healthcare bit, there seems to be a consensus that could be a segment where the niche players are looking to outperform and could outperform in the near term as well. But that's the view on tech. KSB Limited is the other counter that Krishna Kant wants to know. He's holding shares at 1,010. So he's currently sitting on a loss. Vaishali asking what's the target in the near term? Can his buying price come back of around the 1,000 odd rupees?
Right now it is in the corrective mode, so I would say final support lies at 800. So continue holding with 800 as support, and once we see new round of momentum setting in, perhaps it can go higher. But right now it is definitely in a corrective mode.
Okay, all right. The next one that we have is coming in from Amrut, who's writing us from Kushal Nagar. He wants to know if he can add Shriram Finance at this time. He's not mentioned whether he's looking at a short-term perspective or a long-term perspective, but seems like he's a long-term investor. So, Girish, your view on Shriram Finance? It's currently trading at 920. It's come off from, of course, its 52-week highs.
Yes, can hold for the longer period of times, as the AUMs are going to be equalized dividends, as well as the net profit also is to be prospectivity for the longer period of times. The credit as well as the numbers. Apart from that, the fixed deposits also going to be improvised by that 15 to 18% annual CAGR. And they are just going to be expanded for the rural, like Tier 2 and Tier 3 cities expandively. So for the high prospectivity, yes, it would be the very strong candidate for the longer period.
Well, Deepak from Bangalore is holding on to BHEL and Nestle. And his question being, is the bull run over? Should he exit or hold on? Now, Girish, we've actually seen decent numbers from Nestle. We've seen the management change as well. Either of the stocks that you like right now for the long term?
No, again, for the longer period of time, the FMCGs, I'm looking out betterly for that would be the Dabur one, not the Nestle ones. As we looking out, the Nestle should be the strong candidates, but for the margin pressures, I think there will be the heavy pressures going to be reflected for the next 2 to 3 quarters itself. So for the Nestle, I am looking out for the next, looking out for the few quarters to just advise for any of the client for the longer period. The Dabur is the more prospectivity. The revenue growths, we talk about the double-digit growths we are looking out for the next financial year 27-28. The margin expansions also there, as well as they are just going to be expanded for the next new home and personal care product lines. So for the longer period, I am looking out the Dabur is a good candidate.
Okay, all right, interesting. Vaishali, just your view quickly on Nestle, because I'm guessing the charts could be suggesting otherwise. Some consolidation is what we've seen in the past day, but great up move is what we've seen since probably 6th of April.
I would say, the trend is really positive. So I would say continue holding and keep a trading stop loss of 1400 if trading is the strategy. But I think in long term, this can go to 1700, 1800.
Got that view, Vaishali. The next one is from Shankar from Bangalore. He wants to know if Jyoti Labs is a good counter to enter. Now, he wants to buy 500 shares. Girish, we actually saw a very negative reaction since that partnership on Henkel and Prill won't be renewed. after almost 15 years of working together. So that part of the business, very high margin EBITDA business. So would you just recommend Shankar to pursue some other opportunity compared to Jyoti Labs?
Yes, obviously, I think the collaborations are not yet finalized, and we are looking out little bit cautious in the terms for the growth perspective. The margin pressures is also with there in their both of the flagship product lines, that is the Ujala range. So for the these type of perspectives, I think that the pharma will be the better options to just shift it to the another one, Blueprint or the masks.
Okay, all right. The next one that we have is on sale. Vishwanatha Reddy from Andhra Pradesh says that he's accumulated sales since 2005. So he did it in 2005, 2012 and 2019 also, I believe. And his average price is around 58 rupees. Wow, that's interesting because the stock is currently trading at 192. So he's sitting on significant profits. What should he do now? Hold or sell? Girish, what's the view on this one? The stock is up almost 9% today.
Again, the heavy congratulations to this particular investor. What the level he is a center, and just hold this particular counter. But for the sale, obviously, I'm looking out that there would be the strong upside still waiting. And just looking out for the infrastructure as well as the railway pipelines, we are looking out that the steel companies are going to be strong upside for the next 1.5 year, 2 years down. So just hold this particular counter for the strong upside.
Sales has been very interesting as well. Hit a low of almost 68 in 2022 around June, and been up 3x from those levels as well. So continue to monitor sale. The next one's actually coming in on Lloyd's Enterprises as well. Rajiv is holding shares at 69. Vaishali is holding 5,000 shares of this counter. Would you recommend him a 6-month view?
I would say so because this counter too is in a good uptrend, and I think looking at the longer term projections, this can go towards 85 to 100 levels. So in my opinion, continue holding.
Okay, all right. So the next one that we have is coming in on MobiKwik. Our viewer Peter wants to know if you can go ahead and invest into this counter from a 2-year perspective. Girish, your view on this one? The stock is currently trading around 3% lower.
So for the longer period of times, just a second now. So it's a MobiKwik. Yes. Okay. So the revenues is almost a flat as of now. Just looking out, the profitability numbers should be there, but for the longer period of time, I think the margin should be improvisations by the 14% to 15% year-on-year judge. NBFC is also just looking out for the new license are also there with the game changes for the financial year 27 and 28. For the longer period, yes, the client can be held for the 2-year to 3-year down the line perspectives.
Well, the next question that's coming in is on Tilak Nagar Industries, and Rajkumar from Bengaluru is holding on to these shares at 490. Now he wants to know a long-term view. Girish, stock's up still 45%, but he might have bought it at the highs. Should he average down? What's your view on the stock, the valuations?
So the valuations looking out the perspective, see the PE ratios are a little bit higher in the Tilak Nagar Industries. The profitability numbers are also looking out the balance numbers out there. So for the longer period of times, obviously the perspectivities looking out somewhere around 410 to 415 would be the strong number, strong digits where the client can be do an average. For the right perspectivities, if you particularly hold this counter, then just hold it for the 500 to 550 levels for the 1.5 year.
The next question is from Sai Karthik from Dallas, and got that view as well on from Girish, but he wants to know a good level for Reliance Power. Now, it's been a very thinly traded stock. Vaishali, he's holding 12,000 shares at 22.5. So, would you recommend him any view here, or just avoid this counter and pursue some other opportunities?
Well, so I would say purely on technical terms, this is showing some strength. 25 is the support, and it can go towards 35. But if I were to pick, I would definitely go for a Tata Power or Torrent Power or any of the transmission stocks. So my comfort would be on good fundamentals, and I think, yes, that's my choice.
Okay, the next one is also for you. Vaishali, this is on Kim's Hospital. We've got Rajiv Sahu from Goa who's asking a 6 months view on the charts for this one. What is your recommendation?
So, full hospital sector is doing very well, and KIMS per se is also in a good trend. So, I would say continue holding even for a longer term perspective. Even on a weekly chart, it's ready for a breakout. So, I think above 800, 820 levels, this would call for a target of around 1000. So, according to me, continue holding.
Got it. Well, Vaishali, just a couple of names here as well on Sirma, Ather or TTK Prestige. Shrikant from Bengaluru wants to know, for the short term, which one of these counters is looking good right now? What would you recommend?
So Ather Energy, it has shown a good run up and we continue to stay positive. So short term is not really possible right now, but I would say these are all good quality stocks. Continue holding, but my choice would be right now Sirma and Ather.
Okay, all right. The next one is on Cupid. Sushila from Bellary wants to know as to what should be the next target for her. She's bought at the levels of 127 and 2,557 shares is what she's gotten. I think yet another day of where we get a Cupid question. But Vaishali, your view on the charts for this one?
So I think observe a range of 110 to 140 as levels for now.
Well, the next question coming in now, this one, it's on from Shankar from Dubai actually. He's holding on to shares of Fino Payment. He's bought it at 220. Wants to know what he should do with this counter at the current time. Vaishali, it's been a very, very volatile counter, Fino Payment. But would you recommend a view for Shankar, what he should do with his 250 shares? Should he hold on for a little while? Is the momentum starting to pick up? Anything on the charts?
Well, my personal view would be to shift into either defense or power stocks or, pharma sector. And of course, even metals. But right now, I mean, chartically, this stock has got no strength. Only thing is it's corrected quite a bit. So we can expect a bounce. So with the stop loss of 120, continue holding.
Okay, all right. The next one that we have is coming in on KSH International. Our viewer, Dr. Ashfaq, has 49 shares bought at the levels of 589. Wants a view on this one. The stock is currently trading around 1.7% higher. Vaishali, your view on the charts?
KSH International, that's what we're talking about,
yes,
right?
Yes, KSH International.
Yeah, so it is in a good strength, upward trend. I think for a broad-based view, 550 should act as a support. And if this stock crosses 680, 690, it's ready for new highs, perhaps to 720, 730. So 550 should act as a support and continue holding.
Got it. Well, Deepak from Delhi is asking a question on SBI cards and he seems to have bought it at elevated levels of 990. Let's pull up SBI cards now. Also look at the 1 and 5 year view because it'll give you perspective of SBI cards where he would have bought it, and he's asking a view on stocks. Stocks languishing at 624. Do remember the IPO price was almost just 700, so it's below the IPO price also. Look at the 1 year, 5 year chart also, and has been a clear laggard in that sense for SBI cards. Let's start pulling the 1 year and the 5 year chart very quickly. Down 30% in the last year, and the long term chart also, if we can pull that up also. And has been a rank underperformer. So that high hit in 2021 of 1140 never went back to those levels yet again. Vaishali, on the charts though, is this coming now at its lowest point, what we've seen over the last few years? But is there any sort of momentum that you see? Maybe Deepak can exit at the higher levels. What's your view?
There is no sign of reversal. So I would say be smart enough to exit and get into another quality stock. So
that's the view coming in on SBI cards, but we have an exclusive story coming in. Sources tell. Okay, sorry. I think we'll just circle back to that story. While our reporter gets ready. But the next question that we have is on NBCC. Priyam from Hyderabad has bought 500 shares at the levels of 100 rupees. Wants to know if it can continue to hold or not. Vaishali, your view?
So NBCC, I think it is currently at a support level. It was doing well till a couple of days back. So I would say 90 would act as a support and the view gets further strengthened only about 100, 103. That could trigger a upside move going towards 110 or so. So for now with 90 as support, continue holding.
Got it. Well, the next actually caller from Hyderabad, and Aruna has a stock query for us. Aruna, welcome back to Ask Profit. What's your query?
Good morning, sir. I wanted to ask this query with Vaishali, ma'am.
Okay.
So I'm having Oracle Financial shares of 110 quantity at the price of 8,250. Okay, I wanted to add further. So what is the support point to add further average? Like further I wanted to add.
Got it.
If that is a good decision, or do I need to exit any coming terms? So what's the supported basis basically?
Got it, Aruna. Vaishali, I think, we've asked you, I think, at least once a week on Oracle Financial. A lot of players have invested in this and got some handsome gains. For Aruna too, she bought at 8250. What's your view on the stock now?
So I would say actually the stock is showing strength even on the weekly chart now that she has very keenly allocated money on this. I would say 8,500 is a support level. That is where one can add this stock. And even when I'm looking at the weekly chart, this stock will gain a lot of strength once it crosses 10,000 levels. And then perhaps you can look for a target of 11,500 and so on. So 8,500 would be the ideal level to consider for adding this stock.
Okay, the next one that we have is on Alchem Laboratories. Angad from Indore wants to know if we can go ahead and buy this from a medium-term perspective. Vaishali, your view on the charts?
So Alchem Lab, well, it's just consolidating, and I think overall pharma and lab stocks could do well. So 5,400 is very close stop loss, and buy this for targets of 5,700 to start with.
Okay, so that's the view coming in on Alchem Labs. But with that, we're completely out of time on this edition of Ask Profit. Vaishali as well as Girish, thank you so much for taking out the time and helping us answer all those stock-related questions. But viewers, if you have queries, you can also tune in at 2 p.m. on the second edition of Ask Profit, the afternoon edition. But for now, do stay tuned because Know Your Company is up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, No hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknight.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit, and this is a very interesting show where we get you interesting companies, and right now the flavor is earnings season. So definitely we have got a company whose numbers have been very strong, but I'm not going to give you the name of the company so fast. Try to guess it. This is a Bengaluru based kitchen solutions company, and largely if you're in South India, these products are already there in your kitchen. They benefit from the shortage of LPG in the cooking space. That means the demand of these cooking induction cookers, that is where the strength is lying, and that's why the stock was buzzing last 2 months. Very strong numbers, obvious it is. And interestingly, from the March lows, the stock has also gone up. It's gone up more than 30%, almost, because it's almost 24 to 30% right now, and doing well in trade as well. But what's the company name? I'm sure there'll be 3-4 companies which you'll try to guess, but the company in focus is Craft. This is the company which we are talking about. But why the interest is there? Why are we getting this company in KYC? That's the important question to be asked. Some questions are there. Let's see what are these questions. First one is definitely going to be on a strong Q4. The electric cooktop, that demand has gone up. LPG crisis हो रहा है, electricity का requirement है. वो cookers की बात करें तो यहाँ पे cooktop में request is coming in. FY26 revenue growth was 11%. That fell short of 15%. So we'll try to understand from the management where did the overall impact happen, and well, it fell short. The confidence of intact of 15 to 18% revenue growth and 40 to 45% gross margins. This is the plans for the next 2 to 3 years. Will the management change this stance or will it remain the same? That's the important question to be asked. Also, the aluminium, copper and currency movements, it impacts a lot. Now, will we see that in Q1 or H1 FY27? That's the main question to be asked. That's something we will focus on. Apart from that, the IKEA announcement, there was a partnership announcement last quarter. How are they expanding it? What will be the benefits coming in? And the incremental portion, of course. Apart from this, the expanding presence through the entry into the hob segment, that's something to look out for. And also, we'll be asking about the appliance business. Now, they want to go bit more than what the cookware segment is, and so we'll try to understand the strategy of how this product mix changes. Also, the export business, any major headwinds is coming in. We know that the tariff of the US has been corrected from 50 to 15%, or is there some problems to it? But to give all the solutions, we have the management, Rajendra Gandhi, the MD and the founder of this company, Craft, where he'll answer all of our queries and any concerns which is there for the investors, that will also be addressed. Also, let's look at the entire story of this company, Craft, what this company is all about and what are its key products. There are some brands also to look out for. As usual, I had mentioned you earlier, it's a Bengaluru-based kitchen solutions, and company calls itself Emerging Home Solutions brand. Remember, the company is moving towards the high margin segment. The home and kitchen appliances, pressure cooker, freestanding hobs and non-stick cookware. These are the key products which the company is having. Also, the two brands are there. I'm sure the Pigeon brand and Gilma brand, these are the brands of these cooking utensils and these products which might be there in your homes, and this is how the company is known as. Also, they proposed to commence the manufacturing of the home and kitchen solutions, and this will be coming under the Black Plus Decker brand. So this is also the third brand from this house. Apart from this, looking at the numbers, the backward integration manufacturing facilities, there are two of them. One is in Baddi, one is in Bengaluru. That is something to watch out for. And also, they're having 329 stores operational in 22 states and 151 cities of India. So definitely they are expanding offline more. But let's see how the channel-wise distribution looks like. Roughly the general trade, that's almost 32% and a modern trade also having a 34% but The company is trying for an omni-channel growth, and that's why we have e-commerce, own retail, OEMs and others as well. This is the entire picture of how they are channelizing their sales. But how the volume growth has been, that is something to look out for, and there are different sectors. The induction volume growth, of course the base was lower, but the demand which was there because of the LPG crisis, look at that number, it's around 67%. When it comes to non-stick and cooker, it is there, it's around 23 to 40 odd percent. And interestingly, the appliances, these are the smaller appliances, that has also shot up almost 98% of volume growth. But of course some concerns are there, especially on the gas cooktops. That's where the demand is pretty less in terms of the volume growth. Apart from this, let's see the revenue breakup, how things are looking like. Small appliances, no matter it is called small, but is having the largest revenue contribution of 40% here. Apart from that, if you look at it, around 22% comes in for the pressure cookers and the remaining segments as well. But let's point out the positive triggers for you. The first one is the return ratio and working capital. They are improving. Second one is, of course, on the debt portion. The debt reduction is continuing, and that's what is aiding a good momentum to the balance sheet analysis, and we'll get you that in some time. Strong demand for electrical products, especially due to the LPG crisis, and that is where the perception of the stock has changed. But nevertheless, the revenue contribution is still not very high also. And interestingly, for last 2 years, the domestic institutions have been increasing the stake, and that is where the interest comes in. It had an IPO, there were 2-3 big high ups and lows, but after that we're seeing DI is lapping up. But there are some negative triggers also. Not everything is rosy, and that's why our job in KYC is to get you all the entire 360-degree analysis on it. The export still getting impacted on the trade issues, that's of course there. Also, the geopolitical issues may keep the pressure on the costing front. No matter how much backward integrated you are, there will be rising costs, and of course it's going to impact every one of us and all types of companies. Valuations are still remaining on the higher side. So is there any value emerging? I don't think so. I will get you those numbers to prove it. And slower growth is coming in the gas cooktop and the non-stickware segment. These are the two segments. Decently there is 16 to 20% revenue contribution. So this is the entire picture for Stovecraft. But how do we judge a company in KYC? Let me show you the KYC ratings. There are 8 of these ratings which we track. Of course, we include income statement, balance sheet, cash flow, and also for you we get you the return ratios for this company. We will compare the ROC and the ROE numbers. यहाँ पे शेयर होल्डिंग रहेगा, FIs, DIs और प्रमोटर की स्टेक के बारे में हम बात करेंगे. And then there is street cred as well, valuations where we compare that with its peers, and there are 3-4 interesting peers where we'll try to understand whether the stock is cheap or not, and of course the outlook, what are the numbers and triggers going ahead for the company. But let's start the first rating, that's the income statement. And largely the income statement, top line growth has not been that attractive. The EBITDA numbers have increased, the 3-year CAGRs has been pretty decent, but of course the street is wanting more. Ye dil mange more. Whatever you do in business, those numbers should be reflected here, and it's not showing so much of it. However, the Q4 numbers, they have done really well, and this is where the interest came for me also to track this company and maybe try to see whether any alpha can be made for you or not. Largely the net profit, the EBITDA, this is where the jump has come in, and it has been a stable, good jump coming in their key product lines as well. Let's look at how the margin profile is also functioning, and margin profile also has gone up and it's sustaining, and that's a good portion. It's around 10 odd percent. But as and more they go into appliances, as and more they go into value added, as and more they're going to export, the margin profile changes, and hopefully this can go up to the 12 to 14% margins. But we definitely will ask this outlook. So net Q4 numbers were strong, margin is good, but if historically speaking the numbers haven't come in as yet, so I'll give a neutral rating right now, and we need to figure out more couple of quarters to judge that. Let's look at balance sheet, and I mentioned to you earlier about the fall in debt, and this is where the borrowing, it's literally not there. So that is where the strength lies. Most of the debt reduction ratios have come down, and because of that we might expect in future a little bit of rating upgrades as well. And when that rating upgrade happens, the borrowing profile changes for a company, and it sets up a very positive momentum for the stock. So net balance sheet is pretty strong, cash balance is decent, so I'll give a strong thumbs up. when it comes to the balance sheet. So we spoke about the income statement, we spoke about the balance sheet. Now let's talk about cash flows. How has that improved or not? From last 2 years, we'll be getting this data. Of course, some aberrations were there in FY25, but let's see overall net currently for FY26, how things stand. Cash flow from operations has improved. The conversion which is there, that has also improved. And overall, the net cash flows, this of course includes operating, investing and financing, all of them has also improved. So net Stovecraft is doing well and on cash flows as well. So cash flows and balance sheet has been really strong. Income statement, I would say neutral right now, but let's look at the other parameters also to judge the return ratios, how things have managed. And of course, we have given you the quarterly breakup. The ROC numbers were on a decent 15%. A slight pressure has come in, and this has been coming in at around 12 to 13%, but not a major shock, to be honest. It's maintaining its trajectory, that 12 to 15% mark. Margins also, we saw that. Let's just pull up the ROE numbers to show you how things are moving. And over here also, a little bit of a minor pullback is there on the positive side for the ROE as well. Around 8.5 to 9 is the average, and it's still falling in that. But yes, from the third quarter to fourth quarter on a sequential basis, there has been an improvement in both ROC and ROE numbers. So I'm going to give this still a neutral rating when it comes to this overall analysis. Let's talk about the shareholding, how things are moving. And shareholding, the promoter stake में कुछ बदलाव आया नहीं है. 56% था मार्च 2024 में, और अभी भी देखें March 26, 56%. Now, interesting thing is FIs have not increased their stake at all. It's been flat as a pancake. But DIs, on the other hand, have been lapping 3%, 7%, now 8%. So the institutional interest is definitely there, if not FI participating. So I'm going to give this a strong thumbs up only on DIs lapping up their stake in the shareholding segment. But apart from shareholding, let's talk about street cred. Has the stock actually made money? That's the big question to be asked. At the end of the day, if the stock doesn't make money for you, then it becomes a concern. 2025 highs, the stock is still in a correction mode. It's down 29%. But from the March lows, where we saw most of the mid cap, small caps going up, and there was a rally, especially on the LPG crisis front, which was there, and the benefit immediately company getting that, and that is where company got March lows. The stock went up 24%. But if you're holding the stock for 1 year, you're sitting at a loss of 11%. And if you're holding for 5 years, there hasn't been much return, just 13%, almost you could say flattish. So yes, for medium term, long term investors, the stock has given a very big, patience exercise. But because of that, I'm going to give this a negative rating for street cred. Let's pull up the valuations to see, is there any value left? And I doubt it's going to be there. Stovecraft is on the expensive side along with TTK Prestige. One is at 46 times, one is at 51 times the 12-month trailing P. If you have the competitors, it's on the lower side. We have Hawkins Cookers and we have Butterfly Gandhimati as well. That's around 20 to 31 times. So definitely both of them are quite expensive. And Street is still concerned that the valuations are not that attractive, at least for the entry. That's what the analysts tell me. So it's a negative rating when it comes to the peer comparison. Valuations are not that attractive. But let's talk about the outlook. What is there in the outlook? First of all, the company is expecting almost a 15 to 18% growth. याद रखिए ये 2 से 3 साल वाला long term view है. Generally, outlook, most of our analysis in KYC happens on long term whenever you're analyzing it. Now, this aims to expand the gross margins to 40 to 45% over the next 2 to 3 years. That's something which we'll be watching out for. But of course, in short term, महंगाई भी तो है. There's a strong demand for electrical cooking. We might see that demand pushing in the second quarter or the first quarter of FY27 as well. And the expanding presence through entry into hob segment. Now, how big this segment is, what's the benefit looking like, we'll try to understand from the management, and aiming for the appliances business eventually surpassing the cookware. That's what I was explaining you on these numbers. So net, this is important outlook, but I'll still give this a neutral rating right now when it comes to Stovecraft. लेकिन आते हैं, let's explain you total KYC ratings, what's there for Stovecraft, and you should of course understand what is the reason for it. Income statement is largely neutral, even though Q4 numbers were strong. Balance sheet, the debt reduction is something which I liked. The cash flows has improved, and that is why we have given a strong thumbs up to them. Return ratios, it's been very, very plain, straight, in a very range bound, but nevertheless, it's a stable business model. Shareholding, the DIs have been lapping up, but concern definitely is the returns haven't come in for the investors for this stock. That's why I've given this a thumbs down. Valuations are still on the expensive side if you get TTK Prestige also on this side, because these stocks have run up. Outlook, it's neutral, decent enough on the growth perspective, but yes, there are some headwinds that can definitely come in from exports, tariffs, or even the costing. That is where things are getting expensive. It's not only impacting this company, it's impacting the entire sector and a lot of other ancillary industries. But let's give the final rating for the stock. It's roughly 4.5 out of it, largely neutral number, which we give generally in the KYC segment. So definitely we'll try to understand from the company. And on the other side, we'll be speaking to Rajendra Gandhi, the Managing Director at Stovecraft. Stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill.
Welcome back to KYC, and we are joined in by Rajendra Gandhi, the Managing Director at Stovecraft. Good afternoon, Rajendra ji. Sharad here, and a very strong set of numbers coming in from Stovecraft. Of course, there is an angle to the electrical cooktop and the electrical related appliances demand going up. But what else led to this growth in these numbers? And do you think this demand will get pushed to in the first quarter or the second quarter also of this financial year?
Yeah, good afternoon. The last quarter was quite good on demand side, and we continue to see demand continuing both for cooking appliances and for our pressure cookers.
Right, and this demand is going to continue in the first quarter and second quarter also. जो demand चौथे तिमाही में दिखा, first and second quarter, will it get pushed?
There seems to be an change in adaptation to moving to cooking appliances, electrical cooking appliances. So either to what Indian households or kitchens were only depending on LPG gas, there are also some as a backup are adding induction cooktop and other cooking appliances like the rice cooker, air fryers, and OTGs. But we are also seeing this becoming a primary cooking appliance for many households. So we believe that with a large country like and so many households in the country, there is a huge opportunity ahead for cooking appliances.
Right, and Rajendra ji, just look at the FY26. You had guided for a 15% uptick in revenue. I calculated it comes to 11%. Have we lagged somewhere because of this?
Yeah, there was a initial period of the year. First 2 quarters, there was a lag in our export orders. It was there was a drop in export business because of disruption in tariffs, but that is now past. We are seeing exports back to normal. With that, I think we are back on our expectations on growth. And with that added demand on electrical cooking appliances, we believe this the growth we are on the growth numbers that we anticipate to.
Right. And Rajendra ji, another question is that means that 15 to 18% revenue growth and that margin expansion to 40 to 45% over next 2 to 3 years. So this guidance, will you stick by it or you would like to change it a little bit here there?
No, we are confident of the growth. We have worked on our cost. Of course, again, the last quarter, there was one-off items like huge forex loss. There was huge volatility and the depreciation of the rupee, which led to some drop in expected margins. But we are confident of the gross margins being around 40%.
Right, and just to give a perspective, there's a backward integration at play also for most of your plants. That's where it tries to offset. But the question remains is aluminum का भाव बढ़ा है, copper का भाव बढ़ा है, currency adjustments is there. Of course, you do hedging and forex adjustments also. Any impact in the immediate term, next couple of quarters maybe?
Yeah, definitely this currency is a worrying thing. Otherwise, we have addressed the market volatility on commodities. We have passed on the cost increase in this current quarter to adjust it for our aspired margins. The volatility on forex, we are trying our best to manage it. That is the only ambiguity that we are living with. Otherwise, I think we are in control of our costs.
Right. So currency is something which everybody is looking out for. But apart from that, the IKEA partnership which was announced earlier, the street wants to know a little bit more about it. Ki by when these incremental benefits will start coming in and what will that be?
Both IKEA and Stockcraft have invested on building this capability, and now we are ready. We will start seeing revenue from this quarter.
Okay, so from first quarter onwards, we'll start seeing the revenue from IKEA as well. Okay, that's a pretty interesting, way to look at that. But apart from that, the hob segment, that is where the company is pushing hard. What is this segment? How big is this market? And what kind of a market share gain are you targeting in this hob segment?
So it's actually a chimney and hob. And either we were importing this. We have set up our own manufacturing facility for this, and there is a very high adaptation of this chimney in every kitchen in the Indian households, and we believe that is an appliance of the current and future. We are very confident of doing well in this segment also.
Okay, but any quantification, any numbers for this?
All these new product additions, our export, the growth in demand for electric appliances gives us a high optimism on our expectations to grow between that 15 to 20%.
Yeah, that 15 to 20% comes in. But there was a major, strategic outlook going ahead is now the company wants to aim for the appliances business more to eventually surpass the cookware segment. Now just explain us, and of course this might be a bit theoretical, but we need it for our audience. How different is the appliance business when you compare it with cookware business? What are the return profiles? What are the important, pros and cons? If you could just explain that to my audience.
For us, we are both channel and product agnostic on margins, irrespective of the categories that we are in. It is only divided between domestic and export business. Export business is a more of a white labeling business for us. Gross margins are a little lower than our brand business. Otherwise, between the cookware segment and the appliances segment, we are agnostic on the margins. We price our products in a way to achieve our aspired EBITDA margins. So on the margin side, these are neutral, but we are seeing good growth with more and more manufacturing, in-house manufacturing of these appliances, which were, as a country, we were more importing these appliances. Today, a majority, maybe closer to 97% of the products that we sell from the Stockcraft on our Stockcraft P&L are all manufactured within the facilities of Stovecraft. So that gives us the power to address supply chain challenges, cost challenges, and continuous innovation. All this is leading to higher growth in our cooking appliances. Now that the country is also adopting more and more of cooking appliances, so this is giving us that advantage again.
All right. Also, a little bit of this minor technical error, but definitely the management has said a very important thing. आप अगर compare करते हैं आपके cookware business or appliance business, the margins remain same, and export is largely white labeling. Rajendra ji, on the export front only, I want a question on that. What are your export in terms of total revenue? And the tariff which is there, that impact which is there from US, how is the company taking it? If you could just explain us that.
The tariff disruption is a past. We are in line with Southeast Asian countries. We are neither having an advantage or a disadvantage on tariff. So our business is back on track. About 12% of our business used to be export, but it is growing now, growing faster than the company's growth rate. So we believe this will continue to grow now.
Right. And final thoughts, Rajendra ji, on the competition in the industry, and I'm talking about the domestic markets, your view on that.
Like I said, the appliances business is growing, and the advantage the company has over competition is we have continuously invested on manufacturing it within our facilities. So this has given us that added advantage of being a company that manufactures and having the distribution and various distribution channels to address the consumer needs and a growing brand. All this within one company is giving us that huge advantage. We definitely have an advantage on innovation because we manufacture these products. So that is giving us advantage. There is a growth in this segment.
Right, Rajendra ji, that is a very important. I had purposely kept this question for the last to understand कि आपका company दूसरों से कितना अलग है, and that's how you have answered. Thank you, sir, to taking out your time and giving the views for the company and the outlook ahead as well. It's always a pleasure to talk with you. So very interesting management from Stovecraft, and of course LPG crisis is there, and that's where the momentum has come in, but the stock has not rewarded the shareholders on a long-term basis. And if some positive outlook comes for FY27, maybe then alpha can be created in the current valuations for the company. For interesting stories like this, stay tuned to NDTV Profit and keep watching KYC.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो पतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots.
Benchmark script a recovery with Nifty staying firmly above 23,400 level. Sensex gains more than 200 points today. Rupee hovers close to record lows. Jewelry makers trade under pressure after government hikes the import duties on gold and silver. Basic customs duty on gold and silver imports increased to 10% from 5%. Agriculture, Infrastructure and Development says on gold and silver imports raised to 5% from 1% earlier. IFL Finance shares surged over 8% after founder Nirmal Jain clarified a 475 crore rupees income tax order. The NBFC said all tax liabilities are met, the order will be contested, and there's no material impact on financials or operations, triggering a sharp investor relief. US President Donald Trump heads to Beijing for high-stakes talks with President Xi Jinping, his first visit since 2017. Trump says there are a lot of things to discuss, adding Iran is very much under control even as trade talks narrow to limited economic deals. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Poddar, and let's take it to the numbers. HPCL revenues 1.14 lakh crore rupees, and it is slightly below what the street was expecting. Dividend of over 19 rupees per share, and the stock is adjusting to those numbers, really reacting to that. And there you can see a spike, almost 2% up in trade. HPCL's OMC is in focus. EBITDA margin at 7.8% versus an estimate of 3.3%. And this is what the street is going to really react to. Profit up over 20% at 4,900 odd crore rupees. Revenue has taken a slight dip when it comes to QOQ number for HPCL, but EBITDA numbers of 8,900 odd crore rupees is up almost 28%. So keep an eye out on the operational performance. Of course, the global volatility, oil prices are something that are really impacting the OMC space. Somit is here to put all those numbers into perspective. Tell us, Somit.
Well, if you look at the HPCL numbers, the big beat is what we are seeing, at least on the EBITDA front. Now, our street was expecting the EBITDA to be close to 3,335 crore, but the company has reported an EBITDA of nearly 9,000 crore rupees. And margins have come in at close to 7.8%, while the net profit is 20% higher on a sequential basis at close to 4,900 crore. So what could have aided the numbers? The numbers could have been higher on the back of inventory gains. Now, do remember that we had seen a sharp jump when it comes to Brent crude prices, and that could be one of the reasons why the company's EBITDA is looking higher. But this inventory gains, most of it could be notional. The key thing to watch out for from HPCL numbers would be the management commentary, and the call is at 2 p.m. So what are they commenting on? The refining segment and the marketing segment losses for the first quarter will be very important to track. And also HPCL management has given a dividend of 19 rupees. So if you look at the dividend yield, it's nearly 5%, and that is also one of the positive reasons why the stock is gaining in trade. But management commentary to track at 2 p.m. will be important when it comes to HPCL.
All right, Somit, thanks so much for putting those numbers into perspective. And yes, the operational performance on the EBITDA front, far outlier than what the street was estimating. But it could be just that inventory match, as Somit was saying. So a lot of clarity required there. And therefore, the street is also, just not reacting to it fully. Over 2% up on HPCL stock there. Take a look at the market. And yes, Nifty 50 is gaining over 0.5% in trade at the current moment, but that's not the true picture. If we really take a look at the 5-day trajectory of 5 trading sessions of Nifty 50, remember that it is a downward bias that we have seen consistently, and therefore there are intermittent just buying opportunities that are being capitalized upon. But there is a strong bias downwards. About 1,000 odd points have been lost in last 1 week's trade. Let's take it straight across to Nishal Maheshwari, a market expert, joining in. Nishal, on a downward trend overall market direction, there could be a blip up and a blip down on a regular basis with volatility and global market really cues coming in, but it is a downward trajectory that we are looking at. What's your summation of this and a near-term outlook?
So I think the latest trigger, Nisha, has been, I think, a couple of days back when the Prime Minister asked for some austerity across the country. I think that has been the latest trigger, because now market is saying that there is no quick solution to this war, and it may be much more elongated than what people are factoring in their numbers. And that's why I think some profit taking is happening.
Right. And how do you really make sense of a market like this, Nishal, for long-term investors who have SIP investments, who have some, comfortable stocks that they have invested in for long-term, and some safe haven stocks coming in from the blue chip counter? Somebody who's just putting their savings to work, what will be the kind of, investment strategy that they can look at, and how much cash conservation, considering that market could be on a downward trend till at least next quarter?
So somebody who's investing afresh, I think he should avoid. There is no hurry to invest in this market, basically. Some people who are already in the stocks and are having safe haven stocks or blue chips, I think they should hold on. This is too much of sentiments than actual fundamentals getting deteriorated. We have to see basically how long this will continue. Nobody has a clue on that. And that's why it is best to avoid this market at the moment.
Right. And what about consistent buying at lower levels, Nishal? How much does that particular strategy hold in a very unusual and uncertain environment like now?
So I would avoid basically saying that a Nifty level is a good level to buy. I would say basically go stock wise. If that stock basically which you have been tracking comes to your level, that's the only way basically this market has to be tracked. I think avoid the broader market and Nifty levels.
Right. And in terms of the sectors, Nishal, we have seen consistent, outperformance of defense, metal in particular, and some consumption areas like FMCG also, like today. How do you differentiate between the no-go, no-go areas when it comes to the sectors?
So these sectors, no doubt, has been performing well. I think if you look at the numbers also, basically, I think numbers have been pretty good. But I think another major factor is basically the FIs do not have any holdings in them. Because if we look at it every day, there is a selling of almost $1 billion by FIs, and they largely hold the old sectors, banking, FMCG, energy, and that's where they are coming and selling. So I'm saying at the moment, these are sort of safe haven because FIs do not have much holding in them.
All right. So that's the viewpoint really coming in from Nishal Maheshwari at the moment. Just a quick word, Nishal, on banks. There are down days and there is buying seen at lower level at blue chip counters in the banking space. And they are also by way of trade-off mechanism, not particularly on fundamentals, because, especially the foreign investors play on an economy basis, the bank stocks as well. So what will be your view on these banks, blue chip banks, when we consider a little longish time frame of 1 to 2 years?
So if you really look at it, they have been cheap for almost a year now. I'm saying HDFC Bank, the leading bank of the country, and in terms of numbers also, I think pretty decent numbers. I think last quarter numbers were good, but the stock is still down. And the reason being is basically that FIs want to sell the country. It is not about HDFC Bank they are trying to sell. They just want to get out of India. And that's why you're seeing this kind of strong selling in some of the leading banks. Otherwise, if you ask me, I think fundamentally it makes a lot of sense to buy these stocks. But then the overhang is so much, I think it is best to avoid them.
All right. Thank you so much, Nishal, for joining in with your expert take on the markets. Let's take it straight across to Gaura Sengupta, the chief economist at IDFC First Bank, to take stock of even the rupee movement and how the government has come up with a customs duty hike in gold and silver, which should be impacting the foreign outflow of funds for India and therefore probably stabilizing rupee. Gaura, good to have you on NDTV Profit. How do you see this move by the government?
It was required, it was also expected that they will do something on the gold front. Among all the imports, I mean, that's the one which it is the least productive in a way. But yes, the gold sector does get adversely impacted. It is a labor intensive sector, but still, I mean, it is a required measure. For example, in FY26, the major pressure on the CAD was due to gold imports. Overall, FY26 CAD was very small at 0.9% of GDP because we had good services surplus, we had good remittances inflows. So that balanced the pickup that we actually saw in the gold imports. How effective this is in terms of reducing the volume of imports is yet to be seen, because gold, at least the volume, tends to be less price sensitive. In FY26, if you look at it, we saw a 50%, more than a 50% rise in prices, and the volume of gold imports contracted by only 10%. So there will be some incremental reduction in gold import volumes, but it may not be enough, because right now what is happening in FY27 is because of the West Asia crisis, you have elevated crude prices, which will on its own take the current account deficit to around 2.4% of GDP, which is close to $100 billion current account deficit. Now, in the past, a 2% current account or 2.4% current account deficit is not a big issue. But unfortunately, it's coming at a time when the capital account has been very weak for the last few years, since FY25 onwards. So I think we do expect further measures, and especially for the capital account. The current account, before the West Asia crisis struck, current account was never the issue. Now current account is beginning to widen because of the crude aspect, but we will need measures on the capital account to get capital inflows, which will be very, very essential. So we do expect some measures to attract capital inflows.
Right. So more measures are required. But Gaura, there have been a consistent, impact on rupee because of the global uncertainty. But also the government and the RBI has been coming up with stopping treasury speculation by the banks and now curtailing the import of gold. What has really not worked for rupee at all? Because after a little bit of softening, but after that, it really resurged back to the lowest levels, record levels that it's trading at. What's your view on overall momentum and what will really arrest this fall?
I think for the last couple of years, FY25 onwards, we've seen a slowdown in FPI inflows. This is a reflection that investors look at our equity markets as slightly overvalued. But this is getting corrected because the markets have corrected. Moreover, with the 11% depreciation in the INR in FY26, in dollar terms, the equity markets have actually become less overvalued. So the expectation was that we should have seen a pickup in FPI inflows. But then we got a little unlucky with the West Asia crisis, which has triggered risk-off sentiments. We've seen $15 billion outflows in the month of March, triggered by risk-off, and that we are seeing continued FPI outflows in April as well as May. FDI India actually did attract loss inflows, but what is happening is whatever we attracted, we are losing in terms of repatriation of profit booking by foreign investors and also Indian companies investing abroad. So we will need to get some extraordinary measures to get inflows. If it's not in the form of FDI, we need to do some measures to attract debt inflows, because the import cover, which is basically how many months of imports does your FX reserves buy you, is currently around 9 months. We calculate import cover as a sum of reserves plus RBI forward book. by the end of March 2027, it can reduce to around 7.5 months. So that comfort that the FX cover gives us can reduce in a long drawn out crisis. So I would say the most critical thing is to get some inflows by coming up with certain incentive schemes, and this could be in form of debt inflows.
Right. So, Gaura, my final question to you and request a quick answer. What is the in-house penciling in of the levels of rupee if there are no big measures, more measures after gold taken by the government or the RBI?
So our base case expectation is that there will be measures, and that has been our base case for a while now. So based on that, we were expecting the INR to stabilize around 96 and a half levels. But if no measures are taken, which we do not expect, that will be an extreme case. In that case, then the depreciation, then it can easily cross 97 level if there are no measures taken, because you have to understand it's the pickup in the crude oil imports, which is honestly out of our control. So base case is there should be measures, and that should temper the pace of depreciation. If there are no measures, it will be around 90, it'll easily cross around 97.
All right, so we are penciling it now 96 to 96 and a half rupees per US dollar, already rupee at record low levels. Gaura, thank you so much for your perspective on rupee as well as many other macro aspects. Thank you. All right, looking at another important development, Prime Minister of the country has made a clarion call for energy conservation, and going back to work from home is also a critical, inbuilt strategy which has been called out. Let's take it across to the IT stalwart also and NASSCOM's representative to talk more about this and how critical and what steps can be taken to really rise up to the Prime Minister's call at this unusual time. Shrikant Velamakani, who's the co-founder as well as the group chief executive at Fractal and also chairperson of NASSCOM, joining in. Shrikant, always a pleasure to welcome you on NDTV Profit. My first question, how will the IT industry, NASSCOM participants really rise up to this occasion for energy conservation in the interest of the country?
Nisha, thanks. First of all, as you're aware, some of the largest tech companies in India are extraordinarily well run from a sustainability, energy conservation standpoint already, number one. Number two is that as part of the campuses, there's a lot of the usage of EVs, even 100% green energy in many of the campuses, and also 100% of the fleet is run by EV and so on. So there are already several steps in place to reduce the overall energy consumption and optimize the operations for energy consumption. On top of that, the NASSCOM member companies are also having conversations with their workforce to take EVs or public transport in a way that they can overall contribute to the Prime Minister's call for energy conservation. Reducing non-essential travel and things like that are all parts of the measures that will help us meet Prime Minister's call for greater energy conservation at this time.
Right. Shrikant, also a lot of technological shift has really taken place. There has been a lot of R&D and innovation in energy transformation and lack of or lower dependence on the conventional forms of energy. From the tech world, how do you see that innovation thrust really going forward? Is there a vision on what more innovation is likely to happen, and what are those important aspects that we can look at from your vantage point that you're viewing from the tech industry and innovation industry?
Tech is an essential aspect of energy conservation, and the latest tech that we have today is AI. And you've seen countless examples from various other parts of the world of people using AI in order to look at their overall energy consumption and optimize them using those AI models. So we've seen examples are like Google that has done that with their DeepMind team, which have reduced their air conditioning expense by 40% and electricity expense by 15%. So my suggestion would be to take a look at the total energy consumption in our country and see how we can bring in AI, let's say in data centers or other aspects of high consumption of energy, and bring that energy consumption down through optimizing through AI processes and AI models.
Right. So that's a great suggestion. And yes, a lot of thrust is given to artificial intelligence-led new innovation, Shrikant. But while that work is going on, that transformation innovation is going on, at the immediate measure for this unusual period, how is work from home really going to work? Is the IT industry geared up to going back to the COVID kind of days? Because it had its own set of also problems. And for the employers also, it's not the best case situation, especially in India.
COVID forced us to move to a work from home mode across the globe. And in some ways, that became a blessing in disguise because we figured out exactly how to work in a hybrid mode. And over the last couple of years, as you've seen, many of the industries have moved back fully to working in office. But the tech industry has struck a balance. It is about 2 to 3 days a week that people are working from the office and 2 to 3 days working from home. In most companies, those are the norms. And there is also a lot of flexibility considering the tech industry employs highly educated people who also are, need the autonomy, etc. There is a lot of flexibility built into the system that currently is in place that encourages work from home and work from office for where office collaboration is necessary. That balance has already been there. To the extent that we can provide greater flexibility for people to take, those working from home option in order to contribute to the overall energy conservation, absolutely yes, we are game for it. But in general, you could see that the tech industry is set up very nicely and has struck that balance between working from office and working from home. There are some things that working from office can only do, like collaboration with each other and maintaining critical services and things like that. So those services are obviously being run from the office, but there is enough flexibility built in so that we can overall have the least energy footprint that's possible while still being effective.
That's right. So work from home, need of the hour probably. But Shrikant, one final question. Also, our mobility is so heavily dependent on the fuel consumption, and the carbon footprint also grows with it. How do you see the overall ecosystem changing, and your viewpoint on the way the electric vehicle space is really, gaining momentum? Of course, we've seen it really increase in terms of its, adoptability, especially because of the PLIs also and the government support. How do you see the next phase of growth in this particular space?
There's no doubt that once someone starts driving an EV, they don't go back to driving the regular cars. It's just the way world is working. It's very crucial that we solve for the infrastructure problem, that there are enough charging stations and enough infrastructure to manage and repair EV vehicles and so on, so that the move to EV, I think Prime Minister said many years ago that by 2030 we should be 100% EV. I would still think that would be a worthwhile goal, and moving the country to an EV infrastructure where anybody can comfortably buy an EV vehicle and then never return to driving a fuel car. I think that's the direction of travel for the country, and that'll be very helpful for the energy conservation situation as well.
All right, so lots of energy transformation really taking place. We are a new world order, and probably the conventional sources of energy will decline in terms of importance given this push because of an unusual circumstance globally. Thank you so much, Shrikant. It's always a pleasure to welcome you on NDTV Profit. Thank you.
Thank you, Nisha.
And as the thrust on energy transformation really takes shape, speaking of electric vehicles as well as renewable energy, the impact-based funding is something that British International Investment is really looking at. They have recently raised over £1 billion, and they are going to make huge investments into the Indian ecosystem of energy transformation. Here's an exclusive conversation I had with the BII CEO after they came to India over here to look at new investment destinations for energy transition. Take a look. This fundraise focused towards climate funding. Give us a sense on what is your strategy going to be in terms of deployment?
Sure. Let me start out by saying that BII has got a long track record, a deep institutional presence in India. We have a portfolio of $2.5 billion. We have invested in some of the most consequential industry initiatives in renewable energy, for example. We established a very strong platform in the form of Ayana, which generated just over 4.5 gigawatts of power here in India. We've invested in the electric vehicle ecosystem. So we have a long historical track record. And this, I should say, is on the back of very deep institutional relationships and historical ties between the United Kingdom and India. Of course, BII is owned by the British government, so our investment here is against that backdrop.
And also strategic when it comes to the government.
Absolutely. I mean, as you know, the two prime ministers met last year, and that really kind of signaled a revitalized partnership and a stronger set of historical ties. That gives us this sort of momentum to now increase our investments here in India. As I referenced, we've got a $2.5 billion portfolio. India is the single largest country of operation of BII. And for our next 5-year strategy, India continues to be the most important and strategic priority market. On climate, Nisha, we are specifically very excited about the opportunities here in India and this new fund, British Climate Partners, that we are establishing. This really creates the platform for us now to scale what we have done over the last number of years. To give you an example, we've exceeded $1.1 billion in climate finance in the previous 5 years. Significant investments in, for example, Renew, which is involved with solar manufacturing. We've invested in Battery Smart, for example. So we've not just invested in individual companies, we've invested in the entire ecosystem.
All right, BII looking at energy transition investments in India. On to an NDTV Profit exclusive. Well, tire demand may slow short term as work from home really softens the urban replacement demand for cars as well as two-wheelers. In fact, cost pressures persist from diesel and logistics inflation. Nimit has all the details on this. Tell us, Nimit.
Yes, absolutely. So the demand is going to change both immediately and directly and structurally, according to Anay Gupta, who's the president of the All India Rubber Industries Association, speaking exclusively to us. Now, directly, he says that there's going to be a change in passenger vehicle and two-wheeler vehicles, specifically rubber demand. Of course, the industry required tires. And secondly, there's also going to be a tire replacement duration change, which means that because there's going to be less vehicles on the road, the wear out time of that tire, the durability is going to increase, and that replacement demand is going to drop, which is a substantial chunk of revenue for this industry. Apart from this, the higher diesel cost, as you've also mentioned, is going to reduce margins, especially in the MSME sector for rubber. It's a very short margin anyway that he tells me, and this is going to further put pressure on that. Now, in the long term, this could mean a strategic transitional shift for the rubber industry completely. This means moving from passenger vehicles to commercial vehicles, which are going to see a jump. Public transport vehicles are likely going to see a jump, Anay Gupta tells me. He also says this metro, railway and the bus segment could see significant rubber demand go up. He also says that there is an EV-linked rubber technology sector that's blooming, that was waiting for an opportunity like this to sort of ramp up and increase its production and also gain a larger margin in this rubber sector. Says that that's also going to go up. Also, the natural rubber market, which has sort of been on the down low, is going to also see an increase in demand because it's not directly linked to fuel.
All right. Thank you so much, Nimit, for such an interesting story and a critical impact on that sector. Out of time on Markets at 12. Thank you so much.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy.
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Mahima Vachajani, and Sharad Dubey, who's standing at the NDTV Profits market pit with all the action that's happening in the market today. At least some green on the screen, Sharad.
Well, yes, there is a smile on my face, and good afternoon, Mahima. Let's start with the day. There was a little bit of movement happening, but now we are clearly near the day's high level. That's something to watch out for. Nifty Bank also, it's a mirroring. Let's look at that. That's it. Over there, we are near the day's high level as well. But Mahima, this is a technical reversal at play. That is what's aiding the market. The first reason is the short covering. That's happening in the majority of the stocks. But nevertheless, the sentiment which is coming in, that is positive, especially for the small and mid caps. The market recovery we saw post 2 days of sell-off. And of course, the main trade is in this value buying in Smiths. It's coming back. That means on the earnings specific trade, the buying is still happening, and that's a good actually sign, to be honest. Strong buying coming in the metal space also. Of course, the dollar on the other hand shows some sign of weakening also, and this is of course on the global cues as well. The rupee has strengthened, a very minor one after what we had seen in the last 2 days, and even the VIX slightly cooled off, or a very neutral right now. But nevertheless, we are waiting for some other future events to happen, especially on the geopolitical front. Crude, they have snapped the 3-day gaining streaks. A little bit of relief is definitely there. And if you look at overall how the momentum is moving, Street is still expecting price or diesel, price hike coming in for this petrol or the diesel segment. The focus will be there on Trump and Xi Jinping, in markets this week, how things move ahead. But largely this is on the tariff issue rather than the geopolitical developments, but we'll definitely be watching out for. But let's look at the earnings also. The Q4 earnings, that is something which we'll be watching out for. We have Bharti Airtel, we have Cipla, Tata Motors CV, DLF, to name a few, and these are the stocks which should be in your radar. And of course, during the market hours, we might see the numbers coming in from Cipla. But nevertheless, there is a breather for the markets, but we wouldn't say that there is a very strong trend coming up, whereas a lot of cues and earnings are there. Back to you, Mahima.
Right, Sharad. So we'll be watching out for all that action, right? Right now, let's take a quick look as to what the watch list looks like. What are the stocks buzzing and why are they buzzing? Now, firstly, jewelry companies are in focus, all seeing some pressure in trade today because gold and silver, as well as platinum import duty, has been risen from 6% earlier to almost 15% now, and this could hit the margins of these jewelry companies. So we're seeing pressure in Titan, Kalyan, Senco, etc. Pine Labs is the other one where there was a share lock-in expiry, and because of which we're seeing the pressure coming in this particular counter. Same as Niva Bupa. Here also there was a share lock-in expiry, and because of that we're seeing pressure coming in for this counter. The other set of stocks that are in focus ahead of earnings is Airtel and Cipla. Both of these stocks, running ahead of these of the expectations. Dixon is the other one which is expected to have a flat sales volume growth, and that is why it is one of the stocks in focus. Vodafone Idea, however, is zooming in trade today, probably to consider a fund raise, and we'll of course give you more details on the show on this one as well. But that's buzzing on the back of that. Tata Power is the other one where overall earnings was a muted growth. The net profit was where the area of concern was, and overall numbers were below expectations, and that is why we're seeing that downtick coming in the counter. In terms of Texmaco Rail, big win, 4,000 odd crore of order win is what the company has gotten, and that's why we're seeing zooming moves coming in this particular counter. IFL Finance is another trading counter where there is positive impact of so the settlement of tax assessment basically has happened, and that's why we're seeing positive moves coming in on this one. Ratnavir is the other one which eyes higher ROE and ROCE in FY27, and that's why we're seeing positive moves coming in on this one as well. Berger Paints also is the other one. Good Q4 numbers, volume growth very steady, and outlook also looking steady. I think decorative volumes saw very good growth, and that's why it's been buzzing positively in trade today. And Asian Paints also, in fact, buzzing on the back of that. Possibly, the price hikes that they've taken will augur growth going forward as well. And one of the top volume buzzers is Asian Paints, and then top Nifty gainer as well. Deccan Gold, again, this is one of the counters that's buzzing on the back of the custom duty because it's a gold miner. It's a positive news flow coming in for this one, and that's why it's buzzing positively. Lastly, Rossell Tech Systems is the other one where it recorded the highest net profit in the last 3 years, and this is one of the counters where we're going to speak to the management also in the small cap buzzer. So this is one of the counter that's also buzzing in trade today. So that's with regards to where the entire watch list for today stands and where the action is in the market is actually coming in from. But Sharad, over to you for the rapid fire round.
Thanks a lot, Mahima, for that. We're joined in by Gaurav Sharma. Good afternoon, Gaurav. It's always a pleasure to have you. We'll start our rapid fire segment, and I have two stocks, Niva Bupa and Pine Labs. Both of them, of course, reacting on the lock-in expiry as well. Do you think either of these stocks good time to get in some positions in, or would like to avoid these counters? The counters are Niva Bupa and Pine Labs. Gaurav.
Hi, Shara. Very good afternoon to you and to all the viewers in NDTV Profit. Both the stocks have a similar story to tell today. The lock-in has ended. Pine Labs witnessed steep sell-off. Niva Bupa slightly holding around, just about 2% down, and looking at attractive as far as the chart patterns are concerned. So I'll go with Niva Bupa at the moment. Further slide towards 80 will be a good opportunity. Take a stop at 76 and look for targets close to 88.90 in the coming 1 to 2 months.
Right, and Gaurav, your views on Cipla and Bharti Airtel just ahead of the numbers. Any kind of a positioning can be there. Their numbers are coming today.
I was always been a admirer of Bharti Airtel, a very fine value creator. Although as of now some kind of beating is witnessed, it is trading off highs. Further slide towards 1600 will be a very good opportunity.
Right.
I still wonder whether that will be possible.
Right,
or not.
Gaurav, we'll come back to you once. Cipla's numbers is out. Mahima is analyzing the initial numbers. Mahima, what are the numbers stating?
Right. So overall, I think we're seeing some bit of a reversal in with regards to where the charts go from the day's low point. Overall, some positive gains is what we're seeing on Cipla. Net profit at that 555 crore versus that of an estimate of 700 crore. So a miss in terms of where the bottom line goes. Revenue at 6,500 odd crore versus that of an estimate of 6,700 odd crore. So slight miss there, but largely in line in terms of where the top line goes. Margins at 14.6%. So miss in terms of where the margin also goes. So initial reading is kind of suggesting as to the numbers don't look really positive. Even in terms of where the EBITDA number goes, there's a slight miss when it comes to the EBITDA number as well. If you can try to get that number flashing, there you go, 955 odd crores versus that of 1106 odd crore. But I think we'll soon be joined by Varsha, who tracks this very closely. So Cipla, let's try to pull the chart up as well in terms of where it is at right now. But Q4 overall is in terms of profit. In terms of profit, it's a big miss versus the estimate. But in terms of revenue as well as EBITDA, it's a slight miss. I think we have Varsha, who's standing by, who tracks this very closely. Varsha, big miss on profits, but what's the first cut looking like?
Yeah, Varsha.
Should I start? Yeah, overall the numbers are actually weak, which was expected, and it has missed estimates. The numbers were expected to be weak, and it has missed estimates, and hence if you see, the overall performance was expected to be weak on the back of pricing erosion or on the back of lower sales from Revlimid, and of course the Lenirotide, which had a minimum contribution to the overall business. Now, Lenirotide is nothing but a drug which is used to treat hormonal disbalance, and Cipla's partner Pharmathen has received import alert, and that unit produces Lenirotide for Cipla, which has a significant sales to the top sales contribution to the Cipla. And also the high base in the US last year makes the decline look sharper, though we are actually waiting for the press release to come, and we'll actually know how the US market has performed. But unfavorable product mix has of course impacted EBITDA for the company, and the Revlimid sales and Lenirotide sales have impacted the overall numbers, and hence we are seeing this miss on the overall number. But yes, we are waiting for the press release.
Thanks a lot, Varsha. We'll be tracking Cipla's earnings and also the internals, and a very interesting take coming in. Just wanted to get your views in. Mahima, if you could just get the chart in.
Let's try to pull the Cipla chart up. Shayad, it's not doing much, not reacting much probably. Let's try to pull the chart up and see as to what it's doing in trade right now. There you go. Although now it's off from its day's low point, in fact up 1% as we speak, though it's not matching its highs for sure, but it's still come off from its day's low point. In fact, if we take a look at the chart from broad end of spectrum as well, if we can try to pull up the 1 week chart and see as to how it's done, it did try to touch its last resistance, in terms of where, which was around 1380, but it broke that, and now it's trading, around that 1300 odd level. So the crucial resistance here would be around that 1370 mark, and the support right now for this one is at around 1165. So that's with regards to where Cipla charts go. But if we have Gaurav on the line, I think Gaurav, any view on the charts for this one? The stock is climbing as we speak, 2% move coming in for Cipla, though missing estimates, but I think some positive commentary is something that the street is probably estimating and probably trading on that. But on the charts, your view?
Mahima, hi. Good afternoon, first of all. Yes, it is an underperforming stock within the pharma space itself. Still, also, I don't find any meaningful uptick coming in. I'll wait for some more time, let the stock settle down. 1375 is the breakout level. Once it surpasses that range, then only it has potential to climb up to 1500, 1550 odd levels. Until then, it is a void from my side.
Just to point out, the RSI just has crossed that 60 mark, not percent, but 60 mark, and that's why that's something that we'll be watching out for. But like he said, there's no momentum that we're seeing on the stock right now. So that's of course with regards to where Cipla goes. There you go. There's a tax expense of around 157 crore versus that of a 279 odd crore is what we're seeing. So of course that's with regards to where Cipla goes. But let's go back to the rapid fire round. Sharad, over to you.
Right, thanks a lot for that, Mahima. The next stock in the rapid fire segment is Tata Power. Gaurav, your view on that Tata Power? Of course, the numbers were on the weaker side.
Again, Tata Power has been one stock that has, not been on the radar for quite some time, just because it is trading sideways. Numbers also on the dismal side, and knee-jerk reaction seen there. I still don't find any hope in this stock as far as short-term trading is concerned. Long-term investment is completely a different story. I'll advise to take a stop at 395 in this stock if someone is holding it, especially from a trader's perspective, because this stock will again struggle to surpass 445 zone.
Right, and the next stock is Texmaco Rail, a very strong order win, and that also an export order win coming in. Stock has been doing well. Do you think further up move is possible in the stock?
Pretty much, and why not Sharat, a company having a 4,800 market cap, getting a 4,000 plus crores of orders, especially from the international front. This can completely be a turnaround story for Texmeco Rail. If we look at their annual sales figures, this particular contract also surpasses their annual sales front as well. So a very big development for this company, clearly positive viewpoint.
And IIFL Finance also important developments coming in. Your view on that? Do you think this rally might sustain going ahead?
IIFL Finance is underperforming, trading in the range, trading below its short, long, and medium-term averages. I'll wait for some more time. I'll only take a position closer to 500 odd levels. That is a breakout find. Then only a subtle up move can be expected toward 540, 550 zone. Until then, it is better to avoid.
And strong earnings coming in from Ratnavir Precision and the outlook as well. Anything on the charts?
Ratnavir, again, not too great as far as charts are concerned. A sideways kind of a move was seen. But yes, if someone is having a position, they can hold on to their long position. Fresh buying is advised only when the stock crosses by 190 odd levels. Thereafter, it has potential to go up to 210 and 220 zone in the coming couple of weeks.
Right. That's the end of the rapid fire, Gaurav. And over to you, Mahima. What is there in the Google trending stocks?
Right. Let's try to pull that up and see as to what are the stocks that are trending on Google currently, and see as to why, of course, these are trading. There you go. MTAR Tech. This is on account of them raising guidance, probably, that we're seeing. A lot of people searching for this one. Oil India is the other one. Back on. Asian Paints buzzing today, top nifty gainer, of course, and Bharat Forge is the other one. Gaurav, I'll take your view on MTAR Tech specifically. The management has gone ahead and raised their guidance, and I think we seem to have lost Gaurav, but we have Siddharth Khemka, head of research wealth management at Motilal Oswal, joining us now. Siddharth, a very good afternoon to you. Thank you so much for taking out the time. We were just pulling up stocks that are working well, and in terms of Google trends and what people are searching right now, and MTAR Tech seems to be the one that people have searched most today. This is on account of the management raising the guidance, of course. Any view on this counter?
Hi, good afternoon, Mahima. Glad to be on the show. I think if you look at MTAR, it's a strong structural story that we like. It is well positioned to benefit from the Oracle Boom Energy partnership, and Bloom Energy, which is its technology partner out of US, with a 60 to 70% wallet share in the critical assemblies in the fuel cell business. So I think with the growth or the global growth of AI, while we do not have a direct AI play in India, what the market is looking for are some of these related players which will benefit from this growth in AI data centers, and hence we are seeing that kind of strong growth, strong business growth, as well as strong interest both from the market as well as strong growth. So what we are forecasting is almost an EBITDA CAGR of 65% and net profit CAGR of 90%, and hence we believe that the strong growth would continue to enable this company to attract the premium valuation, plus the recent upgrade in the terms of growth guidance, that is only adding to the growth and the visibility for the company going forward. So yes, we have a very positive view there, and we believe that the strategic positioning in the clean energy solution and the increasing adoption of reliable on-site power for data centers, that will drive the growth for MTAR Technologies.
Okay, all right. So that's the view coming on MTAR Tech. But Siddharth, the other pack of stocks that are in focus today is the jewelry counter, right? We've seen an increase in custom duty of import of gold, silver, as well as platinum. Earlier, for basic custom duty, the rate was 5%, which has gone up to 10%. And for cess, it's gone from 1% to 5% now. So overall effective tax now stands at 16%. This was the case, before 2024 as well, because the budget had reversed this and had brought down the tax rate to 6%, but they've now gone back and reversed the same again. So just want to understand, according to you, considering that there will be near-term pressure on a lot of jewelry companies because working capital for them will go up, plus demand could be subdued, people might delay their purchases. What's the view like for jewelry counters right now, and which are the counters that you still remain bullish on?
So definitely, Mahima, I think this was something which was in the coming with the Prime Minister giving an advisory last few days that Indians should try and avoid purchases of gold, gold jewelries at max at wherever possible. And I think that is in this environment where we are at an all-time low, record low rupee, this kind of measures being taken by the government, as we are one of the largest importers of gold. And I think this will definitely discourage some volume and dampen the volume growth in the near term. But I think if you look at some of the nationalized players, for example, players like Titan, that is something that has been consistently gaining market share. And with this kind of factor coming in, I think even the case for a large nationalized branded player like Titan will go up further. So as I said, near term, definitely there is a negative pressure because of the pressure on volume growth. But slowly, gradually, I think any declines on stock like Titan over the next few days can be taken as an opportunity to add to a long-term portfolio. This is one of the few large cap stocks which has shown consistent growth. Plus, what we are also forecasting is that a 20% earnings growth for the next 3, 4, 5 years. That kind of visibility in a large cap is something that will create a lot of value for long-term investors. So I think, yes, near term, definitely pressure, but slowly accumulate a quality stock like Titan. Some of the other players, I think, may be under pressure for some more time. So I think better to avoid the remaining players for now.
Right. On to Bharti Airtel is going to come out with its quarterly numbers also, and to decode that, what are the previews suggesting? We're joined in by Somit Sarkar. Somit, what are the expectations for Bharti Airtel? Well, muted set of numbers is what is expected from Bharti Airtel in the fourth quarter. Revenue and EBITDA is expected to be higher by just 1 to 3 odd %. EBITDA margins are expected to come in at 58.1, while the net profit number could be higher at around 16%. Now, if you look at the India mobile business, there the revenues are expected to be up by around 1%, EBITDA similar kind of jump, and subscriber base is expected to come in at close to 37.2 crore as against 36.85 crore, while the ARPU number is expected to be flat on a sequential basis at close to 259. But do remember, in the fourth quarter there are 2 less number of days as compared to third quarter, and that is the reason why ARPU is flat. Had that not been the case, ARPU would have increased for Bharti Airtel in the fourth quarter. Now, apart from all the other segments, only broadband segment is expected to report some kind of growth on a sequential basis on the back of subscriber addition and ARPU stabilization. Apart from that, all other segments will report a muted set of numbers. Now, Airtel Africa has already reported its numbers, and they were a pretty much strong set of numbers. So some rub-off effect, positive rub-off effect of the same could be seen in Bharti Airtel's consolidated numbers as well. But the key things to watch out from Bharti Airtel numbers would be how they are reorganizing their strategy towards Airtel Africa, what is the kind of ARPU increase that they are expecting, any tariff hikes going forward, and how they are seeing what the capital expenditure plans for FY27 would be important to track. Right, interesting to track the Bharti Airtel. Thanks a lot, Somit, for that. But Siddharth, just wanted to get your perspective also for this stock. How are you seeing this, for Bharti Airtel?
Definitely, Sharad. I think the stock has been under pressure largely because of few factors. The price hike has not happened for almost now 18 months, and I think now the street is not expecting a hike until the Jio IPO comes in. So that is kind of a bit of a drag or an overhang on the Bharti Airtel specifically. The second is the recent news flows about the restructuring of the Africa business, the shareholding restructuring, where there is likely to be some cash outgo from Bharti to the shareholders of Bharti Enterprises, which is the promoter-owned entity. While the amount is not significant, but that does raises the questions on capital allocation in that sense. In terms of quarterly results, a pretty steady quarter. We expect Bharti's consolidated revenue to rise about 1.6% Q on Q. There is likely to be a strong growth in the home segment, which is likely to go up 9% on a sequential basis. Africa business is likely to increase 3%, and there will be some benefits of the FX movement.
Right, Siddharth. Definitely. Another counter is something we should focus on. That's Dixon Tech. Of course, on the back of numbers, the stock is buzzing. But what's the entire story about it? We are joined in by Puneet. Puneet is going to explain us. Puneet?
Well, thank you for that. It's largely what we are seeing that even though the results weren't the greatest, just 2% growth in revenue and EBITDA has actually fallen as well. I think what the street is looking at is that the volume guidance has been given flat. If Vivo happens, it'll be over and above this. So 32 million smartphones, that's similar to the FY26 number. But the management highlighted on the con call that, you could see they are very, very close to the approval for getting for the Vivo JV. Now, it's been a 17-month wait since 15 December 2024 when the JV was announced with Vivo. They've still not gotten approval, but that will be the incremental volume push. And I think that's one of the key factors. And the acceptance that the mobile business is not the only one to look at. Industrial EMS, they are late to this opportunity, but it's something that they will look at very aggressively in the next 1 or 2 years, and a big acquisition that the company has said in the next 1 to 2 quarters.
Thanks a lot, Puneet, for that, and that's one of the key reasons also why Dixon Tech is gaining in trade. Siddharth, a quick view on Dixon Tech right now. What happens now?
Yeah, I think a lot of factors at play. So while we are positive on the long-term prospects for Dixon, we have a target price of almost 14,000. The stock is at its lows, but I think the key factors would be the smartphone volume traction going forward, which has been weak recently. The approval for Vivo JV again pending for a long time. PLI 2.0, which could focus on boosting mobile exports, and the pace of commissioning of the display facility, which would happen on the second half of FY27. For now, we are forecasting about 12% earnings growth. And for the valuation, we believe that the stock could remain sideways in a broader range until there is some of these triggers which play out. The main trigger being the approval for the Vivo JV.
Okay, all right. So that's the view coming in on Dixon. But, a late night rescue operation in Chhattisgarh has disrupted a trafficking network targeting one of India's most vulnerable tribal groups. While the rescue of 13 Baiga children is a significant victory, the other story lies in the coordination behind it. By linking police enforcement with NGO intelligence, the state has demonstrated a working model for the child protection ecosystem. Listen in.
In the Kabir Dham district of Chhattisgarh, a coordinated effort has led to the rescue of 13 children from the Baiga tribal community. These children, aged 8 to 15, had been missing from their homes for nearly 8 months, trapped in a cycle of bonded labor and exploitation. The operation began after Association of Voluntary Action, or AVA, an NGO partner of Just Rights for Children, alerted police about information they had received regarding children allegedly being forced to work like bonded laborers. Acting on the information, police teams led by Superintendent of Police Dharmendra Singh launched late-night raids in Chhattisgarh's Kavardha, about 110 kilometers from the capital Raipur. During the first raid, 4 frightened children were rescued, and what they told officials led to an even bigger breakthrough.
उनसे जब बातचीत की गई प्यारपूर्वक तो उन्होंने बताया कि साहब आपने हमें तो बचा लिया, लेकिन मेरे गांव के और भी बहुत सारे बच्चे यहाँ पर बदवा मजदूरी कर रहे हैं। उनकी निशानदेही में बाकी जगह जब छापामारी कार्रवाई की गई तो टोटल 13 बच्चे हम लोगों ने बरामद की पुलिस के साथ।
During counseling, officials discovered that all 13 children belong to the Baiga tribe, one of India's particularly vulnerable tribal groups. The children told counselors they were made to work from morning till night and were paid just ₹1,000 to ₹2,000 per month. Police arrested 10 traffickers and have now registered cases under trafficking, bonded labor, child protection and child labor laws.
अगर इस प्रकार की और भी किसी की कोई गतिविधि में पाया जाता है उसके विरुद्ध भी सख्त कार्रवाई करेंगे और किसी भी प्रकार की कोई किसी को सूचना मिलती है तो मुझे या हमारी पुलिस को या जरूर बताएं या इस संस्था को बताएं जिससे कि हम उन बच्चों तक पहुंच सकें और उनका सहयोग कर सकें.
But for child rights groups, rescue is only the first step. Rehabilitation, education and reintegration are just as critical.
जिन 13 बच्चों को बाल कल्याण समिति के समक्ष जीआरसी आवा और चाइल्डलाइन की संयुक्त टीम ने प्रस्तुत किया, उन सारे बच्चों को शिक्षा शिक्षा से जोड़ने के लिए शिक्षा विभाग, डीएम और श्रम विभाग को, संबंधित विभागों को निर्देशित किया गया है ताकि बच्चों का समुचित विकास हो सके। बच्चों के रेस्क्यू और पुनर्वास की प्रक्रिया में जेआरसी, पार्टनर और आवा की महत्वपूर्ण भूमिका रही।
Across India, organizations within the Just Rights for Children network say trafficking, child labor, and child marriages are often deeply interconnected, trapping vulnerable children in cycles of exploitation. And that is why this case serves as a blueprint of what can be achieved when a vigilant community, an informed civil society, and a responsive police force work as a single unit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
Hello and welcome. You have tuned into the special offering on NDTV Profit, the Bullion Blow. And I have with me my colleague Shreyansi, I'm Nisha, and we are going to take you through the big story of the day today and its overall impact. So today's big story, India has sharply raised the import duties on gold and silver, lifting the effective tax from 6 to 15%, a move that could really make bullion and jewelry significantly costlier for the consumers. What this government's move does is disincentivize gold imports, which will arrest the forex outflows and also arrest the rupee fall, which is the need of the hour for our economy. Now, it impacts the consumers, jewelers, companies and their stocks. For jewelry companies, higher duties mean rising input costs and tighter working capital, while near-term demand may cool just ahead of the festive as well as the wedding season. So looks like for a country which is really in love with the glitter of gold, Shreyansi, it looks like this wedding season could be a little bit of a dampener now.
Absolutely, and it does start to look a little bit damper as well. The sparkle really seems to be dimming just a bit. And before we move on to that, let's quickly also zoom out just for a bit and take a look at some of the factors that you should be watching out for gold as well. You know, in terms of gold, you do have Fed rate hike bets, and you're looking at about a 40% chance that is being penciled in right now on that front. Now, that's, of course, something that you're looking at. Other than that, central banks have also ramped up their buying. So PBOC, in fact, bought most gold that they have since April 2024, quite recently. That's something that you're looking at, which was a very important headwind back in 2025 that's making a comeback yet again. So that could still stabilize prices as well, and that's something that you're looking at. And other than that, de-dollarization and safe haven buying, also something that you should be keeping on your radar that could be really cushioning this blow, and those are some of the factors that you should keep on your radar. But as we do that, let's also get a ground level view in terms of how this duty hike really reshapes the gold and jewelry industry. In fact, Mahima is standing by with that number crunching.
Right. So, you know, just to give a background as to what's happened, right? So earlier in 2024, July 2024, the budget had reversed this duty structure. They'd taken it back to around 6%, both the basic custom duty and cess combined. But that has now again been reversed. So there's a Uno reverse play here, where now we're looking at basic custom duty at 10%, cess at 5%, and that takes the effective overall import duty at that 15% mark overall on import of gold and silver both. Additionally, jewelry findings will attract a duty of around 5%. Platinum findings will attract a duty of around 5.4%. And concessional duty provisions for import of catalyst or ash containing precious metals will also attract a duty of around 4.4%. Plus, on top of that, concessional duty with regards to UAE imports will also be taken into consideration, and you know, there will be duty hikes there as well. So that's point number one. Now, in terms of how this overall impacts companies, but before that, you know, it's important to take a look at the gold import data as well, because overall in the past couple of years the gold import data has been rising both on account of value as well as volume. As far as FY26 goes, the overall estimated increase is around 24% in terms of value, but volume slightly, where FY25 goes, the downtick was around 4%. But India is the second largest consumer of gold imports after China, and we consume all the gold that we import. So that's why this becomes very important. Now, how this impacts jewelry companies as a whole is because, one, raw material cost will become expensive for them. So that means they'll have to keep more working capital, pay more interest on that. On top of that, demand could, see some subduing because purchasers could kind of delay their purchase because of this hike in duty. And lastly, in terms of where margins go, companies might not be able to pass on the full price hikes to the consumer, and that is why their margins will get impacted. And on the back of that, a lot of stocks remain in focus. All your jewelry names, from Titan, Kalyan, Senco to Thangama, LPC, Jewelers, etc., get impacted on the back of this. But then on the flip side, you have something like a Deccan Gold, which is doing fairly well because it's a minor and it benefits from this price increase. So this is the overall view of what's happened and its multiple impact on the economy as well as stocks.
All right, Mahima, thanks so much for summing it up for us. It's a big developing story today, and it was the need of the hour, as economists also put in that there were some measures that were expected from the government, and this is not all for arrest of rupee fall. There could be more. But let's focus on the jewelry industry and what it means for the overall sector as well. Shivankar Sen, who's the MD and CEO of Senco Gold, as well as Vandana Bharti, Head of Commodity Research at SMC Group, joins us now. Shivankar, starting with you, what does this really mean for the entire sector?
Well, what the steps the government has taken, I think it's the need of the hour. And the industry is with the government in whichever ways possible so that the current account deficit could be controlled and the rupee can be made stronger. So short term, we understand that this increase in duty will lead to certain outcomes. One is that consumers will go consumption, and that would directly lead on to lower imports for India. So that is number one. Number two, I think as an industry, we are also working towards encouraging consumers to exchange their old gold. So the household gold that is already lying in the houses, just imagine that the value of their gold goes up by almost 8-9% overnight. And I think that those who have weddings in the family, who had to buy jewelry in terms of their need, I think that it's a good opportunity for them to come and exchange their old gold. So I think all the retailers, we are also taking steps. Initially, we were a little, maybe 1 year, 2 years back, the old gold exchange was about 25-30%. Today, it is about 50-55%. So we are also relaxing certain norms in terms of deduction and losses that we charge the consumer when they give their old gold, just to encourage them to give their old gold, and that would indirectly help the economy to reduce imports. So that is the second thing that we shall be doing. The third thing, I think that it's going to be a 6-month, 1 year time for the economy to stabilize. There is meetings happening today between India and Iran. There are meetings happening between US and China. And if the outcome of those meetings become good and the crude oil prices cools down and we can see the rupee getting stronger, I'm sure that that would have some benefit, give confidence to government. And over 6 months, 1 year time, the duties could come back. But for now, we are also from the industry side requesting the government that along with this step, we must plan to mobilize the 20,000, 30,000 tons of gold that is already lying in the economy. That is the real gold mine that India is sitting upon, the temple gold, the household gold, the gold lying with the ETFs, mutual funds. And then the faster we can all come together and solve this problem, I think that will really do a lot of good for our country.
No, absolutely, and it does look like that gold mine that you've talked about, that could be tapped as well, given that you do have this measure that's kicked in right now. Thank you so much for helping us out with that context. I'll also take it across to Vandana. Vandana, I wanted to try and understand what you think about the key tailwinds, what's going to be happening from here as well, and what do you think will arrest this sort of uncertainty right now, because there are a lot of tailwinds that you're looking at with everything put into the picture, because there's central bank tailwinds that you're looking at. Other than that, there's a lot that you're looking at when it comes to gold prices, just as Mr. Sen also highlighted. Can you take us through some of the tailwinds that you think can be driving the momentum? Can you take us through what you expect for gold prices as well?
Continuing the discussion of Mr. Sen, I think that EGR is a very good concept before this custom duty hike. EGR sort of tool can help Indian investors. And if we talk about the gold prices, yes, the 70% rise in the prices in 2025, it is giving a real headache to the Indian consumer as well as the Indian government, because ultimately the volume is same, is remaining the same, but the value it rose drastically, and the total import bill was of around $72 billion, I suppose, in 2025, and it is giving a big hole to the government pocket. So yes, for the time being, this step is really needed by the government, and the entire economy, the entire people, they are with the government, and more strong steps should be come in coming days, because The real problem is supply disruption of crude oil prices, and behind the curtain they are talking, but there is no concrete result yet now. And the entire world, they are eyeing on the US and China summit. Let's see, we are keeping our finger crossed for some kind of cool down to the prices of crude oil, because China is trying to for the supply side, smooth side from Iran and all, and that will give impact on the whole economy, including the gold prices and all. And INR is the real concern.
Absolutely, Vandana, and that just about sums it up. I'll come back to you with that question in terms of those tailwinds as well. But, as we do that, let's also get some more context right now, because as India has hiked the duty on gold and silver imports, the country's deal with the UAE is going to also be in the spotlight as well. You're looking at gold bar imports from UAE rising sharply from $2.9 billion back in 2022 before India-UAE CEPA as well to somewhere close to $16.5 billion in 2025. Rishabh is standing by with some of those important details.
Absolutely. As you have this import duty on gold that has been hiked, another key aspect of gold imports in India is, of course, via the United Arab Emirates. And the India-UAE FTA, which is called as the CEPA, is at the center of this. Now, let me tell you why it's in focus. What we've seen since 2022, since this trade deal was started, we've seen the fact that gold bar imports have risen from roughly $3 billion in 2022 to about $16.5 billion in 2025. And this is all thanks to a tariff rate quota mechanism that has been established between the two countries. What essentially this is that gold imports can come in at a 1% discount, tariff discount. So that incentivizes a lot of importers to import via Dubai or other cities in the United Arab Emirates. And that's why we've seen a lot of sort of import pressure is also, of course, at this import hike that has come. What we've also seen is that this quota is roughly at about 120 tons right now, but it will go up to 200 tons from 2027. So it will cover a lot of India's entire gold diversification. Roughly 25% of India's gold demand will be coming in from UAE, and that will be at some sort of a discount thanks to the India-UAE FTA. So what we've seen is a lot of sort of pressure that has built up as a result of this FTA on, especially the import bill, because you've seen gold imports go, total gold imports to India that has go from about $36.5 billion in 2022 to $72 billion now. And it makes up a substantial chunk of India's import bill. So that's what we're picking up when it comes to the India-UAE trade.
All right, so that's an important aspect to also watch out for. Thanks, Rishabh, for all those details. But remember that oil has become the new gold for the country, and our import bill is really inflated because of the crude oil prices going up. Kumar Jain, who's the national spokesperson of IBGA, joins in now. Thanks so much, Kumar, for joining in. Of course, with this particular move by the government, it will not only increase the prices of gold and silver, and how do you see, how is industry really reacting to it? And second, the old days of, smuggling of these precious commodities really has a risk of increasing. How do you see this particular move?
Sir, repeat the question.
Yes. So, Kumar, I was asking the impact of this move on gold and silver prices, as well as the risk of smuggling again coming back.
Trouble, as Modi ji has announced, no buying a gold for 1 year. And this is secondly the rise on the stamp duty, which has gone 6% to 15%. It's a big attack to the customers. As those now it's a peak wedding season. People are coming to buy their jewelry for this purpose of purpose of the wedding and all. So people have stopped buying today onwards. You don't see the customer in the shops. People are waiting now. As it has gone so high, around 15,000 rupees has gone high, almost 15%, which is a big, I would say it's a big rise in the gold duty. They should have find other solution. As we find the customers bring their own gold So government would have taken that no GST on gold. Would have taken there is no exchange GST on while buying and purchasing. That would have been different solution. People have thought of it. Now it's a very difficult. It will increase more smuggling.
Yes. All right, Kumar, hold on to your thoughts. Shuvankar Sen, you heard the industry body and the association talk about it. Give us a sense on the increase of the prices. And second, last time we chatted, you had also mentioned that with the increase in gold prices, also the ticket size or the amount of gold used, you're making lighter jewelry. Is that something that has become a new norm now?
Yes. Prices were about 1,51,500 for 10 grams. Today, it is about 1,59,500. So it has gone up by 6 to 7% on an average. So that's been the kind of jump that we have seen. Yes, if the rupee starts getting a little stronger, you will see the prices cooling down, but 6 to 7% is the jump we've seen today. And because the prices have jumped up so much, or also anyway, the prices were on an upward trend. So we are, as an industry, looking at 2-3 things. One is that how do we make jewelry which is an 18 karat, 14 karat, 9 karat. So that would make the usage of 24 karat gold lower. And that would ensure that the job creation and the employment of the karigars continue to happen. So that is one part of it. Second is that the jewelry has to be made lighter and fitting into the budget of the consumer. And third is the old gold exchange. So if the consumer has 15 grams gold lying in their house, and if they come and buy 20 grams, so they will only have to pay for 4-5 grams, and the 15 grams can get adjusted with their new jewelry. So these are the 3 things that the industry would work towards to ensure that in the limited resources available and the availability of gold that is there, we can make the best out of it and fulfill the need of the consumer. So this is how it is. But as sir is saying, that initially, because of the price jump, I think consumers will be in a wait and watch mode, that whether the price will remain at these levels or whether the price will come down again, what is going to happen in the market. But once the prices stabilize, and I think the government shall also work towards the industry to give the confidence, and automatically we will see the consumers, because the wedding season is round the corner. There are a lot of weddings in June, July, and then the festive season comes in from August, September. So we will have to work towards making the full demand of the consumers fulfilled. So that's how it is.
Yeah, no, absolutely. Thank you so much for helping us out with that bird's eye view when it comes to demand as well as the festivities lined up. And with that, I'll also take it to Mr. Kumar Jain as well. Sir, pleasure speaking to you as always. Wanted to just try and understand, since you're joining in with fresh perspective from Zaveri Bazaar as well, wanted to try and understand what are the kind of footfalls that you're seeing right now, and do you also expect that lesser people are going to be turning up at the store for physical buying of gold?
Yeah, beg your questions.
Yes.
Beg your pardon?
Yes. So I wanted to understand if you think that the footfall is going to be reducing in Zaveri Bazaar and markets like that.
Yeah. Now, as soon as the Modi ji has announced that buy the gold, no, not buying the gold, people have stopped buying. We are also insisting customer not to buy the bullion. Just simply they come, then they buy just their festival purpose, festive season, like wedding reason. So just simply they buy 100 grams and get over. Otherwise, usually we have customers of a big buying, big ticket customers. But customers are there. Still they are buying little, very little.
No, absolutely, and that makes sense in terms of the kind of footfalls that you're seeing in Zaveri Bazaar as well. So there's a definite hesitation that you're seeing. That's the word coming in from Mr. Kumar Jain as well. With that in mind, let's also get to the word coming in from government sources that are informing your channel that the move to hike import duty on gold, silver and platinum aims at conserving forex amid Middle East uncertainty as well. And Shrimi is joining in with some more details on this one. Anshi, in fact, 5 reasons which has been given by the top government sources on the fact that why they have increased the import prices. And the number one is conserving the foreign exchange. That's very, very crucial. And they are underlining the fact that because of the gold import, there's a massive outflow of forex, and they are trying to curb this while increasing the import duty on all the precious metal, including yellow metal, that is gold. The second important point which they are giving, that already high crude prices along with shipping disruption already causing and widening your current account deficit, and adding on to gold will, making this entire maths of current account deficit more concerning. So this step is taken. The third important point, which is again very crucial, government at this point of time seeing the gold import as very discretionary in nature, non-essential commodities, and that is why this curb is put in place to sort of discourage people to spend on gold. So that's third point. And the more important, that government at this point, with the prolonged West Asia crisis, wanted to have a balanced approach. So this is not something that they're trying to ban, purchase or ban import, but they are trying to sort of discourage to have a more balanced approach as far as macroeconomic stability is concerned, and to maintain the economic resilience.
Absolutely, and thank you so much, Rimi, for joining us with that entire perspective when it comes to this exclusive as well. But let's also shift focus back to Zaveri Bazaar, which is something that we were talking about with Kumar Jain as well. The street reaction to the hike in gold and silver import duties is something that we should put the spotlight on as well. And we also spoke to the common man jewelry shop owners at Mumbai's Zaveri Bazaar, where jewelers are warning of a sharp hit coming into footfalls. Before we come back to our guests with some more perspective, let's take a look at what the buyers then had to say in terms of whether they're going to be shelling out all of this additional money from their pockets.
History has shown us that increase in custom duty is not a deterrent to buy gold. People in India are mad after gold, and gold is the only investment right now which has given excellent returns on buying gold. So that is not a deterrent. Only thing is that we feel the trade will go into the wrong hands because of high custom duty. Only smuggling will increase, and that will not be a very good deterrent to import golds. When the PM sir announced that 1 year you don't have to buy gold, since then we are seeing no footfalls at all in their stores. So people have really greeted the call well. PM sir's call well.
प्रधानमंत्री ने तो बोला है सोना 1 साल तक नहीं खरीदी करना चाहिए, पर घर में फंक्शन होने के कारण कुछ ना कुछ थोड़ा सोना तो लेना पड़ता है.
All right. So, Shubhankar, on this particular point, you heard the several consumers. And of course, the price is now not making sense. But gold is a very critical, part of our society, as well as many of our festivities and occasions and weddings, which is like a big fat wedding in India all the time. How have you seen the demand, and what is the demand picture that you're seeing after this additional increase in already elevated gold prices? Your final word on that.
So see, it's still early days. It's just been announced last night, and people are still trying to understand and kind of decipher what is the impact, what is the budget that they will buy. We could see that over the last, Sunday, Monday, Tuesday, when our Honorable Prime Minister announced that we should buy gold in limited quantities, people were a little cautious, confused. They wanted to understand that yes, if there is a need in their household, if there's a wedding in the family, whatever they had to buy, they would buy. But yes, the message is that don't unnecessarily buy and hoard your gold. Use and buy as much as you really need. And I think that currently there will be some amount of panic buying happening. People will expect the gold prices to go up further based on international geopolitical uncertainties, and that might get some footfalls. But I think people are in a wait and watch mode. There will be impact. See, volumes will come down. 10-15% volume is going to come down over a period of time. People will have limitation in their budget, and people will go for lightweight jewelry, but they will still buy because gold has been giving returns. Yes. Gold is a great cultural asset of the economy and the country. So it's only the quantity that will come down over a period of time.
Absolutely, and the significance extends beyond just jewelry as well. So keep an eye on stomach. That's sort of the kind of perspective that is coming in right now. Lighter jewelry is also something that you could be seeing being back in vogue, Nisha, but that's all the time that we actually have on the show right now. A lot of interesting inputs that we had, but thank you so much for tuning in.
That's right.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market your company.
Good afternoon, you're watching Small Cap Buzzers on NDTV Profit with me, Somit Sarkar, and my co-anchor Mahima. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade either on the back of price or volume. So what's on the show today? Firstly, we'll be speaking with the management of Rosal Tech. Now, if you look at this counter, this stock has snapped its three-day losing streak, and the company has reported its highest ever net profit in at least the last 3 years, and that's the reason the stock has been buzzing in trade. Apart from that, we'll be also speaking with the management of Ratnavir Precision. Now, the stock is up nearly 22% in the last 1 month, and the management has guided for higher return on equity and higher return on capital employed for FY27. So how do they plan to achieve this is something that we'll be asking the management today on the show. Apart from that, we'll be covering stocks like Texmaco Rail. They have won a major international order worth nearly 4,000 crore rupees. The stock has reported its biggest intraday move since March 2024. And then there is Suryodaya Small Finance Bank. Now that stock has snapped its 2-day losing streak, and the stock has managed to gain in 10 out of the last 12 trading session, and in this 12 trading session the stock is up nearly 27%. What could be the reason behind this is something that we'll get to you on the show today. And lastly, we'll be also talking about NIT Learning. Now, the company reported its numbers yesterday. The stock is down nearly 24% in the last 4 trading sessions. Management has guided for high single-digit overall revenue growth, which means that the organic growth will be marginally lower. And why this is the case is something that we'll try to decode on the show today. Now, if you look at the markets, the Nifty has snapped its 4-day losing streak. We are up in green around 160 odd points, but sell on rise strategy is something that we clearly see on the markets at this moment, because from the highs of around 23,600 we have come off yet again. Whether we cross that 23,600 mark decisively is something that we need to watch out for in trade today. If you look at the sectoral indices, among the sectoral indices, most of them have been in green. But when it comes to the small cap names, we are seeing some value buying coming in. Even in the sectoral indices, this Nifty Metal, which is the top gainer. In fact, do remember, SAIL stock was up nearly, Steel Authority stock was up nearly 14% in trade. On the loser side, we just have IT and auto, and clearly value buying is something that we are seeing when it comes to small cap names. Mahima, which are the key stocks that have been buzzing when it comes to the small cap names?
Right, so Soumit, second day of good gains coming in for Jindal Drilling, up almost 18% as we speak, this counter, and strong volumes also coming in for this one. The other one is GTL Infra, which is also buzzing, up 15.6%, followed by Texmaco Rail on the back of that 4,000 plus odd crore order win that we're of course going to talk about also in this show. Foseco is the other one, which is also up 15% in trade today. Jaro Institute also up 13%. Something like a United Polyol is also trading around 12% higher. Apart from that, there's Moltec Packaging, which is doing fairly well, up 11%. Veranda Learning also doing very well, probably on the back of the sentiment of NIT Learning as well. Ratnavir Precision is also one of the counter that is doing very well. So these are the counters that are buzzing positively in trade. But on the flip side, you have counters like NIT Learning, which is seeing a downtick of around 12% Arrow Green, which is down 5%. Something like a Visa Steel is down by about 5% and something like a Sheshashahi Paper seeing a downtick of around 5%. This is on the back of the numbers that came yesterday. And something like Platinum Industries also down in trade today by about 5%. But let's get into our management conversations, and the first one that we're going to talk about is Rosel Tech. Now, overall, the stock is up 22% in the last 1 month. I think the company guides for a higher ROE and ROC for FY27. Overall, in terms of where the Q4 goes, it's been one of the strongest quarters in the company's history as well. To take this conversation ahead, we're joined by Rishabh Gupta, who's the managing director of Rosel Tech, joining us now. Rishabh, thank you so much for taking out the time. Mahima this side. My first question to you is that this kind of an exceptional quarter that you've seen in Q4, largely driven by semiconductor as well as the space business, if I'm not wrong. Help us, understand as to what your revenue breakup looks like right now, and what is it going to look like by the end of FY27?
Yeah, sure. So right now we're approximately 60% revenue in aerospace and defense and 40% non-aerospace and defense. That's going to go up significantly moving forward to 60% non-aerospace and defense and 40% aerospace and defense moving forward.
Okay, all right. The other aspect is, with regards to how overall FY26 has done, because you've seen a growth of around 87%, where the entire top line goes for FY26 of FY26. I just want to understand as to how this growth trajectory looks from here on, because last year you did a 20% odd growth. This time that's blown up to 87%. So FY27, what's the kind of growth that you're penciling in, both in terms of top line and bottom line, if you can give us some perspective?
Very similar to what we faced last year. We are targeting the similar growth, not only this year, but for the next 3 years. There's a lot of momentum in the different industries we're doing. And as a company, we're preparing ourselves for production ramp-ups and infrastructure upgradation. So that's where our focus is today, but looking at very similar increase in revenues and profitability moving forward.
If you could just take us through what has been the order inflow growth for you in the fourth quarter? How are you seeing this number to increase in FY27? And where do you see your overall order book?
Sure. So today we have 3,000 crores worth of strategic agreements. We have 750 crores worth of confirmed POs. We received 560 crores worth of POs in last year, which is financial year 25-26. And we've also submitted bids for 4,500 crores in the year. Decisions normally take 6 to 9 months after submission of an RFP.
And are you fully booked then for the year? Or do you have more capacity idle where you can take in more orders? Anything on that front?
Yeah, we can take in definitely more orders. In fact, we expanded our footprint in infrastructure. We've taken another 210,000 square feet building space on lease, which we start in August. So as a company, last year we were 250,000 square feet. This year we're going to be 460,000 square feet. So from an infrastructure perspective, we can take in a lot more, for sure.
And just for understanding, given the fact that in FY26 you did a revenue of 486 crore, even if you double this, it will be around 1,000 odd crore rupees. But you mentioned that your order book is around or more than around 3,000 crore and you have placed bids for 4,500 crore. So what is the execution time period for these orders?
So for the 3,000 crores would be approximately 3 to 5 years. For the balance 725 crores of POs would be 2 years. And again, it depends. For the 4,500 crores would be anywhere from 2 to 5 years.
What would be the margins for these orders?
Would be in the range of 17 to 22% moving forward.
Okay. Rishabh, you are also evaluating opportunities in the commercial aerospace, if I'm not wrong. What is it? I mean, have you already seen some order inflow, or are you bidding for that? How is it going to fare like? Just give us a perspective on that.
We're in dialogue with our different customers. They've decided to create a supply base for commercial in India, and definitely we are one of the shortlisted companies. So looking for significant traction on that sometime in the second quarter of this year.
And you expect the revenue flows in FY27, or that's going to be delayed considering execution timeline?
For the commercial would be more execution in 28. They would give 6 to 12 months after bid submission.
Okay. With regards to semiconductor, because, there are not a lot of listed players per se, but in the unlisted space, there are a lot of players that are playing around this theme, right? And globally also the competition is now getting intense. Just give us a perspective as to what are you doing differently that, makes you stand out as a company in the semiconductor space?
Look, it's the processes we follow. I think we've been able to create a reputation for delivering very, very high quality components at affordable prices. Our reputation is great. We're 100% delivery, 100% quality company. And because of our reputation, the processes we follow to build a component that's why we're getting traction from a lot of these customers. And it's been very successful entry into semiconductors. We've done really good revenue in the first year, which is going to go up by 400% this year. So the growth that we're seeing in the semiconductor is going to be very significant moving forward.
Okay. You are also planning to raise around 2,000 crore rupees via QIP, I believe. Has that been done? What's the progress on that front?
Not 2,000 crores. I think that's a wrong figure.
Okay.
We're looking to raise some capital, definitely looking to disinvest in a QIP anywhere from 7 to 10% of the shareholding.
Okay. And what is the progress? By when do you expect that to complete?
Dialogue is opening. We're looking for the right partners, looking for the right investors. So hoping in the next 2 to 3 months that should be completed.
Okay.
Okay, and I believe that this is going to be used for the expansion plans that you have, the entire amount.
Primarily 3 purposes. Yes, exactly. Capacity expansion to prepare for the larger platforms that we are foreseeing, to scale up production capability. The second is our operational infrastructure. We're tightening our quality infrastructure, our systems. And the third is for working capital for long lead inventory and to cater to all the production ramp ups we're foreseeing with all the different customers we work with today.
Okay, and the entire expansion that you're doing will be a mix of both debt as well as equity, if I'm not wrong. What is that ratio going to be like?
Moving forward, see, it completely depends when the QIP happens, but the idea is definitely to strengthen the balance sheet. That's what our customers are looking for, and to be prepared. The idea is to buy the raw material for the long lead items for the customer ramp-ups. So we have a very good idea of where we're heading as an organization for the next 2 to 3 years, and we're putting all the infrastructure, the tools, and the training in place now so we can execute this year and next year.
Okay, all right. Thank you so much, for taking out the time and speaking with us at NDTV Profit and, giving us all those insights. All the best for FY27.
Thank you for having us. Thank you.
All right, with that, it's time to slip into a very, very short break, but we'll be right back addressing more small cap buzzers on the other side, so do stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance.
Welcome back. You're watching Small Cap Buzzers. The other small cap buzzers that we're putting spotlight on is Ratnavir Precision Engineering. Now, this stock has been buzzing in trade today, up almost 22% in fact in the last 1 month. Today also seeing gains about 8%. And this is a company which is, given good guidance for FY27 going forward. Plus, there is fundraising on the cards. And to, discuss all of this, we are now joined by Vijay Sanghvi, who's the MD of Ratnavir Precision Engineering, joining us now. Vijay, very good afternoon to you. Mahima this side. Thank you so much for taking out the time. My first question to you is with regards to the fundraise. You've recently approved a fundraise of around 330 odd crore. Just want to get a sense as to how are you going to put to use these funds, if you can give more details on that.
Yes, good afternoon and thank you so much to connect. I can just say that the board has approved the up to 330 crores of the fundraise, and we have been recently getting the approval of the capital expenditure of the project of copper clad laminates, which has been 351 crores, and the working capital for the current business and the stainless business as well. So company has been growing with the 25% of plus CAGR growth into the EBITDA, top line, and the PAT. So this capital expenditure and for the working capital, this fundraise can be done. And we have been into the process for this capital fundraise, and once upon a time we will get it the updated news. We will be updated the same.
Right. Sir, coming back on the Q4 numbers, or in fact the FY26 has been a stable and a steady quarter for you. Revenue growth around 20%, profit growth of around 37%. What is the kind of growth that you're expecting for FY27 from the company?
Yes, that would be a fantastic year for us in 26, and also there is the fantastic growth of in top line as well as EBITDA and the PAT, and we look forward for the 27-28 would be a consistent growth. You see that last 14 quarters the company has been showing the consistency into the growth, and we have been very committed with the order book and the capacity expansion. The company has been successfully capex 1, capex 2, and the third capex is going on. So we could be very committed and very confident about the consistency to the growth in EBITDA of 25% CAGR growth, and as well as to the volume to value engineering can be done. And also there is a diversified capex also been going on, and we have been very optimistic and very confident about the consistent growth.
Vijay, just want to get a sense. I think if I'm not wrong, you've guided for a better ROE as well as ROCE for FY27, and this is after a decline that you saw in FY26. Considering that you just talked about your capex plans, what are the levers that will, augur growth to these ratios?
Yeah, so the ROC and the ROE it would be improved in the last year itself, and it could be consistently growing. And with the ROC and ROE, our capital expenditure have been successfully completed. Still, company would be into the part of the capital expenditures which can be planned for the next couple of 2 years, and this ROC and ROCE would be definitely improving into the strength. And equally, that company would be expanded the wings into the electronic sector, which would be very emerging sector. And also, the this copper plate laminate would be import substitute, and we have been very confident about this project.
Okay, moving on to the capex, you are talking about the CCL expansion. What is the addressable opportunity here, and does Ratnavir has a first move advantage here? Hi, sir. Okay, so yeah, as Mahima was mentioning, in FY26 the company's ROE and ROC have come down, but in FY27 they are guiding for an ROE of 16.1% and ROC of 15%. And yes, the management has recently received an approval for fundraise of 330 crore, and the management is back with us. So I was asking you about the total addressable market for CCL manufacturing, and does Ratnavir have a first mover advantage here?
Yes, sir. We could definitely very much. We have been working 2.5 years. This project would be approved with the ECMS scheme by the central government of India. Also, would be backed with the heavy capital subsidy incentives. Also, will be there, and it could be a first mover advantage. Definitely, would be with the company. Company has been a technological collaboration with the Chinese company for installation, commissioning up to the ROI of the first line. So company would be very much aggressive into this. And also there is a very important point that the CCL product would be substitute 100% to the imports. So might be it could be one of the first company in a country to be established such kind of the product. It could be used for the PCB industries, also to the chips manufacturing, and it could be a first mover advantage has always been there, and it can be transformed the company's image and company's brand value into the Indian market. Also to be a national, it could be a proud moment for the nation itself that the first time we have been producing such products for the electronics sector, especially for the PCB industry.
Right. Okay. Vijay, FY26, you've done around 20% of top line growth, which was 49%, almost 50% in 25 and 24% in FY24. Just want to get a sense as to what is the growth trajectory from here on. What is the kind of top line growth that you're penciling in for FY27, considering that you already have a strong order book which probably could cover 2 financial years. So what's the outlook in terms of top line growth and bottom line growth in FY27?
Yes. In FY27, our business plan would be prepared, and we could be 25% plus growth into the volume. So we have been targeting for the 1350 crores of the top line for the stainless business itself. Equally to the EBITDA can be also been increased up to the 24%, and the PAT. So we have been looking to the volume to value. So the PAT can be maintained with the 30 to 35% in coming years as well. And looking to the CCL business and the stainless business together in next 2 years, over the 2 years, once upon a time, all the capital expenditure can be completed. Our target line to reach by the 2,500 crore as a top line in the next 2 years, as well as with the EBITDA of 13% and consolidated profit with the 10% plus. So the company would be moving to drive into the value, volume, and consistency over that. Thank you.
Okay, thank you, sir. Thank you for joining us and giving us the way forward for Ratnavir Precision. Well, that was the management quite confident on the growth plans going forward. Moving on, let's get in Sharad to understand what's been buzzing on the FNO side. Sharad, the index has snapped its 4-day losing streak today.
Well, that's right, Somit, but largely it's a technical up move, and we have seen that earlier at 10:45 as well. A short covering for majority of the candidates and sea of green coming in as a welcome change. Asian Paints, BL, Adani Ports all doing the trick above 3%. Not major sell-off happening. ICICI Bank still in red, but of course TCS, M&M, Power Grid, they are there, but nothing major to be concerned about. Even the VIX is at its, you could say, at a neutral level. Stock specific, let's see what are the moves coming in. Long build up for Vedanta and NMDC. The metal pack has done really well, so there's a good basket buying happening in these counters. Apart from the long build up companies, let's look at the other companies. The short build up, we are having Max Financial. Of course, a little bit of earnings impact coming in. Stock is down 3%. Tata Power also on a mixed set of numbers. Stock is down almost 3% as well. Long unwinding, we have LTM and also Sun Pharma, but not that convincing also as a trade. Lastly, the short covering, we are having Dixon Tech, interesting, 7% up, and SAIL also, of course, after their numbers coming in, the stock is up almost 13% in the trade. Of course, we'll be looking at the Q4 numbers, but net, the overall sentiment, at least in the broader market, is positive.
Certainly, Shah. Thank you so much for taking out the time and helping us explain those FNOQs. But the next small cap buzzer that we're going to talk about is Texmaco Rail, because this one has won a huge order win of over 4,000 odd crores, and we've Jasmeet joining by to give us more details. Jasmeet, the stock is up 14%. Give us some more perspective on the order win.
Well, Mahima, thank you for that. As rightly said, the stock is buzzing on the back of that massive order win of over 4,000 odd crore rupees. Before we get into the order details, let's quickly understand what does the company do. While the company operates as a freight manufacturer where they manufacture freights and wagon freights basically, while they also operate into the steel and rail EPS system. Now, in terms of the stock performance, the company has seen the biggest jump in last 2 years, what we have seen today of over 13%. Further, if you look at the overall stock performance, the stock is roughly up 24% in last 1 month, and it's down 10% over 6 months. If you look at the last 1 year performance, the stock is trading lower 70%. Now, in terms of the order win, well, this order received is from an African entity where they say that African Logistics Company and Barbary Holding has given this order, while this order is expected to be completed in next 2 years, during FY27 and FY28. So we can see the overall realization coming in these 2 years itself. Further, this order also has a 15 years of maintenance contract where they'll be providing maintenance to the supplied wagon, while the scope of the order includes supplying over 2,000 plus freight wagons, also 30 locomotives. With this particular order, the company increases the stance in the overall African logistics space, and further we can expect that overall African geography could see more further orders going ahead. Now, on the other hand, if you look at the FY26 performance, it was on the weaker side. The overall top line saw a downtick of roughly 14%. While the EBITDA saw a downtick of 60% on the back of that low business volume we saw in the previous year. But the fresh start of the year with the new order is something to watch out for. How does this pan out in the Q1 going ahead?
Okay, Jasmeet, thank you so much, but stay on, because NIIT Learning is the other one that is also in focus today, although the stock is taking a knock of around 12.5%. Give us a perspective on what's happened here.
For that. Now, if you look at this particular counter, it has had a weak Q4 and a weak guidance from the management that is linked to the overall downtake. Now, if you look at what the company does, this company provides managed training services to various companies and is spread across 30 odd countries. In terms of stock performance, as rightly said, the stock is down about 24% over last 5 days. And when you look at the over last 6 months, the stock is about 31%. And over last 1 year as well, the stock has suffered down about 34 odd percent. In terms of Q4, what did not work for the company is a revenue downtake, which came below the street expectation. And that was on the back when the large clients pulled back their orders in the Q4 because of macro uncertainties, which led to the overall Q4 downtake. If you look at the other key aspect, the company has acquired few entities as well in this particular quarter, but the acquired entities had a low seasonal movement in the Q4, which led to the overall impact on the EBITDA, where it came in at 19%. Further, the overall organic growth has come in at just 7% for something like a company where NIIT Learning, where we said that the overall constant currency movement is coming at a slower pace. Further, the FY27 guidance for the company is guiding is for low single digit in terms of the overall growth going ahead, which has been disappointed. But the EBITDA is something to watch out for, given the company had guided a range of 20 to 21%. It has come in line, but further the commentary of what can happen in the coming time is something that street is worried about, and that's why the stock is down.
Okay, all right. So that's the view coming in on NIIT Learnings. The next one that we have is Suryoday Small Finance Bank. Now, this one is in focus and up 2.7%, almost 3% as we speak, off from its day's high point. But we have Shivam joining by to give us more details on this one. Shivam?
Well, yes, this Suresh
Suryoday Small Finance Bank has been snapped to session losing streak, and it has been gaining since in 10 sessions out of the 12 sessions past. Now the stock has also touched 1 year intraday high in today's session and has been giving a positive move. Now talking about the recent news on the bank, the RBI has reappointed Krishna Prasad Nair as the non-executive part-time chairman for 3 years, and earlier he was been appointed as an independent director for a period of 5 years in 2021. Now, and subsequently after that, he has been appointed as an independent non-executive part-time chairman for 3 years in 2023, and also has worked with IDBI and this Indian Overseas Bank in past. Now, looking at the recently posted Q4 results, overall the results have been on a positive side, where the NII has seen a growth of around 29%, and that was on the back of strong credit growth. The margins have also seen an improvement due to improved yields on advances, and in terms of profitability, the bank has seen a turnaround, and their profit for the quarter stood at around 50 odd crores versus a loss of 34 crores on a YY basis. And in terms of asset quality also, the bank has seen a slight bit of improvement. On the management commentary side, the overall positive commentary has been given by the management, where they have guided for a 30 to 35% of loan growth. The bank aims to grow the digital deposit by 2 times of the current growth, and will open 100 new branches in FY27.
Okay, Shivam, thank you so much for getting us those details. But viewers, with that, completely out of time on this edition of Small Cap Buzzers. But do stay tuned. Ask Profit comes up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Welcome back. You're watching NDTV Profit. This is Ask Profit, the afternoon edition. My name is Puneet Zaveri. Thanks so much for tuning in today. And if you haven't already done it, do start sending in your WhatsApp queries on the WhatsApp number that's flashing on the top of your screen. You can also call us, talk to us, as well as our guest on those stock-related queries as well. The landline number for that is also flashing on the top of your screen. But before we do that and a lot more, let's quickly look at how the markets are doing, because it's been a very interesting day in today's trading session, while we have seen some form of buying coming in the last hour or so, and hence we're now above the 23,500 levels at this point of time. The individual stock movers also give us some perspective as well in terms of what we've seen for the Nifty 50 as well. The other stocks like Cipla are some of the ones which are doing well. Asian Paints, probably on the back of good numbers from Berger, is getting a push as well. Adani Enterprises, BEL and Hindalco is also doing well in trade today. What's not doing well is power grid. It's down and the biggest loser for the Nifty 50 today, down almost 1.8%. But the trajectory largely of the markets has now been changed for the better, and we'll hope the last hour continues to do so as well. In terms of the sectoral heat map, also very quickly gives you that perspective of these movers. You are watching and looking at the Nifty Metal, which is up 3%. We've been flashing Steel Authority of India now at a 15-year high, the biggest move that we've seen for the stock, while the Nifty IT continues to be in the red for now, and auto also marginally. The mid cap and the small cap also is this something that you want to just put some perspective on as well, because the earnings haven't been too bad. So you're seeing a recovery from the lows for the mid cap, 150 up 1%. Small cap also trying to play catch up at this point of time, and finally the BSE 500 as well. Now here, Mahima put some perspective in the previous show as well, where you've seen stocks like Vodafone Idea now up almost 8%. Dixon is the one which is a very key one, and we'll put focus on India market close on this stock 8 again. It's largely been a miss on earnings, but the commentary, what is the expectation from the industrial EMS space, something that the management accepted was missed out on. Maybe they should have entered that a couple of years ago. Probably this could be the lowest point, or probably that the worst is over, is something that's reflective in the stock today as well. Embassy Developers, Berger Paints are highlighted as some of the other ones, while earnings for Cohance Life was a disappointer. Stock's down 6% right now. And Westlife Development, Westlife Food essentially is giving up some of its gains as well. So those are some of the individual movers, but let's go across and start taking your stock related queries now. Tapan Doshi, research analyst at CA-Tapan.in, now joining in. We'll be shortly joined by a technical expert as well. Tapan, very good afternoon to you. The first question, largely coming in now, this one, it's by Baba Sahab from Karnataka, and he's holding down to Vedanta at 309. Now, we've discussed this stock, Tapan, with you in the past as well. Do you think that it's a good time to continue holding the stock, look at the other individual listings that will happen for this one?
Yeah, you can hold on to the Vedanta. Good afternoon, Puneet. I think the stock is currently doing well, and if you see the metal rally is still on, of course, I'll be excited for the Vedanta aluminum when it is going to list it. But currently, if you see the zinc and I think and even silver is doing well. So I think one can hold Vedanta for next 1 or 2 quarters more. Still, I think the margin improvement may be there for Vedanta. Yes, so please hold it for a little bit longer.
Well, the next question coming in is now on ISGC Heavy Engineering. Stocks trading just up 1% today, but our viewer V Mulli from Bangalore has bought it at the current market price, essentially very close to that as well. Tapan, do you track this counter, and any view for Murli?
Well, ISGC, if you see, the stock has recovered a little bit from the bottom, and if I see the profitability, the problem with this stock is that the revenue is not going up. Now, 3 years revenue is just 5%, but profitability is going up. But I think the margin improvement is there, but improvement in the sales is not there. So my take is that no, don't add to this stock. If you're having the stock, please hold with a stop loss. Unless the revenue doesn't come, I think better not to invest in this stock.
Got it. The next question coming in now, it's on Irida. And Tapan, we've discussed the stock multiple times in the past, but at 128, Shankar from Bengaluru is asking if it's a good time to average on to his already a position of about 1,100 stocks and 1,100 shares that he's holding. Would you recommend that, or is there any better play in the space that Irida operates in?
See, IREDA mostly give loans to the renewable companies and all that, and I can see there's some pressure in the solar companies, okay? And I think the already valuation-wise, it's quite expensive compared to PFC and REC. So looking at the long term, I'll talk about the long term. I think at this level, no, I'll not go for IREDA. I'll go for better with PFC. I think long term there, the safety is there, and maybe better returns maybe in future.
Got that view, and probably it had run up quite a bit, upwards of 200, and now just basically seeing that correction. So even though it's fallen quite a bit at this point of time from those highs, Tapan Doshi recommending that there are other better plays like PFC. You also see the integration of REC over the next few months as well. The next question that's coming in is from Sarat, and his question largely being on Electra Green Tech. Bought shares at 1,630, so he is currently in the loss and holding 295 shares. Tapan, we've seen Essentially, the other day as well, Prime Minister's appeal to use diesel and petroleum products as less as possible. And we've already seen some states taking the baton for EV buses. What's your view for Olectra given all this backdrop? Should he just average down at this point of time, lower his target price from 1630?
See, if you see Olectra, its valuation is quite expensive, no doubt about it. No, but this company is doing well and they have a good order book also in future. Even if I see the guidance is also good. The only thing is because the stock gone up a lot and valuation is there is always you can say profit booking. So my take, if anyone wants to enter, no, just wait for some time, maybe around 1150 odd. If it comes down, you can add it. Not at this level. I think at this level valuation is a little bit high, but the company is good.
Company is good, valuation slightly more expensive at this point of time. Got that view, Tapan. The other one, it's we've been getting a lot of queries on IT at this point of time. E. Venkatraman from Bengaluru has 1 lakh rupees to invest, Tapan, and he's saying that a lot of the IT stocks are at 52-week low. The likes of TCS, Infosys, he's mentioned as well. He wants to know if it's a good time to enter this space now for at least a 15 to 16% appreciation. What would you recommend, Tapan? There's a lot of moving parts here, right?
Yeah, of course, there are a lot of moving parts. And see, honestly, I'm bearish in IT from last 1 year. And that's why we are not recommending any IT stock to our clients. But from here also, I think OpenAI created some another department also for the deployment of AI. So that is where TCS, Infosys are working. So you can see there is a competition everywhere, and that is where the margins will be a problem. Now, because it told 15-16%, the best bet. Honestly, I am not recommending, but the best bet is, I think, Coforge and Persistent. These are the two stock. If you want to go, you can go in a SIP level, but otherwise, large caps, no.
Got that view, Tapan. But let's go across, take another caller from Pune. And, Mr. Gupta is joining in for a stock query. Mr. Gupta, very good afternoon to you. What's your query?
Yeah. Sir, query, I purchased Sterlite Technologies.
Okay.
200 shares at the rate of 160 rupees.
Okay.
Sterlite Technology.
And is this for the short term, Mr. Gupta, or for the long term that you bought
it? I can hold it for longer period.
Okay, you can hold it for longer period as well. Got it. Well, Tapan, let me come back to you then, because he's almost, up 2.5 times his investment. What would you recommend him to do? Continue holding or book out some profits?
Well, first of all, big congratulations. From January 86 rupees gone to almost 400 rupees. So big gains. And now, see, Sterlite is in currently favor, and now everything is working for Sterlite. Even the theme is for Light. So I think he can hold it, but the valuation is too expensive. So my take is little bit profit booking should be there, and keep a stop loss. Okay, I think stock has run up a lot, so I'll not tell him to add, but yes, profit booking little bit and keep a stop loss in place. 10%, 20% now.
Got it. The next, viewers, as you might have seen, Rahul Jain from JM Financial also joining in. Rahul, very good afternoon to you. Let me pose a question to you very quickly on BEL. Uma from Bangalore actually wants to know on the charts if it's a good time to enter the stock. We've seen some pullback from that 450 odd level. Any view that you have on BEL now on the charts?
Yeah, correction, it is Rahul Sharma and not Rahul Jain.
Pardon me.
Well, coming to BEL, the defense pack continues to remain very robust. The Nifty Defense Index continues to do well over the medium term, short term. And today we're seeing a very sharp bounce back in BEL happening. My view is once it crosses 435, we could see very well the stock heading towards 450, 460 on the upside. So one can look to buy at these levels, maybe add once 435 is taken out. And the stop loss can be maintained at 425 for long positions.
Got that view, Rahul, and pardon me for the incorrect name, but let's go across, take another caller now from Bengaluru, and Venkat is joining in for a stock query. Venkat, very good afternoon to you. Welcome to Ask Profit. What's your query?
Good afternoon, Puneet. Very good afternoon to the members also over there. And in fact, yesterday I sold some stocks of Natco Pharma.
Okay.
And I have to invest about 75,000 rupees. I would like to invest.
Okay.
And I have shortlisted two stocks, Sai Life Sciences and CG Power.
Okay.
And out of these two, which is the best one? Or, do you advise me to invest in both the stocks or any other good stock which I can invest?
And Venkat, would you want to invest in both of these or either of these names for the long term?
Yeah, for a long term I'm looking for about 2 years.
Okay, got it. And do you have any existing plays, Venkat, in either the pharma space or the industrial space like CG Power? So do you have any other names in this space?
Pharma, I don't have anything. I was holding only Natco Pharma.
Correct, and you sold that off.
And it ran up very heavily, and that I sold it off.
Got it. Well,
and the power also, I don't have any stock as of right now.
Got that view, Venkat, and thanks so much for calling in. Tapan, he wants to invest between Sai Life Sciences or CG Power. Which is the better pick for the long term?
I think CG Power is quite good now. If you see that semiconductor unit is going to start, of course it will be a slow mover, but I feel that much more safety is there, and maybe in 1 or 2 quarters their semiconductor unit will start, and there also revenue will be there. Again, this whole segment is quite in demand. Of course, the stock has gone up a lot, but this company is good. The management is also good. So from safety point of view, I'll go with CG Power.
Got that view, but let's go across, take another caller now from Pune this time, and Vinay has a stock query for us. Vinay, very good afternoon. What's your query?
Yeah, good afternoon. See, I have a lot of Larsen & Toubro shares.
Okay.
Around 2,000 shares bought at 2,500 rupees. I want to replace it partially. Let us say about 1,000 shares. I have to replace it by which 1 or 2 better stocks which have much more potential growth in the next 2 to 3 years compared to L&T.
Got it. And Vinay, so this is of course a very big position, almost 50 lakh rupees that you invested, and actually it's worked out very well for you. Many congratulations.
Thank you.
So how big is this one position? Is this largely more than 50-70% of your portfolio? Or do you have any other stocks, or is this largely majority of it?
No, I have many other stocks, but this is more than 50% of my
more than 50%.
Entire portfolio.
Got it. And did you start accumulating it very early on, and you've been accumulating it for a while? Because 2,500, I'm guessing you took the advantage during the COVID times, during 2022?
Yeah, that's right.
That's right, got it.
That's right. I have been accumulating from that time onwards.
Well, Vinay, it's definitely worked out for you, 28 lakh rupees. Many congratulations. But Tapan, he's bought Larsen & Toubro at a very interesting time, held on patiently, so his gains are quite visible. Would you recommend him to reduce that position a little bit now for Larsen, given the uncertainty in Middle East? We've seen that happen. And with that sum, where would you want him to invest? What's a better pick? What a better space right now that you see for the long term?
So for the long term now, of course, he can reduce his position. For long term, I'll recommend 3 segments. Like one is EMS sector. Like Dixon yesterday came with the result. Okay, so even Sirma SJs look good. Not because this EMS sector is going to grow for next 2 to 3 years. Even he can go for hospitals. I think Fortis or Apollo, they are also quite good. Now, there also good revenue will go up. And another is hotels, Indian hotels or even ITC. There also you can see. I think these 3 segments will have a secular growth for next 2 to 3 years, so he can diversify if he wants.
Got it. Well, thanks so much for that, Tapan, and hopefully, Vinay, that answers your query as well. The next question coming in now, this one, it's from BSC actually, and yet again, Srinivas Rao from Hyderabad has sent across this question. And is in gain. So he's holding 20 shares of BSC. He's not mentioned the buying price, but he's in profits of almost 59 to 60%. So he must have bought it, less than 2,000 rupees given the current market price. Rahul, his question being if he should, book out some of those gains now, now that it's, run up quite a bit. What's your view?
Yeah, it would be prudent to take some profits off the table. The stock has done stupendously well over the last 1.5 months, and the view remains that around 3,900 it is better to take profits. So maybe wait for a dip for any re-entry. But as of now, it's wiser to take money off the table.
Got that view, Rahul. The next question coming in now on TVS Motors, and Anjali from Bengaluru is holding shares, 25 shares at 3,518. Now, Tapan, results came very, very recently, just an hour back, and it's been a strong show yet again for the company in Q4 and FY26. Should she continue to hold or sell?
No, hold this stock. No, this company has been doing good for last so many quarters. Again, leader in EV, and now they have a very strong base. And again, if you see their distribution is quite strong and the service is quite good. I think from here also, as the more preference is given to EV from here, I think she can hold this stock. Of course, little bit expensive, but give a good return over the time.
Got it. Got that view, Tapan. But let's go across, take another caller from Bareilly, and Arvind has a stock query for us. Arvind, what's your query?
गुड आफ्टरनून सर. सर मेरा क्वेरी है रिगार्डिंग पॉलीकैप के मेरे पास 5 शेयर्स हैं 5600 पे सर.
ओके.
कि मेरे को 5 साल के लिए होल्ड करना है पॉलीकैप को मैं, और यहाँ पे एवरेज करना चाह रहा हूँ. 9,000 के आसपास जो चल रहा है अभी, तो मैं इसको लेना चाह रहा हूँ. मेरा ऐसा मतलब मुझे ऐसा लगता है इसके टारगेट 5 साल के अंदर 28,000 से 30,000 के टारगेट आ सकते हैं. ऐसा पॉसिबल है क्या?
मैं ये तपन जी को पूछता हूँ.
अच्छा लग रहा है.
तपन, पॉलीकैप पे आपकी क्या राय है? क्या अरविंद को स्टॉक में अभी और पैसे डालने चाहिए? उन्होंने 5,600 पे लिया है, बट ये एवरेज करने के लिए अच्छा मौका है.
नहीं, पॉलीकैप ऑफ कोर्स अच्छा स्टॉक है, और आगे जाके जिस तरह से पावर सेगमेंट में इन्फ्लुएंस हो रहा है, इवन डेटा सेंटर्स आ रहे हैं, तो पॉलीकैप ऑफ कोर्स इन सब में भी डिस्ट्रीब्यूशन प्लस रियल एस्टेट भी ऊपर जाएगा. तो आई थिंक सेक्युलर ग्रोथ है, उसमें कोई डाउट नहीं है. स्टॉक थोड़ा एक्सपेंसिव है, तो अगर आप चाहो तो इसी सेक्टर में जैसे आरआर केबल है या फिनोलेक्स केबल है, उसमें थोड़ा डाइवर्सिफाई कर सकते हो करना हो तो. लेकिन यस, 4-5 साल ये पूरा सेगमेंट अच्छा करेगा, तो यू कैन स्टे इन्वेस्टेड. अगर ऐड करना है तो एवरेज कर सकते हैं, कोई दिक्कत नहीं नीचे को है.
Got that view. The next question coming in on Tata Elxsi. Our viewer has bought shares at 1108, and this is Priyanka who's holding 220 shares. So she's up almost 4x at this point of time, and asking if it's an advisable time to exit this counter. Rahul, would you recommend that?
Yes, absolutely. IT stocks have been under the hammer for quite some time now, and even the big names in the IT space have went on to break their key support levels. Tata Elxsi, as of now, the closest support is 4,000 rupees, and below that, we expect the bias to continue downwards. So it would be prudent to book, come out of the stock and look for better opportunities in some other sectors. IT is in avoid at this point in time.
Got that view, Rahul. IDFC First is the other one that Vedant Garg is holding on to at 75. Tapan, his question being, if it's a good stock for the next 3 to 5 years, would you recommend that, given that there's a lot of options now, right, in the private banking space available at much better valuation compared to historical levels?
Again, I'm not convinced with the management. Means recently, the governance issues and all that, and that is where I have a problem. Again, this every time management is saying that we are a big guidance they are giving, but they are not able to achieve it. So yes, I will not go for IDFC First. But I think better options are available. You can go to Federal Bank, Karur Vysya Bank. I think DCB Bank. I think they are the better option if he wants to go.
Got it. Well, let's go across, actually take a quick call before we start our rapid fire round, and Aruna joining in for a stock query. Aruna, what's your query?
Yeah, good afternoon, sir. Good afternoon to all of you. Thanks for taking my query. I'm having transformers and rectifiers at 295 average, 1,000 shares.
Okay.
Okay, what is the support and resistance? Shall I buy further? Is that a good decision? Or what is the resistance in the upper side?
Got it. Well, Rahul, you've heard her query. What would you recommend Aruna to do? Stocks up 4% today.
Yes, so the stock is continuously making higher high and higher lows since January this year. And currently it is trading close to its support area of 295 to 300 is the support area. So I would advise to have a trailing stop loss at 295 and hold for higher targets of around 350 to 360 in the next 1 month or so. So stay invested in the same. The view remains positive.
Got that view. Well, it's time now for the rapid fire round, viewers as well as Rahul and Tapan. Let's get across the first query on Sagility. Bought at 43 rupees, 2,800 shares by Raj. Tapan, Q4 was decent. Should he continue to hold?
Yeah, please hold.
Sunil Kumar is asking the next question. This one's coming in. Actually, it's a very small stock, so I'll ignore this one at the moment. Sirma SGS bought at 1,065 right now by Vinay from Pune. He wants to know if he should continue holding. Rahul?
Hold.
Next question coming in on Aurobindo Pharma, bought at 1,335. What would you recommend here, Tapan? Is it a good time to hold or book out and play in the other space, in the pharma space? Any other better pick?
No, currently hold.
Okay, Vedanta bought at 358, and this is after the demerger price. Tapan, you gave a view. I think should he continue to hold basically at this point of time?
Yeah, currently he can hold.
Arvind wants to know a view on HDFC Bank. He wants to add into this counter now. He's not bought any shares. Tapan, should he do that?
No, I'll give an option of ICICI Bank or Axis.
CDSL bought by our viewer at roughly around 1,080 to 1,100. He's asking Rahul if he can go back to that level, or is there further up move on CDSL from here?
Yeah, I would advise to exit at this point in time.
Got it. Next one is Mohan from Coimbatore. He's asking if it's a good time to buy Biocon for the long term. Tapan?
No.
Ramana from Bengaluru wants to enter into M&M. Good time to buy, Tapan?
Yeah, he can.
Next one is Sharath from Bangalore. He is holding on to grow shares at 195 and wants to know if he can add a few more Tapan for the next 1 year.
No. Wait for the date, then only do.
Got it. Venkat from Chennai is holding on to 200 shares of Swiggy, bought at 350. Rahul, would you recommend him to continue holding, average down?
Yeah, can average at these levels with the stop loss placed at 245.
245, got it. Well, that's the end of the rapid fire as well as this edition of Ask Profit. Rahul as well as Tapan, thanks so much for joining in, giving us your views across a whole bunch of stocks and spaces. But viewers, thanks so much for sending in your queries, and hopefully we could get a lot of them. But thanks so much for joining in. India Market Close comes up next.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights, on NDTV Profit.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show.
Hello and welcome. You're watching India Market Close on NDTV Profit with Sharad Dubey and myself, Hira Daria. An interesting day of trade. You know, last couple of trading sessions, Sharad, we have seen that pain.
There was a lot of pain.
Absolutely. But that minor bounce that has come in today, not sure if this is a respite or not.
It seems like a technical up move.
Exactly. I mean, would you be able to call this a short covering rally right now?
Yes, that's right. Right now, most of the F&O counters are seeing a good up move, especially the large caps.
So I think that's what is keeping you here. But the question is, a closure above the 23,500 level does not seem to be in sight as of now. If we close below 23,500, there is going to be a little bit of downside pressure that will come in terms of tomorrow's session as well. But clearly, 100 points up move, 0.5% gains coming in there in terms of Nifty 50. Bank Nifty as well. A very similar trend is what you're seeing. And in the last couple of trading days, viewers, the setup with regards to Bank Nifty has been slightly more weaker as compared to Nifty 50 as well. So that is something that everyone needs to keep an eye on. But what is encouraging right now is to some extent the advanced decline ratio, right?
And it has maintained, if you could just show that advanced decline chart, we'll understand that there's a good value buying happening in the small cap and mid cap. This was missing over the last two trading sessions. Here you can see
from the convergence,
yes, exactly,
absolutely.
and now it's being maintained.
Since, you know, from midday to now, pretty much steady in terms of the advances and declines, and that is what is giving you some bit of respite right now. Let's quickly look at you know the heat map in terms of Nifty 50, and then we'll look at the sectoral indices as well. Clearly, it's more of, you know, I would say it's more of 50-50 kind of a scenario here. Still more of greens versus reds, but names like Asian Paints, Adani Enterprises, Cipla, Hindalco, BEL, Adani Ports, so Adani group of companies are holding up to gains today. Bharti Airtel, which was also seeing some smart moves in yesterday's session, has continued that uptrend. What is losing out is a power grid. Infosys, some of the auto majors are also under pressure. IT is somewhere under pressure, and few of the financials as we speak. But, you know, the kind of gains that you're seeing upwards of 2%, that first line of 10 stocks seems to be pretty strong in trade. Let's look at the contributors of Nifty 50 as well right now, and then we'll see what's happening with the broader markets. There you go. Bharti Airtel, L&T, HDFC, Tata Steel are the ones which are contributing. What's losing out is your Infosys, M&M, TCS. So it's mainly your IT, auto, which is slightly on the weaker side. Broader market, Sharad, is also pretty interesting, taking the way the advanced decline breadth is.
Yes, and if you look at the mid-cap indices, right now it's near the day's high level here, and just pull out the small-cap index also. That means we're seeing a good value buying happening. It was missing over the last two trading sessions. And if you could just pull up the BSE 500 index to show you the contributors also, which stocks are doing well in the trade. That's also something to look at. Of course, the Q4 numbers is something, Hiral, that's where the good impact is also coming in.
And BSE 500 constituents is something we should be watching out for to see the kind, or NSE 500 as well, to see the kind of range that you're seeing in terms of gainers and losers in trade today. And apart from that, there you go. Metals, Dixon is an interesting one. Vodafone Idea has been having a good run. Your paint counters are doing well. So with an Asian Paints, you have a Berger also, which is contributing. But power is seeing some bit of profit booking. Westlife Foods, Sun TV, a very interesting mix that we see here. Very quickly, let's just pull up the wicks, and then Sharad can take us through all the factors that one should be watching out for over the next, 1 hour. If we can just quickly have the India wicks. There you go. I mean, it's pretty much on the flat line from the highs. It's come down. We're still at 19.3, so you can't say we're not in the elevated zone right now. There is that cautiousness which is still prevailing, is what India VIX is also indicating, Sharad.
Well, exactly, that's right. But let's look at the factors to watch out for, especially for the traders. What are the key factors should be there? There's a short covering at play in major large caps, and the further consolidation might be there, because the strength which is there, that's a big question to be asked for. That's why I've given a Nifty range. That range is between 23,200 to 23,600. So we can see a little bit of consolidation. direction. Nifty Bank also, the range is on the highest side, 53,000 to 54,000 levels. But remember, this is a technical up move happening. But interestingly, the good part Hiral mentioned, the value buying is happening in the small and mid cap space, and that is something which you should be looking at as well. Strong buying seen in the metals, telecom and the consumer durable pack. These are the three indices which are doing really well, and rupee again hit its record low levels. There was a minor improvement initially, but then again it hit its record low levels. Crude has snapped its 3-day gaining streak, so it is kind of giving some positive outlook going ahead. But the European markets, I checked, they have opened in the green. So of course a little bit of risk of sentiment is coming down, but the main focus is on Trump and Xi Jinping's meet this week, as well as how things move ahead. And of course, joining us, we'll have Nilesh Jain, Head and AVP at Technical Derivatives Research Equity at Centrum Broking. Good afternoon, Nilesh. It's always a pleasure to have you. This markets we are seeing for both Nifty, Nifty Bank, the way the placement is happening, it looks like it's a slight short covering at play. But will this sustain going ahead? Because there aren't much major triggers except the global geopolitical developments. So is this just a short covering rally, or do you think some levels can be sustained, especially on today's closing?
Very good afternoon to you. Good afternoon, everyone. Well, Sharad, first of all, today's move after 4 days of consecutive decline looks like merely a pullback trade. As you have rightly pointed out, it looks like a short covering move. But as Hiral pointed out, 23,500 is an important level that needs to be sustained on the upside. Then only we can expect a follow-up of this particular pullback towards 23,650 to 23,700. But as of now, looks like merely a pullback trade. Even if you see volatility index in the weeks, we haven't seen any meaningful correction in the weeks, and it is still at elevated level. So there are high possibility that we may see once again supply coming in at the high level. So one has to remain cautious. And on the closing basis, 23,500 is an important level that we are keeping an eye on. And if at all it manages to close above the same, then there are possibilities of a further short covering rally towards 23,650 to 23,700. On the lower side, there was a gap area that is yet to be filled, and quite possible going forward we may see once again supply coming in and Nifty may make an attempt to fill that particular gap. But on the contrary, if you see the broader markets where we have seen huge amount of attraction coming back, mid cap and small cap indices are looking better placed, and that's where the action is right now. So we expect this further momentum to continue. Specifically from a sectorial point of view, metals continues to remain strong. So that is something that we are keeping an eye on.
So metals is one space which is seeming to be very strong. In fact, that sector is also trading at the day's highest levels as we speak. Nilesh, with all of this, what would your top picks be at this hour?
Well, Hiral, first of all, we are focusing on buy ideas. As I mentioned, that metal is something that we are keeping an eye on. So within metal space, within aluminum space, in fact, we have seen a very good attraction in Hindalco and Nalco, both the stocks. So specifically Hindalco, this particular counter looks like giving a very good close today, and we can expect a follow-up on the upside towards 1,090 to 1,110. So 1,110 could be the ultimate target that we can expect in Hindalco. We are expecting a fresh record high from here, and 1,060 should be the stop loss. Apart from that, if you see across broader markets, we have seen a very good attraction coming back. But on the other hand, if you see IT, that's one space which has been a laggard. So that's a short. That's short in TCS. Particularly, we have seen a major crack in the large cap IT stocks. So TCS looks weak, and we are expecting a follow-up on the lower side towards 2250 to 2230. So these are the two targets on the lower side, and the stop loss can be placed at 2320.
That's the view coming in for TCS. But moving on, Dixon Tech, let's get that stock in focus as well. Of course, stock is buzzing. Stock is at its day's high level, interestingly, up 9% on the back of earnings. The company, of course, came out with a mixed set of numbers as the uncertainties there over the Vivo deal. But of course, Puneet is here with what's actually making a big rally in the stock. Of course, numbers were not that attractive, but is there something else which the street is factoring in? Stock is up 9%.
Well, most certainly it's looking past the numbers at this point of time, and probably forward-looking statements very strong for the company as well. So quickly, we've gone through the numbers through the day as well, but just a 2% growth in revenue. EBITDA was down almost 7%, and in terms of margins, at 3.9% also wasn't the greatest. Profits also were impacted and down 36%, but there was a one-time impact in the base year. So quarter 4 FY25 had, from Aditya Vision was the fair value gain actually of 250 crores, and hence that's the biggest jump. But in terms of volume guidance, that's the first key aspect. Now, the company has said FY26 volumes will be flat at 32 million. So will be similar. So FY27 volumes similar to FY26. And this is excluding for Vivo. And those, the approval is still yet to come for the same. 12 to 15% value growth is seen in this counter, given that memory chip prices have increased. So you could see a higher value growth for the first time compared to the volume growth for Dixon in FY27. In terms of what the management has said, they've admitted that the industrial EMS segment was an opportunity missed by the company. They've accepted the fact. They've also had a lot of meetings and conversations around this, and they are now looking to enter the space over the next 2 years. They should have entered it in 2024 is what Atul Lal had said on the call yesterday. So that's one. And finally, in terms of what we've seen and what's actually working, because these were the two key factors that were the key aspects, but management is now saying that the Vivo deal is very close. It's gone on for 17 months. Exchange filing was in December of 2024 when it was first announced. But apart from that also, looking at two sizable acquisitions in FY27 to the tune of 3,000 to 4,000 crores could well be in the industrial EMS space as well. Aerospace defense for the other players have done very well, like Sirma. So the company is now getting and looking at it very, very seriously. And company has the management capability as well to scale up manufacturing. Mobile PLI 2.0 could be the other focus. Now, largely expected to be more export oriented this time around, but approvals are expected to come in May. And finally, the components, display modules, as well as camera modules is the next big opportunity, where it is expected to come in quarter 3 of FY27. So those are some of the key factors that are working in favor of the company. Of course, the Vivo deal continues to be one which is majorly in focus, but the question is the worst largely over for Dixon Tech? The market's having a say in the same.
Yeah, and I think, thank you so much for that, Puneet. Sharad, EMS players have been in focus as well right now. You have PG, Electroplast, Sirma, for that matter, even Keynes. Last couple of quarters,
there has been a significant correction from their peaks
as well, right? And now that bounce back that's coming in is going to be interesting. Now, the question is how sustainable this bounce is going to be, because all of them are seeing some good gains today. Samir Dalal of Natwar Lal and Sons Stockbrokers also joins in. Samir, welcome to the show. Always a pleasure to speak to you. Your view when it comes to Dixon Technologies and the EMS space as a whole, because as Sharad was also mentioning, from their peak, good amount of correction that's come in terms of EMS. Yes, there are a few overhangs when you talk about supply chain constraints as well. And in terms of what's panning out when you talk from an earnings perspective, how would you look at it?
Whatever Puneet said is very valid, and that there is a bit of a hope that things start reviving very soon. But you can't rely purely on hope when you make investments, right? You've got to also see what the fundamentals justify. So for Dixon Tech, yes, the Vivo deal is a very crucial thing. If that goes through, that would be the growth engine for it. Because when you're trading at 40 times, 42 times earnings, you need growth to justify those high valuations, right? 40 times, if you can grow at 35, 40%, then PEG of 1 is fair. Even if you go to 25, it's still 1.5, 1.6. So growth is important. And the fact remains that value growth is not as important as volume growth, because when the volume grows is when the actual profitability will see an increase, because the operating leverages will play out. So if the Vivo deal goes through, which we are also thinking should happen soon, then I think the possibilities that Dixon will continue its trajectory up and probably move up closer to 13,000, which will justify, these high valuations. If it does not fructify over the next quarter or maybe 2 quarters, I think the stock will probably move down closer to 9,000. So that needs to be watched very closely. As for the acquisitions that they want to make, well, till they actually disclose something, we really can't decide whether they're going to be EPS accretive, whether it's going to drive their ROEs up or down. But we need to wait and watch for what happens there. To just assume that 2 acquisitions are going to be very beneficial to them, I think that's difficult for them to take. As for the entire EMS space, so, companies that have been dealing with the defense sector or with the data centers have obviously been doing extremely well because those are the two spaces where growth has happened. However, if you look at companies like PG Electro or even Impact Durables, they actually have not had a great time because of the slowdown last year in the sales of ACs. And when we are talking to certain people in the current industry right now, that this year also, even though we've had such a horrible summer, the AC sales have not been that great, is what we are hearing. So if that is the case, then I think the rally in some of these consumer durable players might start fizzling out. So we'll keep a keen eye to see what actually the sales numbers are coming out at the end of this quarter, and then take a call. But valuations in PG are still not very attractive.
That's an interesting take coming for the consumer durables and EMS from Samir. But moving on from this space to the pharma space, Cipla delivered a mixed set of Q4 numbers with inline revenue but missed PAT estimates. The US market was a key drag and the India market actually boosted the numbers. Varsha is here with more details. Varsha?
Yeah, overall, as you rightly said, revenue was in line, but EBITDA and PAT was a mess, and a weak quarter was actually expected, and the reason why you're seeing the stock is up is almost because of the short covering, But onto the numbers, well, North America decline impacted growth. India and Africa was strong. US remains weak. EBITDA margins contracted due to lower gross margins and higher employee costs, and the API segment was actually weak, impacting overall profitability, and of course lower other income impacted profit as well. Onto the India business, well, as expected, India business was strong at 15% year-on-year, double-digit growth across, generics, and chronic mix improved to 61% overall. Key launches across respiratory, anti-diabetes, and dermatology are some of the key positives. Also, they did also, partnership with Eli Lilly and Mankind. Onto the North America, well, contributes 22% of the sales, decline 26% year-on-year. US pricing pressure continued impacting growth for the company. While One Africa, if you see, this was the strongest growth area for the company. Growth was almost 1.4 times market growth rate, and 18 new launches were there in FY26. So overall, yes, a weak set of numbers, but now the shift remains how FY27 will pan out for the company, considering the outgoing Umang Vora has been now no longer with the company.
Thanks a lot for that, Varsha. Just a quick technical chart check, Nilesh, on Cipla. A good buying momentum coming in the second half of the trade, and it's actually sustaining. So your views on that?
Well, absolutely. A very strong rebound after, in fact, almost 4 consecutive days of gains. And this rebound seems to be likely to be carried forward on the upside towards 1360 to 1400. So the setup looks positive. In fact, majority of the pharma counters have a better setup. And as far as supply is concerned, it has reclaimed its 21 as well as 50 DMA. So we can expect a follow-up move to continue on the upside, keeping a stop loss below 1300. One can go long.
Okay, so that's with regards to where Cipla goes. But moving on, Prime Minister Modi's call to avoid foreign travel for a year could hit India's outbound tourism industry. To discuss in detail on the impact of this appeal by Prime Minister, we're now joined by Alok Bajpai, Group CEO at Ixigo. Alok, welcome to the show. Always a pleasure to speak to you. This is Hiral on the side. My question to you is, what do you make of this appeal that has been made by Prime Minister Narendra Modi? Because it's not really directed towards something specific. It's more generic when it comes to country India is concerned, and he's making an appeal across segments. How are you reading into it?
I think it's related to the fact that the country needs to preserve foreign exchange at this point, and therefore you see the what's happened on the gold side as well, in terms of imports becoming more expensive, but also the fact that look, Indians spend between $15 to $17 billion a year when they travel abroad, right? And I think one area where we really need to work on as a nation is inbound tourism, where we are at sub 10 million foreign tourist arrivals a year. So I think it's the need of the hour probably for the nation that this appeal has been made, and we expect that there'll be some domestic substitution that will happen, in people not traveling abroad but choosing to travel to Indian destinations instead, right? So I think it's something that's too early to see yet in our searches and bookings, but that's what I expect to happen.
Hi, Sharad here. Interestingly, the summer holiday season is going on, and of course, a lot of demand is coming as well for the domestic locations and the higher priced segment also. What are the current trends actually looking like? Is there any cancellation happening? Because there's a global uncertainty at play as well, especially in the European markets. How are the booking trends looking like for both domestic and international currently?
So, I think domestic travel, this is the peak season. It's summer vacation time. Most Indians would travel in the months of May and June. And we've seen the upswing, just like we see every year, in terms of domestic as well as international. And of course, the announcement is just a day old. But I think what has happened is, look, there are two types of travel that people do. There's leisure, discretionary travel, but there's also utilitarian travel, meeting friends and family, visiting relatives. Now, some of that, if your relatives are abroad, or if there is a need of the hour for to still travel abroad, I think some of that will continue. Of course, Middle East travel was already somewhat impacted from March, but we also saw substitution starting to happen in March itself, right, where some people started to look at domestic breaks instead of international breaks. So that substitution is what we expect will accelerate. For ixigo, we've always been a lot more domestic focused with our strong, rail and bus businesses, and so that substitution over time, should be helpful to us, is what we believe. And we have also entered the hotels category recently, where we've started off with a smaller market share, and that continues to grow. So I don't foresee any short-term sort of impact that is negative for the industry, because domestic is still the mainstay for most companies.
Alok, so domestic is something that even a ixigo will watch out for. Tell me one thing, for a ixigo, between domestic and international, what's the kind of revenue breakup that you have right now? Because for that quantum to be made up for in terms of margins, revenues and profitability is something that investors will watch out for. And then I have a second question for you, if you could give me a response to this one first.
Yeah, so if you see our disclosures, right, and the last disclosures were in December quarter, 20% of our flight GTV was international, right? So about 400 odd crores, a quarter was our international flight GTV. And that is a relatively small part of our overall business, because remember, the overall business is, in terms of our run rate was about 17 to 18,000 crores a year, right? So in that sense, it's a relatively small portion of our business. And of course, we were still growing international very nicely year on year, because we have a smaller slice of the pie. But that growth, I think, will still come in, because there are pockets of opportunities where people need to travel, and there could be important events they need to attend outside. So I think some of that is going to continue.
Okay, a quick one, we've been hearing of a lot of flight cancellations as well that are happening with regards to outbound, inbound, international. Air India has come out and cancelled over 500 flights last week, and there are murmurs saying that other flights will follow suit. Are you hearing of any information on that front as to what's happening from the airlines?
Yes, so there have been some cancellations. I mean, it started with the Middle East in March, but certain long distance routes by Air India have been impacted more recently as well. But I think, in terms of demand versus supply, we've always been a supply constrained market, especially if you look at even domestic, right? So, train, it's hard to find availability on the train side. The demand is so much bigger than supply. Even on the flight side, we don't have enough planes that we're able to bring in, and therefore, fares have always been a little bit higher than what they should be if we had enough capacity coming in fast enough. So I think India has always been in that sense pretty much a supply constrained market. Even on the 4-5-star hotel inventory, we could lap up more supply at this point. And therefore, I'm not that worried about what's happening in the short term. We also must remember that in COVID, all travel was stopped, and then there was a lot of pent up that came in, the subsequent. In fact, our revenue in the COVID year was higher than the pre-COVID year, because in the 6-7 months where travel opened up, people came in droves, and I think that will happen eventually when things stabilize in the Middle East as well.
Right. Thanks a lot, Alok, for that, for giving your views. It's always a pleasure to have you and giving the entire perspective on the travel industry and the impact. But moving on, sources tell NDTV Profit that the Union Cabinet has approved the coal gasification incentive scheme, and that's worth 37,000 crore rupees. Shrimi is here with more details. Shrimi.
Yeah, that's absolutely right, and it's coming at a very specific time, as we all know that we are grappling with the West Asia crisis, which is disrupting the entire supply chain, and this is coming with a massive outlay of 37,000 crore. But why this matters the most at this point of time is that the coal gasification actually converts your coal into synthesis gas, which can be used to produce all your fertilizer, chemical and synthesis natural gas. Now, despite, and the irony is that India has the world's largest coal reserve, and despite that we continue to import large quantity as far as your ammonia is concerned, your methanol is concerned, your fertilizer is concerned, and to reduce that dependency, this coal gasification scheme is going to play a huge role. And in fact, as far as beneficiaries are concerned, Coal India is likely to be the bigger beneficiary here, as what we are learning that this will of course open the revenue avenue for Coal India, going away from the traditional and the conventional way which Coal India has been doing. And in fact, this is going to convert your low grade coal into the high quality, and that's how you are going to reduce. We need to wait to learn more and the fine print of the entire scheme, as the briefing is scheduled as 3 p.m. to understand the entire nuances of the scheme.
Okay, so that's with regards to where coal gasification goes. And, when we spoke to the management of Coal India as well post-earnings, they have been of the opinion that this is going to be a big earnings driver as well for the company. Thank you, Shrimi, for that. Samir, a quick view when it comes to Coal India?
So, we like the space, but we think the opportunity is good. It's a unique company, kind of a monopoly business. Look, thermal power is not going to shut even though renewable comes. There will be new plants that come about, so capacity growth will happen. If this coal to gasification happens, it's obviously a positive. But one thing you got to realize is that Coal India has not been able to, they've been able to meet, but they've not been able to scale up their production to where they could have probably and made a lot more money. So if they can address some of their supply side issues in the sense that they can produce more coal and supply to the domestic market, I think the stock can do a lot on the upside. But the fact remains that they've not been able to take advantage of the situation that we are in. And, the other bigger problem as an investor is that there's always an overhang that the government may come up with an OFS anytime soon, and that supply, when it comes into the market, it kind of puts a cap on the upside. So from those two perspectives, we have not invested in it, but we think it's a great company. And if they can address the issues, the stock can go up quite a bit.
That's the view coming in Coal India. But Hiral, let's just see the rupee. It has hit its fresh record lows. Of course, earlier in the morning, we had seen that there was a good momentum, but that has actually fizzled out. If you just point out, the rupee has slipped and it's a fresh record low of 95.8 for the dollar. And Hiral, of course, the RBI interventions are also expected to kick in, but largely let's pull out the yield also, the 10-year yield, to see how much of that reaction is happening. It's likely to go up. If you could just show the India's 10-year bond yield also. Yes, there is a little bit of spike coming in the bond yield also. But Hiral, anything you're gathering?
I mean, clearly if you see in terms of the Indian rupee goes, the geopolitical instability that we have been talking about, that sentiment has been a risk off, and that's what has been impacting. There is a crude oil shock that this. It's not only India, countries across they are grappling with as well. you are staring at a wider trade deficit, and that's the reason why you have Prime Minister Narendra Modi, who has been looking at making all the appeals as well. And there is a domestic policy sentiment that comes to the fore from here on. I mean, you will have the RBI policy coming up soon. What they will do is the key, but clearly 95.76 is what you're tracking. It slipped for most of the day. A fresh record low of 95.8 is what you're looking at so far. Though, it'll be exporters who to some extent will be happy on the kind of exchange rate,
exactly.
But it's going to be the
something like
importers.
A farmer or an IT.
Your importers are the ones who are going to be, grappling under pressure. So that's with regards to where the Indian rupee goes. But before, we get to the next story, a quick view, Nilesh, I want to take with you as well with regards to where jewelry stocks are concerned on the back of the import duty that has come in. What are charts indicating if you have to look at any of them?
Well, Hiral, we have already seen a big crack in all the jewelry-related stocks, be it Kalyan Jewellers, Titan. In fact, the good part is that after a crack, the impact that we saw after opening trade, they are making an attempt to witness some bit of a pullback. So pullback trade is something that we are witnessing. Quite possible that we may see some bit of a follow-up on the upside, but unlikely to be as sustainable because we have already seen a structural breakdown across all jewelry stocks. So overall, sell and rise should be the strategy.
That's with regards to where jewelers go. But thank you, Nilesh. Thank you, Samir, so much for joining in. It's always a pleasure to speak to both of you as well. But, we'll quickly slip into a short break. We'll be back with what's in store for jewelers as well in terms of the import duty and lots more other stories as well on the other side. Please stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India's unshakable news habit. NDTV.com is India's #1 English news website.
I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. Welcome back to India Market Close, and the markets, what we have seen earlier at around 2 o'clock, it's relatively same, no major changes happening, and Nifty and Nifty Bank, both of them actually on the, we could say on the positive side, but yes, a shade below that 23,500 mark. Of course, the metal pack is doing well, but the jewelry segment, that's also in focus. These stocks are losing sheen as government has doubled import duties on gold, silver and platinum, a move set to make the precious metals sharply costlier. Mahima is here with more details. Mahima?
Right, so, just to give a background as to what's happened, right? So earlier in 2024, July 2024, the budget had reversed this duty structure. They'd taken it back to around 6%, both the basic custom duty and cess combined. But that has now again been reversed. So there's a Uno reverse play here where now we're looking at basic custom duty at 10%, cess at 5%, and that takes the effective overall import duty at that 15% mark overall on import of gold and silver both. Additionally, jewelry findings will attract a duty of around 5%. Platinum findings will attract a duty of around 5.4%. And concessional duty provisions for import of catalyst or ash containing precious metals will also attract a duty of around 4.4%. Plus on top of that, concessional duty with regards to UAE imports will also be taken into consideration, and there will be duty hikes there as well. So that's point number one. Now, in terms of how this overall impacts companies. But before that, it's important to take a look at the gold import data as well, because overall, in the past couple of years, the gold import data has been rising both on account of value as well as volume. As far as FY26 goes, the overall estimated increase is around 24% in terms of value, but volume slightly, where FY25 goes, the downtick was around 4%. But India is the second largest consumer of gold imports after China, and we consume all the gold that we import. So that's why this becomes very important. Now, how this impacts jewelry companies as a whole is because, one, raw material cost will become expensive for them. So that means they'll have to keep more working capital, pay more interest on that. On top of that, demand could, see some subduing because purchasers could kind of delay their purchase because of this hike in duty. And lastly, in terms of where margins go, companies might not be able to pass on the full price hikes to the consumer, and that is why their margins will get impacted. And on the back of that, a lot of stocks remain in focus. All your jewelry names, from Titan, Kalyan, Senco to Thangama, LPC, Jewelers, etc., get impacted on the back of this. But then on the flip side, you have something like a Deccan Gold, which is doing fairly well because it's a minor and it benefits from this price increase. So this is the overall view of what's happened and its multiple impact on the economy as well as stocks.
Yeah, I mean, this is going to be interesting to see what actually pans out from here on. But, it's interesting the reaction that the street is giving out. You have Nitin Kamath as well, who's written on X that the news about import duties on gold and silver going up to 15% came late last night. And the interesting thing is that neither open interest nor prices, volumes in gold and silver have actually shown any unusual moves in the hour leading up to the announcement. So it probably tells you that this is something which is not really intriguing or ruffling any feathers from the investor community.
It's showing a good stability, and I also checked, of course, some ETF spike is there. If you could just show the silver ETFs, the gold ETFs, all of them spiking between 4 to 7%. But nevertheless, there isn't a lot of issues in the markets. Also, we are doing a lot of channel checks, and largely it is still stabilized. Of course, there's a clarion call is there, which we need to respect. But you see today itself, most of the ETFs are doing well in the trade as well.
Yeah, I mean, 5 to 6% up move coming in. So I think the investor community is really happy when the ETFs are going up. So that's what we're looking at in terms of where government hike in duty of gold goes. But we are slightly delayed when it comes to Somit Sarkar giving us all the chatter from the dealing room. Somit, a day, where we are seeing some bit of respite that is coming in terms of market. Sharad and I were just chatting that there is some bit of short covering today. Question is, from the dealing room, are you sensing any stability or any situation where the thought process now is that, yes, there is some bit of respite?
There's hardly any respite in the market, Hiral. It's just 44 points up. That's hardly anything from what we have seen in the last 4 trading sessions. So no respite that we are seeing in the market. There is still panic. There is still sell on rise strategy that dealers are opting at this moment. Few stocks that dealers have highlighted in trade. Firstly, it's Fractal. The stock is down around 10%. But dealers are indicating that a large prominent HNI has started to buy this counter at lower levels in trade. So one should keep an eye out for Fractal. For KFin Tech, a negative news coming in here. There are sell flows on the large HNI, and there's a buzz of one important contract getting repriced at a lower rate for KFin Tech. So that could be negative for the earnings of the company going forward. So keep an eye out for KFin Tech as well. And when it comes to SAIL, that stock is up 14%. Biggest intraday move that we are seeing since July 2020, and the stock is now trading at its 15-year high. So when I inquired with dealers, what they are saying is that this move is largely because of some buying actions seen in metal pack, and also do remember that SAIL is an FNO ban, so a short covering move is happening there as well, and that has led to this increase in share prices. And there is also a buzz of a potential inclusion in the MSCI's next review, and that could also be one of the reasons. So these are the 3 reasons why basically SAIL has shown this kind of a move, but most likely it is also because of the short covering that we are seeing, given the fact that the stock is in FNO ban.
It's a lot for that, Somit, and markets slightly correcting. If you just pull out the Nifty index and Nifty Bank from the day's high level, correction is happening, and we are almost coming to the flat levels. Nifty Bank, the fall is much more. It's in the red right now, so a little bit of the strength which we are talking about, me and Hiral, that strength is giving up as well. Now let's move on. We have Abhishek Banerjee. He's the Vice President, Internet Lead Analyst at ICICI Securities, joining us. Good afternoon, Abhishek. It's always a pleasure to have you. There's a very long note which you have written on the new age segment, but I just wanted to understand what are the key takeaways from this, and eventually which are the stocks where there is a good risk-reward ratio from here.
So this note is not really a buy-sell recommendation kind of a note. It is a note which kind of aims to be a compendium of all that you need to know about the Indian new age tech ecosystem. It is where we have given all the market sizes and what could be triggers, what could be potential hazards, and also what some of the expert takeaways for each subsector. So it's more of a sector note, right? It doesn't talk about stock picks, etc. But that being said, some of the key takeaways would include where we are today in new age tech adoption versus the world. And one very interesting data point that you'll see is that we are almost at the same GDP per capita levels from where China actually took off in 2006. Right now, the value of the dollar has reduced from those times. But that being said, at $2,000 GDP per capita, we could see a takeoff, right? And that will benefit all consumer-centric names and even the new age tech names are likely to really benefit from that trend.
Abhishek, good morning, good afternoon. This is Hiral here. With everything that you're saying, I mean, it's a very extensive report where I think we need hours and hours to, if you have to discuss every bit and aspect of it, but as for a reader's choice, one of the best ones to have read so far. My question to you is, for an investor, if you have to look at what's happening in terms of AI and technology, what's happening with the evolution in the new age system, do you think buying new age tech stocks at this point in time with the way valuations are panning out would be the best choice to generate that kind of alpha or value that someone wants to look at?
Great question. And actually, we have tried to answer that in the note. So if you look from the 2000s to now, the last 25 years, you will see that the Nasdaq Composite Index has outperformed S&P 500 by 5x, right? And the only decade where it did not outperform was the decade of 2000, when there was a dot-com bubble crash, right? So I think it's a no-brainer. You have to kind of stay invested in the new age ecosystem. Yes, if you can choose a winner, then you can have outsized returns. But even without that, this segment has the ability to generate that much needed alpha for the portfolio.
Abhishek, for your views and a very interesting report made by ICICI Securities. It's always a pleasure to talk with you. Moving on, we are having Shivangi Sada, analyst at equity derivatives and technical at Motilal Oswal Financial Services. Good afternoon. So Shivangi, the first question is, the short covering which we saw, that strength is actually coming down. Is there a more sentimental negative moves going ahead for both Nifty and Nifty Bank?
Very good afternoon, Sharad. Thank you for having me. So we've seen that, of course, the indices did, kind of manage to have an attempt of recovery today. But overall, in the last 4 sessions, we've actually drowned by more than 1,100 points. So, of course, on account of that, today's recovery is very negligible. But some ray of hope, the attempts of buying from 23,000 250 odd levels was quite remarkable. But overall, there will be some bit of pressure that will prevail because global uncertainties are still on the rise, with India VIX nearly 19 today. So overall, unless and until this subsides down to 16 to 15 levels, we would see some volatile cues and swings in the market. A tug of war between the bulls and bears was seen in today's session, but we'll watch out for the important levels. 23,150 is an important positional support here for the index, with an upside cap at 23,800 marks. So this would be the take on Nifty, with volatile cues to continue.
So, Shivangi, what would your calls be for tomorrow? I know it's 3:10, so BTST is the best.
So, looking at the overall market, we've seen that selective pockets of buying can only be trusted and seen. My preferred pick for a BTST would be Hindalco, which has kind of surpassed its previous hurdle zones as well. And we've seen a consolidation breakout after almost 19 trading sessions on the daily basis. And overall, of course, we've seen that this stock has been one of the strongest names in the entire metal bag. So definitely one that can be counted on. And the next targets that we're looking out for is 1120 levels for Hindalco, and 1050 would be an important support to watch out.
That's the important, picks coming in from Shivangi. But now we are joined in by Vineet Bolinka, Head of Research at Ventura Securities. Good afternoon, Vineet. And I really like your T-shirt from the Hard Rock Cafe. It's pretty interesting and fun. But just wanted to understand, the overall space, there is still uncertainty in the markets. Is it a good time to look at, some defensives, especially in the FMCG pharma pack, or is there anything else which is wonderful here?
So I think the FMCG and pharma pack are obviously the ones to go with, and they are the ones which are going to be quite defensive. I also like the the resources space. So stocks in the metals pack look very good. We think that they should do well. But apart from that, the view outside of these few sectors is quite disconcerting, and that is because of the oil price, which is now looking to be very jittery, and there are expectations that the slowdown will impact us very harshly.
Okay, so that's with regards to where the way markets are right now. So Vineet, in this kind of a market where you can say valuations to some extent have come off for a couple of sectors, and people are comparing as to COVID times where some did not miss the opportunity, some did miss the bus. Do you find any value anywhere, and if so, what would your recommendations be?
So I think obviously the renewable space looks very interesting, and the electrification space. So all these continuously look good for us. Defense is another very, very strong sector, and along with this also the shipping industry. So all these four major industries that I've spoken to you about look very, very interesting, and we think that there's a lot of room left in these to rally again.
Okay, so that's with regards to where Mascon Doc goes. In fact, if we could just quickly pull up all the sectoral indices in terms of where the sectoral heat map goes, because I want to see what's happening there. Metals, the top gaining there, commodities, oil and gas, infra, energy are the ones which are seeing some smart moves, but seeing pressure is IT, auto, and real estate to some extent. Shivangi, metals has been pretty hot over the last couple of days. There has been some buying interest that's coming in with regards to pharma as well. In fact, the Cipla con call is ongoing right now. If you have to look at any of these two sectors, metals or pharma, anything that you like?
My BTST did stem from the metal pack, which is Hindalco. So definitely metal is one space which will be interesting to watch out. The other stock in this radar, in this space, which is on my radar, is the Hindustan Copper. This one is giving a fresh breakout on the daily frame with excellent volumes from the last two trading sessions. So this one's definitely on radar. From the pharma space, definitely one of my favorite picks would be Laurus Labs. We've seen that this has been one of the most resilient names in the entire pack, of course, in the diagnostic pack, if we extend the pharma space. And there has been excellent amount of long build up that is seen from the last 7 trading sessions. So definitely after the breakout, we've seen follow up is quite strong here. So these are the stocks that I'm looking out for in these couple of sectors.
Right. But moving on from stocks is a very interesting take, and everyone is looking at it this week. Trump says, "Ni hao, China." Yes, you're right. The entire brigade of course, the president and his group of CEOs from US are on their way to China. But why is this important? Let's talk about that. This is the first visit to China by a US president in nearly a decade. Secondly, the Iran war trade looms over trade talks. Of course, there is expectations for both of these segments. Apart from this, also, let's look at what are the key other factors to look out for in this Trump and Xi Jinping meeting as well. The focus is largely on the trade deals or a strategic tie-up, and AI and Taiwan. That is where the expectations would be there, especially on the AI trade. Apart from this, also, the lot of CEOs accompanying him in the plane itself. It's called Air Force One. We have NVIDIA's Jensen Huang, Tesla's Elon Musk, we have Tim Cook, and also a lot of other CXOs coming in, from BlackRock, Blackstone, Boeing, you name it. And literally you could say that the entire S&P 500 might be there inside the Air Force One. Look at Goldman Sachs, Micron, Qualcomm. These are the names, and more CEOs are coming in. So he has taken an entire group of the CEOs. Remember, before going, he has given 2 important statements. First is President Xi will give me a big fat hug. That's what he has stated. And interestingly, he has stated that relatively the relation is good, and there will be a discussion on Iran as well. Importantly, this is important for India perspective also, but there's a fragile tariff truce with China. If that improves, that is sentimentally negative for India. They may help in the US-Iran ceasefire if any development happens. China is Iran's biggest oil customer as well. So these are some key factors you should be watching out for. And US recently actually sanctioned several Chinese companies, and the Chinese officials have also publicly called for stability. So eventually after this meet, something positive happens. But what's there for India here seems slightly negative here. Potential US-China G2 trade deal could be a little bit of adverse if compared with India's impact. But nevertheless, if the sentiments improve, this may aid the Iran-US ceasefire as well. So that becomes positive for India. So this is the entire picture of Trump going to China.
Okay, Trump going to China is going to be interesting. Thank you, Sharad, for that. An interesting take coming in there. But let's just very quickly look at markets as well. We are off the day's highest levels. Let's pull up Nifty 50 as well as Bank Nifty on the screens as well. There you go. We are now below that 23,450 mark on Nifty 50 as well. Let's pull up Bank Nifty and then we'll see what's happening there. We're almost inching towards the day's lowest levels, but that cuts off around. You have Bank Nifty, which has actually turned negative as we speak. So there is something which is happening so far. Let's look at the broader markets. We were at the day's highs when we started off the session. There you go. Again, we're trying to inch lower. They're giving up those gains, 0.7% higher still in terms of mid cap, 150, and in terms of small cap, 250 as well. There has been that profit booking that has started to come in. Sharad, it's interesting to see how we are giving up the gains as well in these last 10 to 15 minutes of trade.
We had pointed out earlier that there was a scope, and yes, now from that important levels of resistance, all of the indices are falling.
So sustainability is becoming a key right now. So that's key, but just very quickly, your coal gasification scheme for 37,500 crores has been approved by the cabinet as well. That's coming in from the cabinet briefing, on the back of which you have a Coal India that is in focus as well. Let's just pull up a Coal India and see what's happening. There you go. I mean, that stock is at the day's lows. But moving on, a host of Q4 earnings are lined up today. Let's start with the telecom major Bharti Airtel. Somit here with us to discuss the key expectations. The stock is doing pretty well. Somit, what is the expectation?
Well, a muted quarter is what is expected from Bharti Airtel in the fourth quarter. Now, if you look at the revenue, EBITDA and net EBITDA, they're expected to be up anywhere between 1 to 3 odd %. Margins are expected to come in at close to 58.1%, while the net profit number would be 16% higher on a sequential basis. Now, the key numbers that one should watch out for when Bharti Airtel reports, it's the India mobile business. Their EBITDA and revenue are expected to be up just 1%. Subscriber base is expected to come in at close to 37.2 34.2 crore as against 36.9 crore in the previous quarter, while the ARPU, that is expected to be largely flat. Now, ARPU is largely flat on a sequential basis, also because in the fourth quarter we had 2 less number of days as compared to the third quarter, and that's the reason the ARPU number is flat. But overall, it's a subdued quarter for the India mobile business, the enterprise business, and also the DTH business. It's the mobile broadband segment, the only home broadband segment that will see a strong growth on a sequential basis on the back of subscriber addition and ARPU stabilization. Apart from that, Airtel Africa has already reported its numbers, and it was a strong set of numbers, and Bharti Airtel owns close to 62.7% stake in Airtel Africa. So some positive rub-off effect of that could come into the consolidated books. Apart from that, the key things to watch out for from the earnings would be how or the announcement that will be coming in on how they're looking to reorganize their shareholding in the Africa business. Apart from that, what are their plans for tariff hikes? What is the capital expenditure outlay for FY27? Would be the key things to watch out for from Bharti Airtel numbers.
Okay, thank you for that, Somit. We'll take a quick question with Puneet, but before that, MSP for Kharif for 26-27 has been approved at 2.6 lakh crores. The Sarkej Dholera semi-high-speed double line, the number that has come in for approval is 20,665 crores, and upgradation of the Nagpur International Airport has also been approved along with coal gasification. So these are the 3 announcements that are coming in. We will quickly wait for a cabinet briefing on the same. But beneath your view, when it comes to Bharti Airtel, because the stock has not really done too much in the last 1 year, people are awaiting tariff hike as well, but who will bell the cat is the question over here from between a Jio, Vodafone as well as a Bharti Airtel. How are you looking at the telecom space?
So, more than Bharti Airtel and Jio, I think we are looking at Idea Vodafone. My take simply out here is the fact that, the Kumaramangalam Birla is already on board, number one. Number two is that, their AGR dues have been resolved, and they're on anvil to raise money, which is going to kick off their capital capex plans. And this capex essentially warrants that, its fundamentals are going to improve significantly. So I think there could be a big upside emanating out here compared to the other 2 stocks. And hence, I think my dark horse would be Idea Vodafone out here.
Okay, so that's with regards to Vodafone Idea, goes as well as the overall telecom space. And Vodafone Idea has been in focus as well, Sharad, all these days because of a Bloomberg copy saying that there could be fund infusion on the back of the stake sale. Lots happening there. Let's quickly cut in across to INB Minister Ashwini Vaishnav addressing media about the latest cabinet decision.
बड़ा फैसला लिया गया है कोल गैसिफिकेशन का। आज हम सब जानते हैं कि गैस का जितना रिक्वायरमेंट है और दुनिया भर में जिस तरह की जियोपॉलिटिकल सिचुएशन है, उस हिसाब से हम आत्मनिर्भर कैसे बने। भारत में प्रचुर मात्रा में कोयला उपलब्ध है। करीब करीब अगर देखें तो आगे के 200 साल के लिए जितना कोयला चाहिए उतना भारत में ऑलरेडी उपलब्ध है। तो उस कोयले का उपयोग करके क्या हम गैस बना सकते हैं, इस विषय पे एक अच्छा प्रयास चल रहा था। उसका आज फैसला लिया गया है और बहुत ही सामूहिक फैसला है, बहुत ही टाइमली फैसला है। कोल गैसिफिकेशन की स्कीम, कोल गैसिफिकेशन के लिए पहले ये पिक्चर देखना चाहिए हमें। कोल को हम प्रिपेयर करते हैं प्रॉपर, उसको क्रश करने के बाद में उसकी थोड़ी सीविंग होती है, प्रॉपरली उसको प्रिपेयर करते हैं। प्रिपेयर करके इसकी एक फर्नेस होती है कोल गैसिफिकेशन की। इस कोल गैसिफिकेशन की फर्नेस में कोल को डालने से और बहुत हाई टेम्परेचर पे 1000 to 1500 डिग्री और 30 बार हाई प्रेशर और हाई टेम्परेचर पे जब कोल को हम फर्नेस के अंदर डालते हैं तो फिर वो कोयला जलता नहीं है, एक गैसियस स्टेट में कन्वर्ट हो जाता है। उसका केमिकल कॉम्पोजिशन चेंज हो जाता है और बेसिकली कोयला माने कार्बन, हाइड्रोजन, सल्फर, ये सब उसके अंदर एलिमेंट्स डिफरेंट स्ट्रक्चर में होते हैं। तो उसको गैस उसमें सीधी सिंथेसिस गैस बन के निकलती है, जिसको शॉर्ट में सिन गैस बोलते हैं। सिंथेसिस गैस जिसमें कार्बन मोनोऑक्साइड होती है और हाइड्रोजन होता है। CO और H2 का रेशियो जैसा हमारा आगे का रिक्वायरमेंट होगा उसके हिसाब से हम उसको मॉडिफाई कर सकते हैं। तो ये जो सिन गैस है, इस सिन गैस को नेचुरल गैस के कंपेरेबल यूज में लिया जा सकता है। नेचुरल गैस को जैसे हम PNG, LNG ऐसे बोलते हैं ना, वैसे इसमें सिन गैस को SNG भी बोलते हैं, सिंथेसिस नेचुरल गैस, ऐसा मतलब शॉर्ट फॉर्म समझो आप, SNG। और इस गैस से आगे उस गैस को जला के पावर भी प्रोड्यूस कर सकते हैं, उस गैस से LPG का इक्विवेलेंट फॉर्म भी बना सकते हैं, और उस गैस से हम फर्टिलाइजर का मैन्युफैक्चरिंग हो, कई सारे जो पेट्रोकेमिकल्स के माने जो एक रिफाइनरी में बाय प्रोडक्ट्स होते हैं, उसी तरह के बाय प्रोडक्ट्स यहाँ पर भी निकाले जा सकते हैं। कई तरह के बाय प्रोडक्ट्स इसमें से निकलते हैं जिनका उपयोग फिर पेट्रोकेमिकल इंडस्ट्री की तरह इसमें भी उपयोग होता है। तो एक तरीके से कोयले से गैस, गैस से फर्टिलाइजर, कोयले से गैस, गैस से पावर, कोयले से गैस, गैस से कई तरह के केमिकल्स, ये बनाने की ये प्रोसेस है। और ये बहुत बड़ा आज का फैसला है, क्योंकि इस युग में हमें जितना आत्मनिर्भर बने उतना अच्छा है, और उतना ही देश के लिए भविष्य का एक ये बड़ा इंश्योरेंस बनता है। कोल भारत में करीब करीब 400 बिलियन टन के नॉन रिजर्व्स है, 400 बिलियन टन के नॉन रिजर्व्स है। बहुत बड़ा रिजर्व, हमारा साल का करीब 1 बिलियन टन का है, 1 बिलियन टन का कंजम्पशन है, 1 बिलियन टन का कंजम्पशन है। तो अगर हम सीधा ही देखें तो 400 साल का हमारे पास कोयला ऑलरेडी मौजूद है। तो जब इतना कोयला मौजूद है तो इस कोयले का ज़्यादा से ज़्यादा उपयोग करके हम इससे गैस बना सकें, और गैस का उपयोग फिर फर्टिलाइज़र वगैरह में, ताकि फर्टिलाइज़र के लिए जो LNG इंपोर्ट करनी पड़ती है वो कम हो जाएगी, उसकी रिक्वायरमेंट एक तरीके से कम हो जाएगी। इस स्कीम का आज जो बेसिकली कोल में 2 तरह की गैस होती है। एक गैस होती है अंदर मीथेन, मतलब कोयले का जहाँ पे डिपॉजिट्स होते हैं अंदर गहराई में मीथेन के रिजर्वॉयर्स होते हैं, तो वहाँ से मीथेन निकाली जा सकती है ड्रिल करके। और दूसरा तरीका है कोल को गैस में कन्वर्ट करने।
Well, that's an interesting take coming on the coal gasification projects, and of course a lot of companies are there also in this.
A lot of them, because we've just been looking at Coal India, but from a GAIL to a BHEL, L&T,
Adani
RCF,
Enterprises.
Adani Enterprises, all of them. Let's just pull up all of them one by one on the screens if we can very quickly to see, because these do benefit to some extent or the other. You have Adani Enterprises at the nearly at the day, I mean slightly off the day size, but still seeing gains of nearly 4%. Coal India we've spoken about, GAIL, BHEL, a few of the other names also who could be beneficiaries. RCF is another one that you should be watching out for. BHEL also seeing some smart moves. Let's put up our RCF on the screens. That counter also trading in the positive. So these are beneficiaries when you talk about coal gasification. But it's interesting to see how the markets have come off from the day's highs. We've given up those gains. We are now closing towards that 23,400 mark. When we started off,
it was 100 point down.
Exactly. So we are 100 points down from where we started off. India market close. Marginal gains of 0.1% is what you're seeing. Bank Nifty, in fact, has already turned into the negative on a closing basis today. So this is going to be somewhere a little bit concerning. And your mid cap and the small cap index have also given up your opening gains in today's session. So categorically, there was a short covering rally, and now you're seeing some bit of profit booking that's coming in.
And let's just pull out the Nifty indices of the stocks. You know, how are the performance happening in the Nifty? Of course, we had seen a good green, and it's still maintaining. It's not that bad, but if the sell-off that intensified a bit, if you look at the Infosys, M&M, Eicher Motors, and the top gainers, of course, Adani group of stocks are doing well. Asian Paints also, we're seeing almost gains of almost 5% in the trade.
Absolutely. Let's pull up, very quickly your VIX and the advanced decline ratio and see if anything changes on the advanced decline ratio along with the VIX, because that will tell you of the story in terms of what's happening in the markets. Your advanced decline ratio, in fact, there you go. We were talking about stability when we started off the show, and now that gap has narrowed. Your declines have actually widened. We started off with 500 declines from the day it's actually doubled to almost 1,000 declines. So there is that selling pressure which has come in. If you see in terms of India VIX as well, let's look at that one. If you look at India VIX, there you go, 19.3. That has been slightly stable enough. 18 to 19 was the kind of range that we were penciling in today's session. And very quickly in terms of your NSE 500 stocks as well, if that has remained, because I'm sure the gains would have been given up. I mean, SAIL, Dixon, Mishra Dhatu, Ease My Trip, Vodafone, these are the ones which were seeing some smart gains, but the cuts have deepened further. Torrent Power, Sun TV, Jindal, eClerx, Cohance Life are few of the top losers today.
Right.
But categorically, if you see in terms of markets, it seems there is that tug of war that has continued over the last couple of trading sessions in terms of markets right now. I mean, there is no particular direction that you can see. Either you're seeing a sell on rise or a buy on dips kind of a strategy on every single day, which keeps alternating, is what I would say.
And the global cues is also something to watch out for this week. Trump and Xi Jinping's meeting comes up, rupee hit its record low levels. A lot of things are happening.
And the FI selling that continues.
Exactly.
So lots brewing. But that's what we are at the end of India Market Close on NDTV Profit. Lots more lined up. A thank you from Sharad, the team that put the show together, and myself. Please stay tuned. You have Market Express next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
Good evening, you're watching Market Express with me, Shreyanshi Singh, and this is a show that gets you a snapshot of everything that is happening in trade today. Let's also take a very quick look at the markets on that note then. Markets extended their recovery today with benchmarks ending firmly in the green. The Nifty reclaimed the 23,400 mark, while broader markets moved in step with the benchmarks as well, signaling improving sentiment across the board. Meanwhile, let's also talk about markets showing a mixed sectoral picture. So that's what it was looking like at close. So metals and oil and gas stocks, in fact, led the gains, lending support to the benchmarks. In contrast, you did have IT and auto stocks that remained a little bit under pressure, capping broader upside. Let's also talk about gold and silver that is set to turn costlier at this point in time, and that's after India hikes import duties with immediate effect. Basic customs duties doubled to 10%, while cess is raised to 5%, taking the effective import tax to around 15% from 6% earlier. The move raises input costs for jewelers and could dampen near-term demand, with jewelry stocks now firmly in focus. Let's also move on and talk about how India has raised duties on gold and silver imports. The country's trade agreement with the UAE comes under sharp focus as well with this. And gold imports from the UAE surged dramatically after the pact, jumping from under $3 billion before the deal to over $16 billion in just 3 years. Let's also talk about lower tariffs under a quota system that make the UAE a key supplier, even as India looks to rein its growing gold import bill. Let's also talk about Cipla that reported a mixed set of numbers for the March quarter. You're looking at the revenue coming in largely in line with expectations, profitability taking a hit as margins contract sharply as well. Weaknesses in the US business is something that you saw really reflecting through here, higher costs as well as lower other income. Those were a couple of other drags as well. When you talk about the fourth quarter's numbers, that said, strong growth in the India and Africa business also offer a little bit of support at this point in time, even as pressure really persists on the overall margin profile. Meanwhile, Vodafone Idea's board meet on May 16 to consider a possible fundraise, and looks like third time's going to be a charm even as it prepares to announce March quarter results. This is the third time that they're going to be mulling a fundraise, in fact, in recent years, while several options remain on the table at this point in time. The street remains cautious given that you do have Vodafone Idea's weak operating performance that you're looking at, add to that heavy debt burden and the long road to a sustainable turnaround. Let's also talk about Texmaco Rail that has secured a major international order worth about $430 million or about 4,000 crores thereabout from a particular brand, Logistics and Barbary brand as well. And you're talking about this particular order involving the supply of over 2,200 freight wagons along with 30 diesel locomotives as well. Execution is planned between 2027 and 2028 with a proposed 15-year maintenance partnership. The deal strengthens Texmaco's global expansion push and also deepens its footprint in the African rail ecosystem. Moving on then, let's talk about Dixon Tech that surged in trade after posting fourth quarter results. While the revenue saw a little bit of modest growth coming in, profitability was under pressure with margins slipping and net profit falling sharply on a year-on-year basis. The absence of last year's exceptional gains, that's also something that weighed on the earnings here as well. Now, when you talk about management commentary also coming in, they flagged steady demand in non-mobile segments and remain optimistic on some of the growth drivers going forward, including the Vivo partnership and new capacity additions. Moving on then, let's talk about Torrent Power reporting a weak set of numbers for the March quarter. Profits coming under sharp pressure as well, and renewable energy growth, that's something that supported operating performance. Higher interest and depreciation costs also weighed heavily when it comes to the earnings. Lower gains from investments as well as a drag from the generation business is something that you're looking at that really hurt the bottom line, even as margins see a marginal uptick here. Let's also talk about MTAR Tech that reported an inline set of numbers for the March quarter, supported by strong revenue growth across key segments. However, operating performance falls short of street expectations as higher raw material costs push expenses higher. Despite near-term margin pressures, the company remains confident of sustaining growth backed by rising demand from high-growth sectors
and a healthy order outlook. Alright, then move on. Let's also talk about Berger Paints, that's in focus on the back of delivering a strong set of numbers in the March quarter. Now, that's largely driven by healthy volume growth across segments. And you're looking at margins really improving on a better product mix and operating leverage, while profit gets an added boost as well when you talk about the insurance claim booked during the quarter really showing through here. When you talk about the robust momentum, you're seeing that coming across for construction, chemicals and waterproofing, further supporting the overall performance. Moving on, then let's talk about HPCL that delivered a solid operational beat. Look at that 5.5% uptick coming in on this particular counter as well, and earnings improving sharply on a sequential basis. When you talk about the fine print as well here, while standalone revenue was largely flat on a quarter-on-quarter basis, you did have about 1.14 lakh crore EBITDA in terms of that jump, also coming in 28% to somewhere close to 9,000 crore rupees as well. Margins also expanded meaningfully. So that's something that you're looking at here as well. And even when you talk about profit after tax, you're looking at that also rising over 20% on a sequential basis as well. And the improvement largely is coming in from stronger operating performance, and that's even as revenue stayed rather muted, helping the company beat street expectations on the earnings in the March quarter. Let's also talk about TVS Motor, that's posted a strong set of numbers on a year-on-year basis in the fourth quarter, driven by robust revenue growth. Now, when you talk about the revenue, you're looking at a 34% thereabout rise coming in. EBITDA increasing to about 26%. EBITDA margins moderating to 13.1% compared with 13.9% last year, largely due to that high base also reflecting through. And on a normalized basis as well, you're looking at the EBITDA margin that stood at somewhere close to 12.5% in the fourth quarter. So you're looking at 60 basis points for the margin expansion, give or take. And when you talk about net profit, that's also risen about 31%, reflecting that sustained operating momentum that you're seeing. Of course, the stock was trading under pressure despite all of this. Let's also move on and talk about Power Finance Corporation that reported a mixed set of numbers in the fourth quarter. Calculated NII declined 10.5% on a year-on-year basis to somewhere close to 10,800 crores, while the total income that slipped about 1.5% as well. And asset quality, however, has provided support as the company reported impairment reversals of 794 crore in the quarter compared with impairments last year. Now, this aided profitability, with net profit rising 10.8% on a year-on-year basis. PFC, in fact, has also recommended a final dividend of 3.95 rupees per share, offering a steady payout despite pressure when it comes to core income. Let's also move on and talk about Kirloskar Brothers that's reported a mixed set of numbers, and you did have the stock also trading with a downtick of about 5.5%. Revenue rose about 10.4%. On a year-on-year basis, profitability is the one that you saw remaining under pressure yet again, and EBITDA also declined somewhere close to 3.9%. And the margins, they have also compressed, in fact, sharply to 12.9% from 14.8% thereabout a year ago. When you talk about the net profit as well, that's fallen about 18.7% on a year-on-year basis as well, and despite higher one-time gains of 26 crore during the quarter. The company has announced a dividend of 7 rupees per share, even as margin pressure really weighed on overall performance. Let's also move on and talk about Sagility that reported a mixed set of numbers for the March quarter. And the stock, of course, not taking any cues from that, because you do have the margins that had come under pressure as costs rise faster, largely due to that one-time bonus payout, while higher taxes hit the bottom line. So revenue edges up just a little bit, supported by the payer vertical and client additions that remained healthy. And when you talk about near-term pressure, that's something that the company is also ending the year with strong growth despite that, and a sharply improved balance sheet. Moving on then, let's talk about Sharda Cropchem that delivered a strong set of numbers. Look at that 3.5% gain also coming in for this particular counter. And in terms of the factors why this has happened, you're looking at sharp margin expansion in the fourth quarter. When you talk about the net profit as well, a surge of close to 56.5% on a year-on-year basis to somewhere close to 300 crore rupees, and the revenues risen about 12.9% as well. Even when you talk about the operating performance, that stood out. You do have the EBITDA that's jumped about 60.7%, and EBITDA margins as well. You've seen an expansion coming in, a meaningful one at that, with that 23.6% that compares with 16.6% a year ago. When you talk about tax expenses, you're looking at an increase to about 103 crore from 53 crore last year, tracking higher profitability as well. So you do have overall margin-led earnings that you're looking at, and that's something that had the stock also gaining about 3.5%. Let's also talk about Paris Defense that reported a strong set of consolidated results for the March quarter. Failed to impress the street though, but you did look at that robust top-line growth coming in. So the revenue has surged about 58.5% thereabout on a year-on-year basis. EBITDA has risen about 50.6%. Net profit jumped somewhere close to 74.3% as well, reflecting that operating leverage really reflecting through. And the EBITDA margin, that's the one that's moderated just a little bit, 24.9% versus 26.1%. Now, overall, you're looking at strong growth across revenue and profits that define this particular quarter's performance, and that's despite that minor margin compression that you had showing through. Let's also move on and get you some business news. RBI Governor Sanjay Malhotra has warned that domestic fuel prices could rise if global crude oil prices remain elevated for a prolonged period of time. Speaking amid ongoing geopolitical tensions in the Middle East, Malhotra said that the current spike in oil prices poses upside risks when it comes to inflation and could eventually feed into retail fuel costs in India as well. And he's also noting that while oil marketing companies and the government have so far absorbed some of that pressure, really sustained high crude prices may make price hikes unavoidable. Moving on then, let's also get you the word coming in from the Union Cabinet that has approved a massive 37,000 rupee crore incentive scheme for coal gasification aimed at reducing India's dependence when it comes to imported natural gas, as well as boosting cleaner coal-based technologies. The proposed plan is expected to support projects that convert coal into synthetic gas, chemicals, and other industrial feedstock. According to sources, the scheme could include viability gap funding and financial incentives to accelerate private and public sector participation. The move, in fact, aligns with India's broader energy security strategy. Moving on then, let's talk about Bitcoin that is holding steady above the $81,000 mark, as well as strong demand continues to support the cryptocurrency market. In fact, according to market observers, you're looking at resilient buying really reflect through that really helped the leading crypto asset really maintain its levels despite global uncertainties. The broader crypto market is also showing signs of stability, with several major tokens recording modest gains as well. So analysts, in fact, are attributing the current resilience to sustained institutional interest and positive sentiment around potential regulatory clarity. Moving on then, let's talk about PM Modi has reportedly ordered a 50% reduction in the size of his official convoy. And this is as part of a broader austerity and fuel conservation push amid rising global energy prices linked to the Middle East crisis. Sources are saying that the Special Protection Group has been instructed to scale down the number of vehicles while maintaining all mandatory security protocols. The move is now being mirrored by several BJP-ruled states, union ministers, including Amit Shah, that are also said to be adopting similar measures as well. Moving on then, let's talk about Tamil Nadu Chief Minister Vijay as well, who's comfortably won the floor test in the state assembly. Now, he's secured 144 votes, demonstrating strong support for his government. The floor test was conducted amid political developments in the state, and Vijay's victory, in fact, really confirms the majority backing of the ruling alliance in the assembly. The smooth passage of the confidence motion brings stability to the government right now and ends that ongoing speculation about political uncertainty in the state as well. And Uber is set to establish its first data center in India through a partnership with the Adani Group, marking a major step in localizing its digital infrastructure in one of its largest markets. In fact, according to reports, the facility will support Uber's growing needs around data storage, AI workloads, and cloud operations. The project is expected to come up within Adani's expanding data center ecosystem, which has become a major focus area for the conglomerate as well amid rising demand from AI and cloud companies. Moving on then, and onto some somber news. Prateek Yadav, the younger son of Samajwadi Party founder Mulayam Singh Yadav, passed away at the age of 38. The family has confirmed the news of his demise. Prateek was the younger brother of current Uttar Pradesh of Akhilesh Yadav as well, and he had kept a relatively low profile compared to other family members in politics. The cause of death has not been officially disclosed as yet. Moving on then, let's talk about the United States and China that have wrapped up another round of high-level trade talks just ahead of President Donald Trump's visit to Beijing for a summit with Chinese President Xi Jinping as well. Negotiators led by U.S. Treasury Secretary Scott Bessent and Chinese Vice Premier are going to be holding discussions in South Korea aimed at stabilizing trade ties and preparing the ground for the Trump-Xi meeting. And the talks, of course, are coming at a sensitive moment in time with tensions around tariffs, semiconductors, rare earth exports, and Taiwan and the Iran conflict all expected to feature prominently when it comes to these discussions. Moving on then, let's talk about Iran's Foreign Minister Abbas Araghchi, who's sharply criticized the United States, accusing Washington of bad faith diplomacy and blocking a definitive end to the conflict. Speaking at a high-level meeting in Tehran with Norway's Deputy Foreign Minister, Araghchi said that the US approach remains arrogant, provocative, and untrustworthy. He blamed American military actions for worsening tensions, particularly around the Strait of Hormuz, and said that the lack of trust has stalled peace efforts. The remarks underscore deepening diplomatic strains even as the conflict drags on. Moving on then, US President Trump has bluntly played down the economic impact of the Iran conflict on American citizens, saying that financial concerns do not factor into his decision-making. Speaking before leaving for China as well, Trump has said that his sole focus is preventing Iran from acquiring nuclear weapons. He has insisted that national security outweighs inflation, energy costs, or market swings as well, noting that the stock market remains at record highs. And the remarks are coming amid political debate in Washington as lawmakers question the rising economic and fiscal costs of a prolonged conflict. US immigration authorities have flagged widespread misuse of the optional practical training program, identifying around 10,000 foreign students, including Indians, linked to highly suspect employers. ICE says that the opt route, which allows students to work and transition to H-1B visas, has increasingly become a magnet for fraud as well, and officials are warning that investigations have uncovered cases ranging from visa and employment fraud to intellectual property theft as well, and national security risks. That's also something that you're looking at, that's raising fresh scrutiny, in fact, around student visa pathways. And on to some sports news then. Indian shuttlers PV Sindhu and Kidambi Srikanth have advanced to the second round of the Thailand Open with convincing opening round wins. Two-time Olympic medalist Sindhu defeated Thailand's player as well in straight games, showing strong control and improved movement on the court. Meanwhile, former world number one Srikanth continued his solid run of form with a comfortable victory over Malaysia's player. The wins come as Indian badminton looks for momentum ahead of a packed international calendar this year. And as we wrap up Market Express, a late-night rescue operation in Chhattisgarh has disrupted a trafficking network targeting one of India's most vulnerable tribal groups. While the rescue of 13 Baiga children is a significant victory, the other story lies in the coordination behind it. By linking police enforcement with NGO intelligence, the state has demonstrated a working model for the child protection ecosystem. Let's take a look.
In the Kabir Dham district of Chhattisgarh, a coordinated effort has led to the rescue of 13 children from the Baiga tribal community. These children, aged 8 to 15, had been missing from their homes for nearly 8 months, trapped in a cycle of bonded labor and exploitation. The operation began after Association of Voluntary Action, or AVA, an NGO partner of Just Rights for Children, alerted police about information they had received regarding children allegedly being forced to work like bonded laborers. Acting on the information, police teams led by Superintendent of Police Dharmendra Singh launched late-night raids in Chhattisgarh's Kavardha, about 110 kilometers from the capital Raipur. During the first raid, 4 frightened children were rescued, and what they told officials led to an even bigger breakthrough.
उनसे जब बातचीत की गई प्यारपूर्वक तो उन्होंने बताया कि साहब आपने हमें तो बचा लिया, लेकिन मेरे गांव के और भी बहुत सारे बच्चे यहाँ पर बदवा मजदूरी कर रहे हैं। उनकी निशानदेही में बाकी जगह जब छापामारी कार्रवाई की गई तो टोटल 13 बच्चे हम लोगों ने बरामद की पुलिस के साथ।
During counseling, officials discovered that all 13 children belong to the Baiga tribe. one of India's particularly vulnerable tribal groups. The children told counsellors they were made to work from morning till night and were paid just ₹1,000 to ₹2,000 per month. Police arrested 10 traffickers and have now registered cases under trafficking, bonded labour, child protection and child labour laws.
अगर इस प्रकार की और भी किसी की कोई गतिविधि में पाया जाता है उसके विरुद्ध भी सख्त कार्रवाई करेंगे और किसी भी प्रकार की कोई किसी को सूचना मिलती है तो मुझे या हमारी पुलिस को या जरूर बताएं या इस संस्था को बताएं जिससे कि हम उन बच्चों तक पहुंच सकें और उनका सहयोग कर सकें.
But for child rights groups, rescue is only the first step. Rehabilitation, education and reintegration are just as critical.
जिन 13 बच्चों को बाल कल्याण समिति के समक्ष जीआरसी आवा और चाइल्डलाइन की संयुक्त टीम ने प्रस्तुत किया, उन सारे बच्चों को शिक्षा से जोड़ने के लिए शिक्षा विभाग, डीएम और श्रम विभाग को संबंधित विभागों को निर्देशित किया गया है ताकि बच्चों का समुचित विकास हो सके. बच्चों के रेस्क्यू और पुनर्वास की प्रक्रिया में जीआरसी, पार्टनर और आवा की महत्वपूर्ण भूमिका रही.
Across India, organizations within the Just Rights for Children network say trafficking, child labor and child marriages are often deeply interconnected, trapping vulnerable children in cycles of exploitation. And that is why this case serves as a blueprint of what can be achieved when a vigilant community, an informed civil society and a responsive police force work as a single unit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे. केसरिया से मन जोगी हुआ.
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi. Weeknights, on NDTV Profit.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel.
Big decision by centre. Government hikes the import duties on gold and silver from 6% to 15% after PM Modi's appeal to avoid gold purchases for a year amid current geopolitical tensions. Jewellery makers trade under pressure after government hikes the import duties on gold and silver. Stocks of Kalyan Jewellers, Senco Gold Titan fell up to 5% today. Rupee hits a new record low of 95 rupees 81 paise against the dollar after a volatile day of trade. The Indian currency ends the day at 95 rupees 71 paise versus dollar. Benchmark indices snap a 4-day losing streak, managing to end just above the flat line. Nifty fails to hold 23,500 level, even as majority sectors advanced, with Nifty Metal eyeing a fresh record high. Oil prices remain high as hope fades for US-Iran peace deal. Brent crude hovers over $107 a barrel. Trump repeats war threats against Iran again. Cabinet approves coal gasification incentive scheme for 37,500 crore rupees amid the geopolitical tensions. Boosts PSU diversification into chemicals, menthol and fertilizer feedstock. Air India trims select international routes between June-August amid airspace curbs and soaring jet fuel, yet sustains scale with over 1,200 flights monthly across key markets. Prime Minister Narendra Modi orders 50% cut in his convoy size, calls for more EVs in austerity and fuel-saving push. BJP leaders follow suit, including Home Minister Amit Shah. Niti Aayog also pulls the plug on offline events. Vijay's TVK government comfortably wins the floor test in Tamil Nadu Assembly. Vijay gets support from 144 MLAs. DMK abstained, staged walkout from Assembly. US President Donald Trump heads to Beijing for high-stakes talks with President Xi Jinping, his first visit since 2017. Trump says there are a lot of things to discuss, adding Iran is very much under control, even as trade talks narrow to limited economic deals. Hello and welcome. You've tuned into Profit 360. I'm Nisha Poddar. Let's take you through all the top headlines.